Good morning, ladies and gentlemen, and welcome back again. It's the day 2 of the Global Fintech Fest 2022. My name is Kavya R. Chavali, and I welcome all of you once again for another round of pertinent sessions and a lot of knowledge sharing happening from this side of the hall. Well, that being said, I wanted to quickly check with all of you. Did you all have a good time with all the sessions that took place yesterday? Did we all enjoy the sessions? Yes? Wonderful indeed. Did we also enjoy the sundowner that took place in the evening? Yes, we did. All right, so on that note, let's take that trend forward and let's move ahead because right here this morning, we will begin with the keynote session, and we are truly, truly delighted to have the presence of none other than Srimati Madhavi Puri Buch, Chairperson, Securities and Exchange Board of India. So first up, can we have a huge round of applause to welcome Srimati Madhavi Puri Buch for joining us right here at the Global Fintech Fest 2022. Thank you so much, ma'am, for joining us. And as we get the keynote started, I'd also like to invite Shri Srinivas Jain, Executive Director and Head of Strategy, SBI Mutual Fund. Thank you very much, sir. Thank you, ma'am, for joining us this morning. We're about to begin with a keynote on Indian capital markets, strengthening the vision, global, inclusive, and green. So first up, as we set the tone, I'm going to request Mr. Jain to take it forward from here. Over to you, sir.
Very good morning to all of you. Yeah, after a very power-packed day yesterday we had with central ministers, union ministers, policymakers, fintech leaders, and multiple launches, we are kicking off today with another most anticipated keynote of the event. It's my honor and privilege to welcome Ms. Madhavi Puri Buch, Chairperson SEBI, for her keynote address on Indian capital markets. Madam Madhavi Puri Buch has an illustrious career of spanning capital markets, education, and of course governance. She's been with SEBI now for over 5 years, earlier as a whole-time director and now as a SEBI chairperson. You all must have seen in a recent interaction with Vicky, which happened a week ago. She's kind of laid out the roadmap for the Indian capital market, a lot of which we would like to also hear from her today. It was one of the most talked about talk of her in recent times. She's been very encouraging always for us in terms of the consultation process, and when we reached out to her, she was gracious enough to come and talk to youngsters here, the fintech, the whole fintech industry. More importantly, her focus on data and how data kind of helps in decision making. She's already doing quite a lot that in SEBI. We've recently had a datathon sponsored by SEBI, which we'll talk about a little bit more post her keynote speech. And we have some winners of the datathon, which we will announce. Without much ado, we are all keenly looking forward for your talk, ma'am. Welcome you on the stage. Thank you very much.
Thank you very much. I presume this is on? All right, excellent. Thank you very much for this opportunity to be here. It's a pleasure to be here. At the outset, let me confess my bias to all of you here. I love the fintech world. There was a time 20 years ago, we didn't know it was called fintech then, but when we set out to set up the country's first and largest online share trading platform, it was perhaps the most exhilarating experience of my life professionally, and the whole feeling of creating something new, something completely radical, and something that completely changed the paradigm of how investors interacted with the stock market was an extremely rewarding experience. And I think to some extent, this picture to me says it all. The reason it was so much fun, the reason it was so exciting, was that it facilitated the democratization of access to the market. I still remember 20 years ago, after the launch of ICICI Direct, I was in Hyderabad and I wanted to meet some of our clients. And of course, my team wanted to introduce me to the large clients, and I said, no, I want to meet a small client. And when I met this gentleman, he spoke only broken English, but what he said to me was, thanks to online trading, I am no longer dependent on my broker to pick up my phone call, and particularly on a volatile day when he has large investors to satisfy, he never picks up my call. But the online system is there, and it's always available to me on any day at any point in time. I think that was the first day that I truly understood the power of technology and the power of fintech and its ability to facilitate financial inclusion. So to me, the entire industry is really exciting, and not only exciting but exhilarating for this reason and this reason alone, that it's going to completely transform the landscape of financial services with the entire ability to bring the cost of delivery so low that, in effect, businesses can afford financial inclusion. It is not something that has to be mandated to them. It just happens because it makes the business so much more viable. So this is why I love the fintech world. Where do I need to point to get this done? There? Yeah. And of course, my faith in the entire startup ecosystem. I think there is no discussion now, no debate, that India is really rocking. And that's thanks to the entire startup ecosystem, whether it is the entrepreneurs or whether it is the funding mechanism or whether it is the entire infrastructure now which facilitates this kind of innovation. In this drive for innovation, which is at the core of the fintech world, I want to share some basic thoughts with you. Most entrepreneurs, when they go for funding, they are asked the question, what problem are you trying to solve? What is the need that you are trying to fulfill? And indeed, that is the starting point. Sometimes this need is an articulated need of the consumer or the investor. Sometimes it's a latent need. The consumer doesn't even know he needs it. But when it is presented to him, he suddenly realizes how powerful it is, and then you have adoption that follows and the wonderful hockey stick effect that we've seen in many of the businesses. So at the core, there is the question of fulfilling the need, the unmet need of the consumer. However, with my regulator hat on, here's what I would like to say. In meeting that need, by construct, since it is new, since it is innovative, the chances are that there will be a regulatory gap in terms of governing or regulating that product or that service or whatever it is that is meeting that need of the consumer. It's almost by construct. If it is new, it has probably not even entered the heads of the regulator, let alone be captured in the regulation. And the reason for that is that in our country, our regulation is a hybrid regulation of principle-based and rule-based. If the regulation was merely principle-based, then every conceivable situation would get covered under it, and in many ways, there would be no regulatory gap. But since we have a hybrid system in our country, with a fair amount of emphasis in our judicial system on the rules part of the regulation, it is natural and expected that there is likely to be a regulatory gap when there is something new and innovative that happens in the market. Now, it's up to the regulator to keep pace with that. In the past, we've been a little late to the party. It is our intention now to narrow that gap as much as possible. But that gap, as I said, structurally will continue to exist. And therefore, the question arises that what does the ecosystem, the startup ecosystem, do about it? How do you think about it? And there, I think that both the entrepreneurs as well as the people who are funding these entrepreneurs could be well advised to think about the principles that guide a regulator. So while there is no extant regulation on a particular subject, if you think about what are the key principles that a regulator will follow when they finally show up and regulate it, you are already ahead of the curve. You're anticipating what the regulator will say and do. And if you're already baking that into your business model, then it's a check, check, check. And you will not have business model disruption when the regulator finally shows up. So to share some of these principles the way that SEBI looks at it, I'll begin with the question of anonymity. A lot has been said about the crypto world, and going forward, the technology will facilitate, the central bank's digital currency will facilitate a certain ecosystem for tokens, for cryptos. It will happen in due course. The question is, as you are thinking about it, you need to understand that while on social media, it's quite all right. I can go on social media and call myself, I don't know, Sunflower 500. It's okay. But in the fintech world, when it comes to financial services, anonymity is not something that the regulator is ever going to permit. So if you start your business model on an assumption of anonymity, and if that is a key selling proposition in your business model for your consumer, it's not going to last. When the regulator shows up, and probably now sooner than later, it will not be okay, and then you'll have a problem of saying, oh my God, this was the regulatory risk. But you know that to begin with. So anonymity in the financial world is an absolute no-no, and that's the first guiding principle in your checklist, whether you're an entrepreneur or a private equity funding entity. The second is around transparency. So this is really about the whole concept of saying that a regulator's principal job is to ensure in the markets that investors make informed decisions. Nobody argues with that. The question is, for an investor to make an informed decision, he must have information. Without information, how will he make an informed decision? And therefore, the issue of transparency is key. If the regulator senses that there is inadequate disclosure, then the question is the investor being misled? This is a little bit more aggressive form of the same issue. Is the investor being conned? So again, if your business model is woven around a black box, okay, and a lot has been said about, in the markets now, I know there are many people working on algos. A lot has been said about, is SEBI in favor of these algos, against these algos? SEBI is not in favor of or against anything, provided there is transparency, disclosure, and nothing which is misleading. So if somebody is claiming that their algorithm is delivering 350% return, first of all, I'd really love to meet these guys, because I'm wondering, why are you telling the whole world about it, right? Even Warren Buffett doesn't deliver these kind of returns. You should just be making all of this money on your own. But if you are claiming, here's what SEBI does about it. SEBI engages with these people and says, okay, and this is not a futuristic thing. This is actually what has happened over the last many months. SEBI says, okay, you are claiming 350% return. Okay, very good. How do you arrive at this number? Someone says, we do simulation. Okay, very good, sounds good. So let's recreate the simulation. What is your input data? Must be market data. Okay, our exchanges are here, they have all the market data, here's the data. Now let's run your algo and simulate it for the last 1 year. You got it? Answer was no. I'm saying no, but you just said that's what you do. That's just what you said. That's how you arrived at 350%. So let's simulate it again. You simulated it yesterday. Let's simulate it here with SEBI and the exchanges watching the simulation. No. So what does the regulator want? Regulator says, let there be an independent assessment of the claims that you are making to the investor so that nobody can blame you. In fact, it is for the protection of both the investor and the offerer of the service. Nobody can blame you that you are conning the investor, because here is somebody, the exchange is right here, they have all the data. They are now going to validate your simulations and say, yes, this is really a fantastic algo, it really delivers 350%. Okay. Then of course, we are quietly told, no, it's 350% under certain market conditions. Now, are you being conned, right? So if your business model is going to rely on a black box which is not open to sunlight for disinfecting, if it is not capable of being validated and audited, and your claims cannot be audited and validated, it cannot be permitted. But if it can be audited, can be validated, nobody is happier than us to facilitate new and innovative offerings in the market. So this is the second checkbox. One was anonymous, the other is validation of your claims. If you're unable to validate, your business model is under threat, because when the regulator shows up, this will not be acceptable. The third is back to my favorite slide. When it comes to financial inclusion, most regulators in our country have very, very supportive regulation. Okay? So for instance, let's say SEBI itself, in the mutual fund industry, up to 50,000 rupees, cash transaction is permitted. Up to a certain limit, PAN number is not required. You just need something called a PECRIN number. So when it comes to financial inclusion, the whole objective of the regulator is aligned with you. So if you are operating at the bottom of the pyramid, truly operating at the bottom of the pyramid, it's not just a nice tag to have, and you can demonstrate that these are the kinds of limits that you have in terms of your offerings, the regulator is more than delighted to be supportive and to make it easier, simply because that is an important part of our agenda always. So this is the third checklist. If your business model facilitates financial inclusion, then to that extent that you have those citizens within your fold, the regulator is bound to be very supportive. It will be a sustainable business model. This is one of the key requirements of every regulator. I refer to it as the Abhimanyu complex. If you have a business model which relies on the assumption that once the customer is in, it's very hard for him to get out, we don't like it. So building barriers to exit, again, if your business model relies on that, it is unlikely to find favor with the regulator. It's a very important principle that we follow. And therefore, as I said, when the regulator shows up, you will be vulnerable to regulatory risk, because the regulator will say a person who has ease of entering has a right for ease of exit. If you make it hard for him to leave, we will not permit you to make it easy for him to come in. We do not want Abhimanyus in our market. So this is an important checklist. Check in your list. Please ensure that your business model does not rely upon कि वो एक बार आ गया बकरा तो उसको हम पकड़ के रखेंगे, बाहर नहीं जाने दें. This is again a very, very crucial piece, and I think most of you here are very familiar with the concept, but let me articulate it as a principle. In our country, very different from almost every country in the world, we not only have a stated objective, but we have an implemented evidence that the infrastructure for innovation will be a public good. Whether it is Aadhaar, whether it is UPI, whether it is account aggregator, whether it is the health stack, whether it is anything. The rails will be a public good. Private innovation needs to build on top of those rails. If somebody again has a business model where their presumption is that they are going to own the infrastructure, you're setting yourself up for a rude shock subsequently. It's good, it's ambitious to say we want to be the infrastructure, but as you have seen in our country, that's not the path that India takes. The Reserve Bank of India has demonstrated it so beautifully through these various mechanisms. SEBI, on its part, given the way that we look at the market infrastructure institutions, given the way we look at data. So why in this conference was our emphasis on data, and we requested the organizers to organize this data-thon? Because for markets, the markets thrive on data. And we have ensured by actually issuing a circular that every piece of data which is there in the markets on account of something that the regulator has said must be disclosed has to be available free of cost and in a machine readable format and in an easily downloadable format and cannot be charged for. So as an example, we had a very lively conversation with some of our exchanges where the discussion was, well, if the investor wants the data, we are happy to give it free, but if a service provider, let's say an investment advisor or one of the new Fintechs want that same data, we will charge for it. I'm like, okay, be my guest. So from tomorrow, SEBI will issue a circular saying that all data, instead of being uploaded on the exchanges, will be uploaded on SEBI website and we will offer it free. अब आपको जो करना है आपकी मर्जी. So what is it we are saying? For us, data is a public good. It is public infrastructure. No private person can claim ownership over this infrastructure. We ensure that it is made publicly available in any form or manner. You want a feed, you want this, you want API Connect, everything is free. Nobody can charge you for it. If they do, please let me know. Please send a mail at chairperson@sebi.gov.in. So this is the path that the regulators in India are taking. So again, on your checklist, if you are attempting to claim that you will own the infrastructure, it's very unlikely. By the time we show up, we will not permit it. This is a somewhat difficult principle to articulate. I call it structural vulnerability. So, as you know, all the regulators, financial regulators in the country, we meet often on issues of financial stability. And we discuss not specific cases, but we discuss structural vulnerabilities, concentration risk, technology risk, governance risk. And these issues are really manifested. Let me give you an example to illustrate. So say, for instance, in recent times, SEBI has come up with a whole host of regulations to facilitate direct movement of funds and securities between the investor and where it needs to go, whether the exchange or whether, in the case of an IPO, to the issuer. What is the objective here? The objective is, if the money or the securities pass through many hands, there is a structural vulnerability at each stage. And because we don't want to curtail and put huge requirements of net worth and so on, let's say, on the broking system, we say, no, we only want very large brokers, so, minimum net worth of 1,000 crores. Okay, then there'll only be a handful of brokers, but that's not what we believe in. We believe in competition. So the attempt is, you eliminate the possibility of wrongdoing through technology and through process re-engineering. And we have done that systematically, those of you who are aware, for instance, in terms of posting collateral with the clearing corporation. It's now done through a pledge-repledge system of shares, instead of the shares actually moving and passing through different hands. So it stays in your account, pledge is created, then a repledge in favor of the clearing corporation is created. The shares never move. Similarly, you know that we have ASBA for the IPOs. So in that, the money never moves from your account. If you get an allotment in the IPO, that much money is taken. If you don't get an allotment, nothing is taken. We are now actively engaged in looking at ASBA like the secondary market. So if it can be done for the primary market, why can it not be done for the secondary market? So again, if you are buying shares and you have to settle, the money should never leave your account. When it needs to be settled on T+1, because as you know, we're rapidly moving towards T+1, the money will be appropriately taken. So the attempt is to reduce structural vulnerability. Again, therefore, if your business model is such that it will increase concentration risk or structural vulnerability, chances are, sooner or later, the regulator will move to eliminate it. So this, in summary, are the set of principles that should guide every entrepreneur in the fintech space and everybody who is funding, because when the regulator comes up for regulation, to bridge that regulatory gap that you are seeing today, these are the kind of principles that they will follow. Having said that, given the pace, that one's not mine, it doesn't matter. It's good to think anyway. So the issue really is that today, as we stand here in India, we are well aware that we are setting the pace globally. And that is what makes us really proud. And I can assure you that as a regulator, when we meet people from overseas, the pride we take in sharing what the market participants are doing and what is the level of innovation that is happening in the country, it is something that's indeed a matter of great, great pride for us. So with that, I conclude and happy to hand over in respect of the data talk. Thank you.
Right, thank you very much, ma'am. I think this was something phenomenal, and we don't hear regulators articulate this in, I mean, because you lost the last slide, I'm just repeating for the sake of everybody. I think you gave us a checklist for all fintechs and startups to look for, especially keeping what products to build. And here is what you said. Don't build on anonymity. Build on data, which is credible, second. Build regulator supportive and inclusion. That's a part that you talked about. Avoid building barriers to exit. Fantastic stuff, because all fintechs thinks about lock-in, and this lock-in part needs to be kind of not encouraged. this is something interesting that you talked about, and the account aggregator framework is something which is breaking this, which is don't build on public good rails, and don't build on something which will lock in the data, which will build infrastructure which is exclusive to you. And finally, I think this is something regulators always do, which is reduce structural vulnerability, or else eventually regulator will come down heavily on models like that. Very powerful, very key messages, and thank you very much for doing this, ma'am. Like I said, we had, under the aegis of SEBI, we encouraged startups all over the country to come and do a datathon with us. I wanted to give you a 2 minutes presentation on what this datathon was all about, and then we will invite the winners of the datathon to talk about their models. If you can just cue the presentation, please. Can you play the presentation? Okay. Next slide. So we worked on two concepts in the datathon. One was visualization of performance. Second was a forecasting of trend. And we can go quickly around this. Next one, please. We were really, really surprised. Even though the datathon was just 2 weeks ago when we started, we had 903 registrations across the country. 590 teams actually, registered and joined this, and total 112 submissions. There were teams which were group of 3, 4, 5, so 112 plus submissions, which was one of the biggest that we have done in a very, very short period of time. So that talks a lot about the kind of innovation, that kind of work that the startups would like to do. Next slide, please. Yeah, you can just go back to the previous one. So like I said, just the previous one, please. This was a very, very short one. We started on September 2nd. By the time we were out, it was last week, right? So we were very, very fast. We were able to do that. Next slide. And we had some very eminent jury. Nitin was part of the team. Mr. Ranjit Pawar from Refinitiv. Thank you. Avnish Pandey from SEBI and Mr. Prabhas were part of the team. And so we went through the top 10 teams. And this was just a glimpse of how everything happened online. And we saw the presentations online. So we looked at 4 parameters. One is the novelty of an idea, very critical because it's innovation. 2, technical feasibility. Scalability of the model, very important. You can come theoretically say anything. And of course, business feasibility. Was it really worth monetizing? These were the top 10 winners out of the 100 plus, we kind of screened. And today we have 3 top winners here presenting their, data models and visualization. I'd like to invite the 3 winners if you want to announce. Thank you. Yes, please.
Yeah. Thank you very much, Mr. Jain. Well, that being said, as we were focusing on the Datathon presentations right now, let me quickly invite, first up, Team Golden Hen to please come on stage to share their presentation with us. And while we're talking about these young startups, while we're talking about these young ideas, can we have a youthful round of applause as they all participated in this very, very pertinent competition? And here they are, Team Golden Hen, first up.
A very good morning, everyone. I am Mohini Sharma from Team Golden Hen. Okay, so at some point, we all were new in the stock market, unaware of fundamental analysis and technical analysis. But with time, we have acquired knowledge by using a forecast trend. But this is not the case with the IPO. We don't have evaluation metrics for such IPOs. So here is the solution. So I came up with a dashboard where you enter the fundamental entities from the company's IPO fundamental report. So on entering these entities, you will get a scorecard from 0 to 100. The higher the score, the better the stock is. Okay. So this is the data set I have taken into consideration. And the first row we see there is a company market cap, sales growth. This you can find in the fundamental report of any IPOs. Okay. So I'll just directly go to the dashboard. Please play the video. Could you please play the video? Okay. So this is how the data set dashboard looks like. So if a person is new in market, he can directly look from the keys. Like if he is not aware of some fundamental keys, he can just directly look from this. And on the left side, so on the left side, you see that there are entities we can just enter on the left side. And on entering, I'm taking this from the data set. On pressing the submit button, okay, so you get the scorecard. So could you just please close that tab? Okay. So right now I'm in the backend, I'm changing the value of the market capitalization. So you see that the scorecard has been, now will be get changed. So now you see the scorecard has been changed. Now I'll change another value, which is the ROCE. I'll just changing from the 14 to 13, and then the scorecard value has increased. So this is all the like idea which I have taken into consideration, like how the IPOs and the fundamental reports can be very helpful to judge whether the IPO stock is good or not. Okay, moving to the next slide. Can we move to the next slide, please? Okay, this is all I would like to conclude. Thanks a lot.
Thank you very much. I was just inquiring why is it named as Golden Hen? Jaise kehte hain ki sone ki murgi. That was the entire storyboard around it. But kudos indeed on that very interesting problem statement and the solution that you shared. That being said, let's quickly invite the next team. We have Team E-Lint. So if I may please invite Team E-Lint. And can we have a round of applause once again? Let's hear out another interesting idea coming your way.
My name is Sumit Jha. I come from a very beautiful place in eastern Bihar called Mithila. I am representing here my company, Elin Data. It's electronic intelligence, and we know data. So, okay, quickly. So, our problem is simple. It's data. We exist because there exists data. Imagine a balance sheet. In one side, you have assets. So that data balance sheet, and when I'm talking about asset is my friend like Monish. He's creating asset literally out of data. But we are from liability side. What I mean by that, especially fintech world, is full of scam, it's full of those companies who could not see the light, and as ma'am was already explaining. So what we are bringing is very simple, three things. It's a C, C, and T. We want to take help of community. What they can help? They can make those black box solution which claims that you will get 7x, 10x, God knows how much. We are bringing something called explainable AI. It's a big debate these days. So backbone of our solution is this daunting looking image. I might bore you explaining this, but I will tell you what we have done. Using the same data platform, we have encouraged companies like With. We are in talk to companies like Credit Nirvana. We are helping them creating a mini Miranda rights enabled collection framework. Not only that, not to deal with PI's data, PHI data. It's a big problem with fintech companies. They should not, they can't simply play with your Aadhaar, PAN, or health information of, let's say, Amitabh Bachchan. So removing, masking, encrypting those PI's data is one of those challenges. What we are bringing in terms of transparency and compliances, we can enable the same platform which we are proposing, and we have made a small video for that, proposing that as long as you can ingest the data in this platform, you can build those competing solutions, as ma'am was saying, to cross-check it. You can mask those PI and PHIs. Not only that, it can plug and play all those solutions which my friends are proposing and see yourself, you are an investor, if you're a regulator, or any stakeholder in the ecosystem. So that's all about our offerings. And quickly, the video we have made, it will hardly take 1 minute. So what was happening there? We were in real time ingesting it. Here, what we are doing, we are comparing one result from some very popular technical analysis, and another we are integrating APIs from Facebook Profit and plain vanilla so-called RN model. And there we are trying to explain why, even if some model is saying that something will go down, but the competing AI solution in the model might say differently. So that's what is happening there, and which we are calling XAI, the explainable AI. And coming back to the main meat where our data platform can help is this rage trail. Here, we are just trying to figure out something very popular called earnings management. So this platform is enabled for any sort of data, be it PDF, be it voice, be it video, whatever you imagine, any kind of source. Here, we are trying to figure out if, let's say, Infi is a benchmark in the beginning they have done. They changed their accounting system and they said, we are profitable. So if that is the benchmark, what about these new incumbents? How far they are if we compare their filings, whatever they are claiming. So it's just a glimpse what this platform can do. Only sky is the limit. Because all the rules, all the activity like earnings management is just a plug and play. That's all. We are Ellen Data, we know all about data, so you know whom to contact if you have such data. Thank you. Thank you, everyone.
Thank you so much. And with that, let's also invite the next team. We have Big and Short on the stage. Can we have a big round of applause, ladies and gentlemen, for another very, very innovative idea? So let's invite Big and Short.
Good morning, everyone. Just waiting for the slides to queue, which they have. Thank you. Good morning. My name is Rishabh Jain. This is my partner, Himanshu Goyal. We like to call ourselves Team Big and Short. The problem we have presented today is one on derivative pricing through underlying asset predictions. Next slide, please. If you have a controller for that, beautiful. Wonderful. So I think Madam Chairperson very eloquently put this out earlier. The existing models, the existing AI models at least, happen to be black boxes. They are quite complex, and they kind of thrive on overfitting, which is essentially a problem for anybody trying to use these models to understand why they came up with certain predictions and try to sort of back calculate what the underlying math was. What we propose is could you just move? Yep. Wonderful. So what we propose is a more mathematical solution, which is to actually allow the user to tell us what factors they deem important for a particular market. And what we will do is give you a tool which will inculcate those factors, build a stochastic model, and calibrate that on information that you deem important, and give you possibilities of what future paths will look like. An important factor here is to sort of understand what we deem important for a solution. So these are the three factors that we believe are the most important for any model which claims to do any sort of prediction. Any sort of solution needs to be scalable, it needs to be transparent, and above everything else, it needs to be tractable. You need to have the ability to be able to explain how you were able to get certain predictions and why does your model do whatever it does. We do have a small presentation at the end, a small video just to show what the prototype looks like. So maybe we can just move to that, and if we can play. So these are what the inputs look like. You can, in a sense, select an asset and select what factors you as a user deem to be important for that market. All information we have used here was sourced from SEBI's website. That essentially led us to NSE's data mine, and we were able to extract a bunch of information. I believe the example here is for Nifty 50 futures, Nifty 50 as a stock. Yeah, you essentially select some parameters, a calibration period, and we will be able to simulate paths for what our stochastic model believes are possibilities in the future. Now, we don't claim any of these to be accurate in terms of alpha hunting. The idea here is to just create something mathematically sound and allow that to be available to the end user for any analysis they want. The example there, I believe, is for you to look at a confidence interval at any future date with a given confidence rating. Again, all of this is extremely scalable. You can select what you believe are important factors for a given market. You can play around with those factors. You can change calibration periods. The idea here is to just give you something very transparent and just give you a tool for you to be able to quantify your understanding of a given market. Yeah, that's our pitch. Thank you.
Alrighty, thank you so much. And with that, ladies and gentlemen, we'll also announce the winners of the Datathon, and let's also distribute the prizes. So if I may request you to please do the honors. Ma'am and sir, I'm going to request you to please step forward. On that note, let's also announce the winners and the runners-up as well. So first up, let's hear it for the second runners-up. Golden Hen it is, ladies and gentlemen. So we'd like to once again invite Team Golden Hen to please come on the stage. We can also have some fanfare and some music as well. Let's do that. Yes, lovely indeed. Congratulations. Well, that's a giant check out there. For the second runners-up, Team Golden Hen, ladies and gentlemen. We'll ensure that the real check comes. While this is something that looks really good, so we're going to quickly invite the first runners-up, Team Elint. So let's invite Elint on stage as well, the first runners-up for the Datathon. Congratulations. And with that, let's announce the winner. Big and short it is. So let's heighten up that applause, because the heights was also the reason for that name, Big and Short, ladies and gentlemen. The winning team is walking away with a check of 1 lakh rupees. Congratulations to the team, Big and Short.
Thank you very much, ma'am. Indeed, it's a pleasure. It was a wonderful session. Thank you for encouraging this, spending time with us. And I wanted to check if you have time for a couple of questions or... Right, thank you very much, ma'am. If any questions, we'd like to direct ma'am for at least one or two. Anybody? We have mics around there. I would request if you can keep this relevant to fintech. No, I think there's a mic behind you, just behind you.
Hello, ma'am. Good morning. It's a lovely presentation as always. I just want to understand in this place where we are, right? There's so much about blockchain, about crypto, I mean, everything associated. But still, from the regulators, we've not heard much as far as this conference itself is concerned. From the government, between the RBI, there is no certainty on which side has it gone to. I want to understand from you, from SEBI's perspective, how do you look at the scenario? Have we reached where some decision can be taken in terms of regulating it? We've heard about taxing it, but not regulating it. How do you see it from your perspective where you sit?
So the complexity of the issue is simple, right? Because given the nature of technology, this technology can manifest itself in any form, right? What do I mean by that? It's like water. Water will take the shape of the vessel in which it resides, right? So if we talk about tokens, tokens can take any shape or form. If the underlying is a security, it will acquire the nature of a security. If the underlying is real estate, it will acquire the nature of real estate. If the underlying is in the nature of insurance, the token will acquire. So the complexity arises because it does not have a singular character, right? So the question that will arise in due course, and in any case, the Reserve Bank of India has announced that the central bank digital currency will come along the way. So that progress in terms of the technology and everything has already been announced. Once that comes into place, because that is the equivalent of the public good infrastructure. So back to the concept that the rails on which anything can be built will be public infrastructure, and that the Reserve Bank of India has announced. Once that rail is there, what is it that private entities can build on top of that rail is really going to determine how it will be regulated, and it will depend on what is the nature of what is being built, because as I said, it can acquire any form. So I think we'll need to wait and see. But conceptually, you have the rails and you will have the locomotives on top of it, and depending on what the locomotive's underlying is, it will be suitably regulated. So it is complex, but conceptually quite simple.
Good morning, ma'am. My name is Amol Data. I'm heading etbfsi.com. Meaningful perspective here. Since you mentioned about the data, the public data and the private companies should not charge for it. The data protection bill is still not pending. We haven't heard from the policyholders much about it. What is regulators' view? Because what I see specifically fintechs and startups have been using, I don't want to say misusing the data, far more aggressively, and data is everywhere. So what is the regulator's view specifically on controlling the data and the data privacy? Maybe for SEBI, it's investors, for RBI, it's bank customers, and for IRD, it's policyholders. So if you could give us some thoughts there.
I think the answer to that lies in the account aggregator system of the Reserve Bank of India. It is an absolutely amazing piece of work. And which is why SEBI has very wholeheartedly and very happily joined in to that initiative. Because what that system ensures is both data privacy, but more importantly, equally data empowerment. So what that concept really says is, I as a citizen of this country have the right over my own data. Data that somebody else is holding as a fiduciary or as a business, they are free to use it for the purpose that I have agreed to give it to them, but over and above that, I have a right to my own data. So I have the right to pull my data, and I have a right to push that data to whosoever I want. So the whole consent architecture of the account aggregator is designed in a way to ensure that a citizen is empowered with his own data, and nobody can say your data is proprietarily mine as a business, and I refuse to give it to you. So this is at the citizen level extremely powerful, And there is more and more data that is now going into that system, and we expect to see that flourish. And I think it's only a matter of time before the account aggregator system becomes as omnipresent as the UPI system. So it's just right up there in terms of its strength and its capability. When it comes to regulation, our philosophy is aligned with that concept of saying what is the investor's consent. So if the investor consents that as part of my contract with you, I am willing for you to use this data for this purpose, we are very happy. Hum kaun hote hain to say yes or no? But the presumption that somebody makes that now that I have your data which I have collected under this contract, I am free to sell it or cross-sell or do whatever. That presumption cannot be made. And I think that there is enough already in our regulation. Yes, it will be wonderful when the data privacy bill gets adopted and so on. But I don't think we need to wait upon that. I think there is enough already for us to proceed on the basis and on the assumption that you cannot assume that the data is yours to do as you wish and particularly to sell it. That presumption cannot be made. And more specifically, I will give you an example. For instance, the mutual fund data. So, as part of the discussion that the regulator had with all the market participants, there was an explicit articulation by the industry association as to who owns that data, who can access it, and for what purpose. So SEBI facilitates this on an ongoing basis, and we really don't need to wait for any new regulation to come. The direction is very clear. Data privacy has to be ensured, data misuse cannot be permitted, and data empowerment is a must. The citizen has a right to his data.
Ma'am, I see a lot of hands up, but maybe we'll just take one last question.
मैम एक ब्रजेश जी बिजनेस से मैम दिस साइड मैम डेटा प्राइवेसी का ही सवाल था इससे पहले का तो हाल में कुछ ऐसी घटनाएं हुई हैं कि क्लाइंट के डीमैट की इंफॉर्मेशन जो है वो लीक हुई चाहे वो ब्रोकरेज हाउसेज से लीक हुई या कहीं से लीक हुई और उसके बाद बड़े पैमाने पर क्लाइंट की सिक्योरिटीज़ का मिसयूज़ हुआ तो इस तरह की चीज़ों को रोकने के लिए क्या आपके पास थॉट प्रोसेस है क्योंकि आप कह रही हैं कि फिनटेक में आप काफ़ी पसंद करती हैं फिनटेक वर्ल्ड को तो क्या उसका इस्तेमाल होगा टेक्नोलॉजी का और दूसरा सवाल ये है कि जो सर्विलेंस का सिस्टम है वहाँ पर आप फिनटेक का किस तरह से इस्तेमाल बढ़ाएंगी ताकि जो गड़बड़ियाँ होती हैं उनको रोका जा सके
देखिए ये जो डेटा लीकेज का सवाल उठता है आई थिंक उसमें बहुत सीधी सी बात है हमारी रेगुलेशन है ऑन साइबर सिक्योरिटी और उसमें जो रेगुलरली VAPT करना चाहिए लोगों को वल्नरेबिलिटी असेसमेंट एंड पेनिट्रेशन टेस्टिंग वो किस तरह से होना चाहिए वी हैव टेकन स्टॉक कि जो बड़ी इंस्टीट्यूशंस हैं हमारी मार्केट में वो सही तरीके से कर रहे हैं कि नहीं तो हमने जब ये रिव्यू किया कि ये हमारी रेगुलेशन तो काफ़ी पुरानी है लेकिन जिस तरह से इम्प्लीमेंट किया जा रहा है वो 100% सही नहीं है या कॉम्प्रिहेंसिव नहीं है तो उस तरफ से हमने और उसको बढ़ौती दी है कि उसमें कवरेज ज़्यादा होनी चाहिए और उन इंस्टीट्यूशंस को बड़ी इंस्टीट्यूशंस को एक टाइमलाइन दिया गया है कि आप फिर से VAPT करें और वापस हमें रिपोर्ट करें तो ये एक ऑनगोइंग जर्नी है और साइबर सिक्योरिटी का जो थ्रेट है वो हमेशा रहेगा वो दैट इज़ द फ्लिप साइड ऑफ टेक्नोलॉजी और उसमें हमें बहुत ही सतर्क और तैनात होना पड़ेगा सो दैट आई कैन अश्योर यू दैट going forward the emphasis on cyber security is going to be very very clear and the emphasis on ensuring that the investors data does not leak and that there is accountability for it is certainly going to be ensured. In terms of surveillance, I think पूरी मार्केट बात ही कर रही है कि आजकल से भी काफ़ी टेक्नोलॉजी का इस्तेमाल कर रही है और उसमें हम और इन्वेस्ट करेंगे हमारी जो टीम्स हैं उन्होंने बहुत ही उम्दा काम किया है इस एरिया में और भी हम आगे जाके उसको करेंगे इसीलिए अब फ्रंट रनिंग के केसेस इनसाइडर ट्रेडिंग वगैरह के केसेस जो हमें पकड़ने चाहिए वो अब उभर के आ रहे हैं क्योंकि मार्केट में होता है ये आप भी जानते हैं हम भी जानते हैं तो टेक्नोलॉजी के यूज़ से ये अब ज़्यादा से ज़्यादा हम पकड़ पाएंगे.
Sir, madam, may I ask you?
Last one
I think,
question. Just a short question, sir, if possible, ma'am.
ma'am, up to you. If
It's up to you how you're running on time.
maybe we'll take one, last one. Right,
Thank you, ma'am. Thank you, sir. I'm Khushbu Tiwari from Business Standard. You in your presentation mentioned that you could be working in going ahead for ASBA in secondary market. What could be the hurdles that you could face, and by when could be the implementation on the same?
देखिए, where there is a will, there is a way. तो हम तो यही बिलीव करते हैं कि देखिए, जहाँ पे आपका विल होगा, आप जो हर्डल्स आएंगे, आप किसी ना किसी तरह से उनको ओवरकम करेंगे. और टेक्नोलॉजी इज़ सो पावरफुल. देखिए, अगर कोई बाबा दम के ज़माने में रहना चाहता है तो हम उसका कुछ नहीं कर सकते हैं, लेकिन जो टेक्नोलॉजी को अडॉप्ट करना चाहता है, it is very clear all hurdles can be resolved. They are merely operational issues which have to be ironed out. And I think that in a few months, with the help of technology, we will get there. I don't think there is much debate about it.
Sir, madam, I really want to squeeze in one
I would
last
say,
question.
we'll run late for the next talk. Thank you very much. Ma'am, this has been wonderful. You've been very open, very frank, and a lovely session. Thank you for giving more than what we deserve from your time. We really appreciate it. Thank you for coming here and blessing us, ma'am. Thank you. Thank you, everyone.
Ma'am, if I would also request you to come together for a quick photograph. And can we have the loudest round of applause, ladies and gentlemen, for that very insightful session and for gathering a lot of clarity, a lot of insights from Madhvi ma'am. Thank you so much indeed for joining us today. Thank you very much, ma'am, for joining us and for sharing your valuable thoughts. With that, ladies and gentlemen, let me also inform you that we're about to get started with our next special address on the future of banking. So I'm going to request everyone to please be seated so that we can get the next session started. All right, with that, let me also inform you that the next session is about to begin. We have our speakers already here, our esteemed speakers joining us. So we are about to focus on the future of banking. And with that, let me also inform you, I'm going to urge you all to please share your tweets or your insights using the hashtag GFF. And on that note, ladies and gentlemen, we have with us none other than Mr. Amitabh Chaudhary, Managing Director and CEO, Axis Bank. And to spearhead the session, we have with us Mr. Harshal Mathur, CEO and co-founder, Razorpay. So can we please have a huge round of applause? We're talking about the future of banking. So let's gather all those insights. We have with us Mr. Harshal Mathur and Mr. Amitabh Chaudhary, the Managing Director and CEO, Axis Bank. Thank you very much for joining us. I'd like to request Mr. Harshal to set the tone for the session. Over to you.
Hey, hi everyone, good morning. So we are here to talk about the future of banking. But to set the context right, I think in the last decade, the customer's relationship with banking has changed massively. From bank being a place where you store your cash and valuables to being a place where you manage your financial relationships, to today it being an app, and sometimes not even a bank app, through which you do all kind of banking, right from managing your money, managing your finances, managing your investments, everything under, through the touch of a screen. And I think what has happened in the last couple of years is a lot of institutions, and particularly banks like Axis, have played a major role in driving these changes, in adopting new technologies, new waves of digitization, and going after newer markets and newer segments of the economy to completely change the way customers' relationship with banking works. And today I have Mr. Amitabh Chaudhary, who's the MD and CEO of Axis Bank, who has a ringside view of some of these changes happening in the ecosystem. And with the amount of changes happening from a technological and innovation perspective, sometimes it is important to step back and look at where are we heading, because a lot of these changes are happening at such a rapid pace that it's hard to visualize how this will pan out in, forget about 5 years, but in a matter of 6 months or a year out. So before we start, I'll ask him to share a short view of where he sees the future of banking heading.
Thanks, Harshal, for that. Good morning, ladies and gentlemen. I have some prepared remarks, so let me just, it's better to speak with paper in front of you. When I was coming here, I was wondering how should I dress up. It was a choice to be made, so I said, okay, let me remove the tie and just appear in a suit. So I'm hopefully not looking too much out of place. Talking about future of banking very quickly, I think there are 6 trends in my mind, and I'll just dive straight away into the topic. We have limited time. Harshal also wants to ask a lot of questions. So I would say there are 6 things we should be thinking about in terms of trends, and then we can look at what the implications of those trends are. Harshal mentioned that, I think in his remarks itself, that first trend is the emergence of a customer-centric bank. I remember a few years back, all of us used to talk about a digital native customer. Which are the customers which are digital native? In my mind, that does not exist anymore, because every customer now is digital native. And if you're not thinking that, how can I capture the customer who's accessing digital properties, digital stuff in some form or shape, you will have a problem. So institutions have also evolved as well. Fintechs have obviously made several advances in this area, and in many cases, the banks have also done enough work. The future of banking, in my mind, will no longer be digital or physical. The future of banking will be you being present in a form and a shape which the customer wants. In some cases, they will access you completely digitally. In some cases, they will access you completely physically. And in many cases, they will access you in both forms and shape. And the point is that when they access you in banking or any financial services, they expect a similar experience. Even in physical form, they expect you to give answers instantaneously as if it was a digital screen in front of them. Not that you are a human being or digital, but the expectation is similar. So customer experience expectations are similar, but how they access you could change over a period of time. So you have to be a customer-centric bank. Very important, another change which is emerging is emergence of product. The financial services companies in the past have been distribution. They design a product with certain features, and the focus is how do I get it to the customer as quickly as possible. Very little flexibility on terms of what that product is. As distribution becomes more and more digital, as various avenues become available to you in terms of reach the customer, not necessarily through you, but through various other means, partnerships, other channels, fintechs, and so on and so forth, product becomes very, very important. And product is no longer about just a certain benefit or a certain service. Product is about customer journeys. Product is about what can you offer to the customer which is relevant to the customer at that point in time. How personalized is that service or that solution becomes very important. And that's why product becomes a very important trend which will emerge over a period of time. Just to give you a sense for access, when I need to slip in access somewhere here and there, we have stopped looking at digital as customer or digital helping in digitally assisted business. If I was to just talk about pure digital business and give you some numbers, our access to, which is our pure digital business, has today a balance sheet or an asset size of close to 8,000 crores and a liability side of close to 50,000 crores. Pure digital, right? Based on customer journeys, which customer access themselves on their own. Third big trend, while all of us are aware of the India stack, and I'm sure it has been discussed in every forum here, I think what you will see in the future is a compounding effect of that stack. The people who can use that stack effectively, banks, fintechs, are the ones who are going to win in the future. And more of these stacks are coming. I yesterday saw the governor announce some more innovation around Kisan credit cards and stuff like that. Basically, every journey, every product, every platform which RBI or government can think of, they will create an open platform which can be accessed at a very cheap or almost no cost, which obviously leads to a huge amount of disintermediation. But at the same time, it also means what is the extra stuff you bring to the table, right? So that will be another big change. Fourth trend in my mind will be sachetization, which basically means that the smaller, because of digitization, you can actually offer very small or bit-sized products and services to the customer. A lot of fintechs are doing it, but can you, given the size and the shape you have, can you offer sachet-size products and services? And can you make money out of that? That'll be another trend. The question is whether you can get benefit out of it. Fifth trend in my mind would be hyper-personalization. A lot of people are talking about it, but if you were to just visualize that, can financial institutions finally, in the overall scheme of things, bring the bank to the customer which is personalized for that customer. For example, you open a mobile app, that mobile app is customized to you. Not that you have customized it. I have understood you as a customer, and when you open the app, it is almost customized to your requirements. Can you drive personalization to that level is what the future is ahead of us. And if people who can do that are the ones who will win more and more customers, and I'm not talking about mobile app, it can be anything. The more you understand the customer, the more you personalize the journey of that customer, and more data-driven you can be, will be the new future of banking. Another trend, emergence of real partnerships. Solutions have been talked for many years now. For example, we have partnerships with Flipkart, Google, Airtel. We're going to announce another one soon. But I believe in the next few years, we will see many partnerships of this nature and across products and off scale. Why will we see that? Because a lot of the large financial institutions have entered into partnerships. They have seen what works, what does not work. They know how to make it work. And it is a win-win for the parties involved. So I would say that the future will also be about signing up and getting into bed with real partnerships where it's a win-win situation for all the parties involved. So the discussions will move from being very tactical to being very strategic. And everyone, at least the large institutions, both on the fintech side, say for example, or the financial institution side, will pick up and can manage at a strategic level only few partnerships. You can't have hundreds of them. Because you'll pick up those few partnerships, it is important that you obviously sign up the right ones, but then make it real and make it work. Last but not the least, the regulation evolution. Next 18 to 24 months in my mind will be a period when much more clarity will emerge in terms of what the government and the regulators want and how this whole fintech will play out. And obviously, it's not that it will stop after that, but I think a lot of things still need to be clarified. We've seen a lot of activity over the last couple of months. It has meant people going back to the drawing board and re-looking at their models. Hopefully, in the next 18 to 24 months, complete clarity will emerge. And after that, the changes will be there, but they will be more incremental rather than dramatic. But regulation evolution is something which all of us should be aware of. And it does not apply to only RBI. It will happen across all kinds of regulators. So we should be prepared, and that's an important trend. And for companies who are involved in this business, it's not a question about waiting for the next regulation to come, but anticipate what is coming and change their business models in advance so that you don't get impacted by it as and when it comes. I think the tendency till now has been that we keep doing things which we want to do and hope the regulation will not come. That is maybe not the right way. We need to change our approach. Very quickly on the implications. If you want to be an organization which can become customer-centric, no longer technology can be a support function. Tech is a business in itself, which means that you also cannot outsource everything. You need to insource a lot of the stuff. It also means that you need to have technology people, you need to have product people who think differently, you need to have people who understand customer experiences, you need to have an entire range of skill sets available with you which can actually make your organization really customer-centric and understand what the new product of tomorrow could be. Very easy to say all this, very difficult to execute. Because end of the day, with the startup ecosystem, the way it is playing out in India, finding these resources is not easy. We started on this journey, for example, in Axis more than 2 years back. We have about 1,000 people working in just digital banking alone. And we have a 30-member design team now. Again, we would like to expand the size of the team, but we are also trying to now create open source architecture. Perhaps we are the first incumbent in the country to have our own design system. It's called Sub-Zero. It is open source. You can go and check it out at subzero.axisbank.com. Similarly, we have a built-in in-house team where 75% of our product team comes from non-banking backgrounds, fintech, consumer tech, IT, consulting, etc. As you think about building a customer-centric capability, it is very important to think from a customer perspective and keep improving your customer journeys. One is incremental improvement. Second is stepping back and saying what the journey could look like 3 to 5 years down the line. And both have to happen concurrently. Just to give you a sense as to what, if you focus on it, what the change can be brought about. We in Axis, you'll be surprised to note, are now the world's highest rated mobile banking app. I mean, I said world's highest rated mobile banking app. We are rated 4.8 on Google Store now. There is no app with that rating. So if you focus, you can get to that kind of achievement also. There is a core tech transformation also which is required. All of us have legacy systems. We need to transform the core to be able to, obviously apart from the fact that it requires a lot of time, resource, and effort and resources, you have to have all the systems talking to each other. You have to ensure that you are nimble and you can change or provide microservices quickly, instantaneously, as you sign up new partnerships, as you come up with new customer journeys, as you launch new products, sachet kind of products, and so on and so forth. Huge investment required in core technology, which means a lot of big bucks, which means that only that many institutions can invest that kind of money in this changing trends which we could potentially see in the future. We need data architecture and analytical capabilities also. Because it's not just about the right data architecture, you need the ability to ingest that architecture. To give you some sense and access, we already built petabyte scale Hadoop clusters. We have about 150 use cases across credit, fraud, marketing analytics on this architecture. The kind of people, the kind of investment you need to make to be able to take all the data which you're getting in this open architecture platform which the government is creating. And so one is that you get the data. Second is you ingest the data. Third is you work on that data. Fourth is that you use that data and serve an offering to a customer at the right platforms at the right time for the right product. All this has to be brought together. A customer might access a financial institution on any platform. You should be able to recognize that customer. You should be able to go back to your data, see who that customer is, what suits that customer, and offer that product to that customer. Assuming customer picks up that product, you should be able to create a customer journey which is closed within a matter of seconds. Imagine all this you want to do. What investment you need to make your core architecture, what investment you make in your data analytical capabilities. Compliance, security, and speed. Institutions have to find a way to build compliant process and ensure top-notch security practices and figure out a way at the same time to be agile, nimble, and fast to market. Not a new problem. It's an old problem. But the time, energy, and focus which the regulators have on compliance and the fact that they need to have adequate security in place has gone up multiple times in the last 12 to 18 months. Again, the investment required to manage that expectation is huge. And again, I would encourage the fintechs, please think compliance much earlier than what you're thinking. I think you just understand the meaning of the word compliance. You have no idea what RBI means when they're saying compliance. So important to invest that time. You need to create partner-ready business models. So to be able to participate in these real partnerships, you need to have the ability to, sign up the partnerships quickly and start work with them quickly, which means building APIs, building integration processes, aligning yourself to the way they work, persuading them to align yourself, make them align to the way you work. And again, a lot of work required in this area. All this for the financial institutions or banks like us means that we need a clear business rationale and top management support. Because the amount of money, resources, focus, and the long-term potential return which this leads to or indicates means that you need to have patience and you need to have a lot of ability to absorb losses or expenses for a long period of time before you can actually see some results. So top management focus, top management commitment to something of this nature will be extremely important as we move forward. Again, being very cognizant of time and maybe the fact that, I think having a question and answer session will be much better. Let me just stop here. So some trends and what the implications are. Wishing you a wonderful day ahead and maybe we'll have questions. Thank you.
No, that sets a very good context on where the future of banking is headed towards. And it covers a lot of aspects of where we would want to go in this session. But let me start by first talking about the customer aspect of it. Right? You hinted towards that and how customers' demands are constantly changing. One of the two things that I want to talk about is, first is the inclusion aspect. That there are a lot of segments of customers that have traditionally been, to put it simply, like not so profit generating for banks, for large banks. Digitalization is changing that, where cost of servicing is coming down significantly. You can reach last mile customer base in a far more deeper and far more easier fashion than you could through a traditional branch-based approach. So how do you think about that? And connected to that is, as you make it extremely convenient for customers to come onto banking and digitize their banking aspect, how do you handle security? Because you have a new base of customers who had not dealt with banking in the way a lot of people in tier 1 towns, for example, have. How do you ensure that that inclusion doesn't come at the cost of putting them at risk?
So thanks a lot for those questions, very, very relevant ones. You're absolutely right that earlier the banks would not, I mean banks, especially the private banks, were very focused on the so-called metro markets. In Axis itself, we announced 1 year back that we were going to go after an initiative called Bharat Bank, which was focused on semi-urban and rural markets. And the idea there was exactly this, that it's not just about going to the markets, but also use technology and digitization as a way to access these customers at a price where you can make money. What is also happening is that, I think it's an open architecture world. You can't do everything yourself. So you have to ask yourself the question, which are the partners? Partners could be fintechs, in our case could be business correspondents, it could be CSC, doesn't matter. Which partners you can use and leverage on to ensure that you create a bit of a win-win situation. In many cases, you will never get there. And then the cost of you getting there also is quite high because, we'll come with our own requirements of all kinds of things. So I believe the future of India, especially in terms of expansion and big growth, is some of these very customers. And by the way, they are hungry for some of these services. It's not that they never wanted it. They want it, but no one was offering it to them. And they have, when they wanted money, they have been raising money from their local money lenders at a very, very high rate. For example, if they were looking for loans, many of them don't have bank accounts. And now you hear of how everyone has a bank account and they're using UPI to get payments, etc., etc. Talking about security, well, I mean, that is something which we have to invest in. As I said, we are obviously watching it internally. Regulator is watching it. No amount of money you spend there is enough. The biggest risk you worry about is what could come and hit us tomorrow. But yes, something which I've been raising with RBI on a regular basis is that the kind of cyber frauds, the amount of cyber frauds, the sophistication involved is going up day by day. We struggle, suffer it every day. And we do need to create a system in the country whereby these criminals, we do go after them. I think what the systems we have created till now is react after something has happened. I think the police forces are state-wise. We don't have a central authority which is ensuring that we can go after some of these criminals. I think, yes, Home Ministry has started something where they can act quickly, but we need to become much more proactive because we are seeing almost on a daily basis that people are getting frauded. And invariably, I mean, let's be also honest here, it is the greed which gets you. Someone offers you something too cheap, and then you start having a conversation, and then they know that you're on the hook now, and they will, they're smart at it. They do this every day. So they get you on the hook and obviously take it from there. I have to also admit that RBI has introduced a number of measures. You look at what they've done on the credit card, the tokenization, the fact that OTP and all that which is there does protect the customers in a very big way in India. But we've still got a long way to go. And as we digitize more and more, you will see frauds. I mean, I don't know the entire background of these so-called Chinese apps which keep getting discussed, but the numbers which are mentioned are staggering. So yes, fraud is something which you have to live with. I think RBI is going to come out with a campaign also soon to educate the customers. But in spite of all the education, in spite of whatever all that has been done, at that time, when some great offer is made to you, you make that mistake and then obviously get frauded.
And I think, going back to the first point that you mentioned, I want to cover more from the fintech aspect, right? A lot of last mile connectivity is being built by fintechs in terms of apps, in terms of ecosystems around those apps. Yesterday, the RBI governor in his speech also mentioned that how fintechs can play an important role in driving access to credit in certain segments of society, which traditionally didn't have access to that. How do you see the roles of fintech as somebody who's running a bank, right? Do you see them as a competition? Do you see it as a way to collaborate? Or do you see fintechs playing on the sidelines while the banks actually drive the digitization?
All of them. We obviously, as I said, it's an open architecture world. There will be some areas where we will compete head-on with them. And there will be some areas where we should collaborate, and we are collaborating. And there will be some areas where you know that given the kind of pipes we have, kind of relationships we have, they can provide a certain part of the service only. Now, all of us are busy. Let's be honest also. All of us are busy. You are, when you're looking at us, you are saying, what more can I do which the bank is doing at a much cheaper price and take the market share away. We are looking at you and saying, okay, shit, these guys have come out of nowhere and they've got so much of business, what can we do? So that healthy competition will always be there. But I think the pace at which things are moving, it will be important for all of us to acknowledge and know that we are better off working with each other, knowing fully well that in some areas there will be competition. There's no problem. All of us banks also come together in some cases and work together, while the moment we walk out of the door, we are fighting on some of the deals. So it's okay, we understand. So I think it's exactly the same with fintechs. And I think the banks, the moment they have clarity around this, then things become very simple. There will be a number of areas where fintechs can do a much better job than what we can. Why should we go and try to replicate it? We have a lot of other things to do. So why unnecessarily go and try to do that? But yeah, there are some areas where we would not like to give our market share away, and we'll fight very hard for it.
Yeah, no, that makes sense. And I think that's the dichotomy of the relationship. And I think another dichotomy of the relationship is with the regulator, right? Like where you have like a lot of changes that have happened in the regulation in the last couple of years, especially when it comes to banking, when it comes to fintech, when it comes to that collaboration, and how does that collaboration operate? And I think the regulator's job becomes increasingly hard in a digitized world, because on one side you want to promote innovation, like Avi mentioned yesterday, but at the same time you want to maintain the customer protection piece. So what are some of your expectations from the regulators on how some of these the changes will happen, but how some of these changes could happen in your opinion?
See, first we need to understand what does the regulator want. Regulator is very clear, customer interests need to be protected. Depositor, customer means the customer will be using a service. Depositor's money needs to be protected. I don't want banks to be doing something which tomorrow could put at risk the depositor's money, because then government and the RBI comes on the hook. Third is that obviously fraud and incidents of that nature should not happen. And there should be a certain way of having a market conduct. You need to do things in a certain way. If there are grievances, they need to be handled. You should not be doing price gouging, stuff like that. So there should be clarity in terms of. If we understand that that's what the regulator wants, and no regulation can come before innovation, because if you don't know what that innovation is, how will you regulate it? So invariably, regulation will follow innovation. If that's the second principle, then please be prepared that if we today do things where customer is being negatively impacted, customer does not have full information, customer is being taken for a ride, missale is happening, RBI will come after it. Second, they will try to ensure that you come through the front door. If I'm giving licenses for something, you cannot find ways, if your business model is to find ways around it, one day I will catch you. And the day I will catch you, your business model will come to a stop. So come through the front door, but yes, RBI, while saying front door is there, it's open, but getting the license to that front door is not easy. Because RBI will think 15 times before giving a license. So in some parts of the business, the license might be easy, but wherever they believe that that license could lead to a large scale, large number of customers, large requirements, they will be quite careful before who they give the license to. So they're saying come to the front door, but the license also will take time. So in my mind, if you know these basic principles, on a regular basis, you should be asking yourself where I'm going to get hit next time. And by the way, RBI does give, if you're listening to them and read the tea leaves, I think the regulator does, at least RBI does give enough hints and indications as to what they're thinking. Now, in spite of that, if people don't think, don't listen, then the model will suffer. For RBI, banks have a certain fiduciary duty. This is the most important license. They do ask banks to do a lot of the things which don't make money for us. So they fully understand that they need to allow us to do certain business in some way that we can make the money to fund a lot of areas we don't make money. Right? We have a 40% PSL requirement, which has 15 subsections. A lot of those areas don't make money. I mean, just to give you a sense, in case of Axis Bank, we spend 900 crores just buying PSLC certificates every year to meet our priority sector lending requirements. 900 crores is not a small sum of money. A lot of the fintechs and some of the digital lending institutions don't even think about things like this.
So, yeah, I think we have limited time, but I want to cover two aspects. Like first aspect that we want to go into is, as the customers' digital needs are evolving, and you spoke about that, and the pace of innovation is changing rapidly. On one side, you have to keep up with that innovation. On the other side, you have to manage regulations and compliances. And I heard the way you described your org, it sounded like a product org, that you have Hadoop clusters and you have a design team and a product team. So it sounded like how a fintech org is structured today. So how do you balance that, right? Like, on one side, you are pulled down by some of these things which slow you down, like the requirements that you said. But on the other side, you have to keep up with the expectations of the market. How do you balance that?
So when we set up the digital banking unit, the person who was heading it, I don't know whether he's here or not, but his initial frustration was that, compliance and risk and all these old, economy people are pulling me down. And I used to say, you have to be patient. We are part of a large bank. I will help you through the process. Now he does not complain about it. And my biggest worry is, has he become like Axis, or we have managed the problem? So I keep asking him, have you solved your problem, or you have become like us? So yes, it is a balance which you need to keep striking, because end of the day, you do have a lot of legacy stuff, legacy way of working. That is the one which is really making the money for the bank, not this new stuff. That will take a lot of time, but that's the future. So what we did was, we did set up a digital banking unit which was away from Axis. We gave them a separate office, different look and feel. But yeah, that office had to deal with the people here. We have dedicated a lot of people there. So I think over a period of time, the so-called old bank has understood this, what they're trying to do. And for me, the biggest and the best indicator is that they are now getting proactively pulled into some of the larger projects, saying, please lead the project for us. So that is a very clear indication that, okay, things are working, they see the value. But we've got a long way to go. I mean, I think, if you really want to, let me put the problem differently. If today we have, let's say, 70% of the people doing ops and 30% involved in technology, in the next 5 to 8 years, we have to flip that completely. We have to have 70, 80% of the people in technology and only 20, 25% doing ops, product and all that combined. Now, if we can do that, just that transition is a very, very difficult transition. Forget about the kind of people we'll need and whether we can hire them or not. But that's something which you're thinking about and asking ourselves how we'll get there. We intend to try a pilot in one of the small areas and see how do we flip this, because we have to.
Yeah, I'm cognizant of time, but last and most important question, right? It's what is next in banking, right? Like, so we, while of course a lot of changes have happened, but what are you looking forward to? We have technologies like blockchain coming into the ecosystem. We have things like metaverse coming into this ecosystem. So what is next? Do we see a bank in the metaverse soon?
So some of them have gone there. You see, the basic services being provided to banking are quite boring, very simple services. So I think that is not going to change. What all these new things are doing is just providing a completely different level of service, customer journey, experience for the customer. And yes, maybe providing a solution which is so refined for that customer that they're potentially, that is the best possible design of the product, best possible pricing, best terms, looking at what they want, right? So personalized to the highest degree. So I think all these technologies and new ways of doing things are actually moving in that direction. You reduce your cost, pump in that cost to provide a more cheaper service, and the customer benefits. And your hope is, if the customer keeps benefiting, you will continue to scale and you'll continue to benefit in terms of market share. The basic product is not going to change dramatically. So I think, yes, the effort is just to move all in that direction. Some of these, what government is doing, I know time's up, but what the government is doing is that they are taking out the entire P&L opportunity. So if you look at payments in India, no one can make any money. I mean, you started there. You cannot make money in payments. You have to use payments as a platform to go and make money somewhere else. The worry is that will more and more of these emerge, which will take away revenue and profitability pools, and you have to then find the profitability pool somewhere else. Now, if the profitability pool starts shrinking, then my worry is that only the big can survive. Small will struggle. That's the problem.
No, that's a very interesting outlook. So I know we are running out of time. I could spend like an hour more with you, but thank you so much for giving that perspective. I think we all learned a lot, including myself. So thank you so much for taking the time on it. Thank you. We have some time for questions if anyone has any.
Morning, gentlemen, and thank you, Mr. Amitabh, for very, very lucid and very pointed, pointers that you have mentioned. You mentioned about compliance in your note. So I just want to understand that. Is it that you're talking about a word of caution to the fintechs for their own compliances, or is it that banking industry per se is struggling on the compliance front and you want fintechs to help them in their compliance management or in intelligence? You know, why I'm asking this question, because all throughout 40 years I have been into banking, and as a CEO leading some of the banks there, this was my biggest problem that I always used to worry about. Am I complied? Am I, the entire territories that I've been working. So from that point of view, thank you.
I think the second part of your question is very, very relevant. Fintech firms can play a very important role in compliance. Maybe they're not, focusing on it enough because they don't see revenue opportunity. I would say it's a huge revenue opportunity of the future because the compliance requirements are only going up. And compliance is very broadly defined. I mean, it goes from the gamut of compliance related to how you conduct business, to security, to all kinds of stuff, right? So, and by the way, again, our regulator has done a great job in terms of ensuring that they can pick up as much data as possible directly rather than someone supplying the report. So whatever they can do to help will be a good business opportunity for anyone. And all of us need help, I will admit that. Because not that we are in a bad shape, we are in a reasonable shape, but the compliance requirements will keep going up. And so whatever can make the journey easier is always helpful. As far as the first part is concerned, I would say that fintechs need to move from understanding the meaning of word compliance to actually living it. I don't think they do that today, based on the conversations we have when we sit across the table and we talk compliance. I think they're saying, yeah, we understand the meaning. Why are you wasting our time? And I'm just trying to say that please make it part very early on in terms of what your business model is. Because if you don't, a tsunami will hit you one day. Because the regulation will come. And by the way, RBI and all the other regulators can be extremely tough when they want to, right? So my view is that I think enough attention is not being paid. I think we have examples in front of us based on some of the regulations that have come out, which very clearly indicate that the business models have been stopped in their tracks. So I think if we could anticipate that, could hear it, and change our business models accordingly, it will obviously help in the overall sustainability of a lot of these fintech enterprises.
Hi, Mr. Chaudhary. Hi, Harshal. Priyanka here from Money Control. So I just wanted to ask you, like you said, a lot of fintechs are not living compliance, but now there's sort of more clarity with the digital lending norms. Some more is awaited when it comes to neo-banking platforms and what RBI thinks in that area. Has the bank's view on fintech partnerships sort of changed since the regulations have come, or anything more that you expect in terms of, would you like to wait for more clarity?
No, view has not changed at all. I think they have a very, very important role to play. I think, yes, there was quite a level of difference in understanding of what compliance meant for fintechs and for us. I think these regulations have helped them come on the same plane or in the same room. So that is helpful because I think they've got a clear message from the regulators that they have to comply. But no, absolutely no doubt in my mind that fintechs not only have a huge role to play, they will continue to have a huge role to play in the future, and we need to work with them. I mean, that is not in doubt.
So does the regulation open up any more opportunities for the bank also, because now there's more clarity?
See, we see any new regulation first through the lens of, oh God, they've stopped 1, 2, 3, 4. That's the first reaction. But I think over a period of time, we realize that a lot of these regulations, once clarity emerges, what is required, new opportunities do come up. So I'm 100% sure that both banks and fintechs will come up with new ways of doing that business, and ultimately the only way you will succeed is you're giving something to the customer which the customer can see and touch and feel and say, yep, this is better than what I had before. So I think new opportunities will emerge. I'm quite confident of that.
Thank you.
I think that's my view as well, that I think what regulations have done at the end of the day is make it more structured on the kind of partnership you can have and very clearly defined roles and responsibilities, which I think at some point was needed. So I don't think it stifles that collaboration, it makes it more structured. Yeah. Anyone else?
Yeah, one question from here. Yeah. This side. Yeah, so I'm Anju Bala here. I have a very simple question for you. See, as a common citizen, no, I am making all my payments through digital mode, whether it is to the driver, to the cook, grocery, everything. So my question is that whether the printing of currency notes have gone down during the last few years, and if not, whenever the ED raids happen, we find crores and crores of currency stocked. So what kind of new regulation is required to discourage such kind of stocking of currency?
Well, I'm not, know enough to talk or comment on ED and all that, but yes, the currency in circulation has actually gone up post-demon. So a lot of cash is still being used in the system. A lot of transactions are still cash-driven. And you would have noticed that both the government and RBI are working very hard to ensure that the cash in the system and usage of cash in the system should be brought down. Because, cash could inevitably mean that they're escaping the tax net. Government doesn't know what's happening. It impacts the monetary policy also and all of that. So my view is that government does want to bring it down, but there are still a lot of people out there, a lot of companies out there who want to deal in cash, and customers are willing to deal in cash for them because they save some tax here, they save something here, somewhere else. But as you would see from these raids, if you were to take that as an example, I think the message to the people who are doing this is you might escape today, but there are very good chances that you will get caught tomorrow. So why do it? And once you are caught, then all this ill-gotten cash is basically impounded. So you can just watch it from far. You can never use it. So
thank you, sir.
Hi, I'm Navan. I'm a budding fintech co-founder. So, like when RBI says that credit needs to be pushed, and the more people who haven't had yet access to formal credit need to have that, how are bigger banks looking towards this sector, considering their comparison towards, say, small finance banks who have better access in tier 3, tier 4, and more regional sectors? So how are the bigger banks looking to collaborate with small finance, as well as the fintechs who probably work in the space in getting the access to these kind of folks?
So you have various, I guess, categories of institutions who are catering to this. There are obviously fintechs who are doing it. There are small, there are payments banks, there are small finance banks, and there are, scheduled commercial banks. At some stage, depending on what, step of the ladder you are on, you do run into scalability issues. You can be a small finance bank. You're called a small finance bank for a reason. Once you reach a certain scale, you suddenly realize, oh God, where do I go from here? Because I have issues on liability side. I'm not able to raise that many deposits. I have issues on, yes, I have gone and extended this credit to a lot of the people who need the money, but my risk profile is high because if things go wrong, then my entire book starts looking quite weak, and that we saw that during COVID time. So at some stage, they either need to come out and become a full-fledged bank, or at some stage they get sold out. So my view is that what the larger banks are doing is that they're themselves going into some of these markets. If you were to look at our, for example, MFI book, it is as large as most of the independent MFI institutions today. And by the way, it applies to the other larger banks also. Nothing unique about us. So either they remain at that size and that start growing at a certain lower rate, or at some stage they sell out. And you've seen a lot of MFI sell out. So it's an evolution of the market. It is how each of the sectors across the world work. You grow up to a certain size. Some of them are able to kind of break the ceiling and become even bigger. Some of them are not, and they slow down, and they stop growing, or they sell themselves out, and then go and do something else. I'm sure once you sell your fintech, you'll do something else.
Yes, Mr. Chaudhary, thanks for your insights. Myself, Raj Jayaraman, I head products for QPS, Q Processing Services. I don't know if the question is relevant, but is cryptocurrencies in your radar, or is there thought process going around cryptocurrencies?
We have obviously, when we are watching the space quite closely, but the regulator, I'm sure, has made a lot of public announcements about what their view on crypto is. So broadly, the banks are very, very cautious in terms of touching that sector, because the message from our regulator is beware and be aware that we don't like it. So we are acting accordingly. I don't want to say more.
But from an infra standpoint, if at all the regulator relaxes that we can go crypto.
I don't think, based on whatever I have seen and heard, the regulator is going to relax. The view is very, very firm that we don't like this.
Got it. Thank you. Thanks a lot.
Great. So we'll end the session here. Thank you. Thanks, Amitabh.
Thank you very much. And if I could please request both of you to come together for a quick photograph as well. We'd like to thank Mr. Amitabh Chaudhary for joining us this morning, and we'd also like to thank Mr. Harshal Mathur for spearheading this session. And we'd also like to thank our members of the audience for those wonderful questions coming in. Thank you very much. And with that, what we're going to do is also get started with the next fireside chat, but in just a couple of minutes. So I'm going to request everyone to please be seated before we indulge in another interesting fireside chat on the role of new technologies shaping the future of fintech. So that's going to be the theme for our next session. Please be seated. We'll get the session started in just a couple of minutes. Thank you. All right, ladies and gentlemen, we're about to get started with our next session, so we kindly request everyone to please take your seats. Thank you. All right, ladies and gentlemen, time to get our next fireside chat started. Once again, I'm going to request everyone entering inside the hall to please take your seats. Well, as we all realize that fintech is gaining that kind of adoption across the world, and the technologies in the ecosystem are truly becoming smarter, for that matter, adaptable for the future. And that being said, we're now going to focus on the role of new technologies that are shaping the future of fintech. So on that note, we're going to spearhead this fireside chat, a very interesting chat coming your way. So once again, everyone who's still standing inside the hall, I'm going to request all of you to please very quickly take your seats. And with that, let me also invite our speakers on the stage. We have with us Smita Agarwal, Global Investments Advisor, Flourish Ventures. And also joining us today, we have with us Swapnendu Mohanty, Chief Fintech Officer, Monetary Authority of Singapore. So ladies and gentlemen, we're going to have a huge round of applause, and please help me welcome on stage Smita Agarwal and Swapnendu Mohanty. I'd like to invite our speakers on the dais, and thank you very much for joining us this morning. And with that, let me also hand it over to you, Smita.
Good afternoon, good morning. I hope you're all enjoying the stimulating conversations all around. I'm delighted to be here with you today, and we are talking about new technologies and their role in financial services. A famous Nobel Peace Prize winner once said, "Technology is a useful servant, but a dangerous master." Over the last decade, we have all been witness to our social and economic interactions completely being transformed because of technology, and we all know how beneficial that has been for the society. The first phase of technology changes was really about making us do something faster, better, cheaper. The next phase was about doing something that was completely different and new and not possible without technology before. And we've all been witness to how far-reaching that impact has been in our lives. But at the same time, I think we are also grappling with a lot of ills of the technology. The monopolistic viewpoints of big tech, algorithmic biases that add to exclusion, the whole issue around privacy breaches, and so much more that technology has now thrown back at us, and that are forming a part of a lot of thorny issues and discussions that we are witnessing. The next phase of technologies promise to address all of these thorny issues and bring about a paradigm shift like never before. Can they? Well, let's dive in. And we have with us today Swapnendu Mohanty, Chief Fintech Officer of Monetary Authority of Singapore. In his role, he has been in the center of policy deliberations, experiments, ecosystem conversations around supporting and encouraging and controlling new technologies that are going to shape financial services of the future. So welcome, Swapnendu. It's such a pleasure to have you with us over here. And let's dive straight in, and let's talk about the big word that everybody is grappling with, Web 3.0. What is so special about Web 3.0, and what way will it really change financial services?
Thanks, Smita, but let me correct the last part. I don't control technology. So again, wonderful to get here. Such a successful event you guys have put together. And back in India, when you have such conversation, it's truly enriching. You know, MS, our governor or MD, a few weeks back, came with a policy speech clarifying some of the discussions around Web 3.0. It was primarily driven by this whole policy stance on cryptocurrencies. And we put a lot of effort to really understand what exactly it means to us as a regulator and also to the financial sector. And out of that long discussion, if we have to think within the sector on the Web 3.0, we got to look at the foundational construct of that whole architecture. I mean, the most simplest way to express this, that in 1.0, we talked about only reading data. Now, on 2.0, we talked about reading and writing data. And 3.0 is about ownership of the data on the same platform. Now, how does it affect financial sector? And perhaps one of the ways to look at is look at the asset itself. And in the recent discussion, we have bucketed the whole space into two big buckets. On the first bucket, we have what you call as non-fungible assets, which is nothing but cash in the current fiat world. And will that take a different shape in this new world of Web 3.0? And in that, the first bucket, you have, I think most popular is the private currencies. And then on top of that, evolving is the CBDCs. And on top of that, the stable coins or currencies backed by fiat assets. And then the fourth one, which is the bank-backed, deposit-backed currencies. Now, that's one asset class within the Web 3.0, because to operate in this new architecture, you need a new form of money. And the new form of money is those four buckets. On the market side, all the asset ownership is also going to change because of this new architecture. So what you call as a fungible assets, on the non-fungible assets, which is the different way of asset ownership of equities, bonds, real estate, or the paintings, and whatever you think as a real economy, those asset ownership will change on the new construct. Now, to trade those assets in this new Web 3.0, you need this new form of money. And our argument is that there is a need today for central bank to think about a new form of money, excluding the private currencies, because that's, to us, that's something which doesn't act like a payment instrument. And how do we get to that new design? So this is where we have kind of landed today on this Web 3.0. Now, underlying that Web 3.0, there's this four key architecture. There's this crypto or the cryptography. There's this ledger. There's this protocol of consensus protocol. And there's the whole distribution construct around that. Now, I think the technology itself is not much of debate there. But it is the biggest debate for a central bank is to how to deal with this new form of money. And that's where a lot of policy stance will start evolving as we move forward.
So that's a really nice articulation that you've done, Swapnendu, of how this new design is coming into play. And the foundation layer, which you didn't use the word, is really the blockchain layer,
yes,
which allows for contracts to be executed, transactions to be done, exchanges of value to happen.
Yes.
We have already seen that blockchain has been the foundation for cryptocurrencies, and we've seen a lot of headwinds,
yes,
both from a market standpoint and regulatory standpoint on cryptocurrencies. But what I hear you say is the cryptocurrencies or the private currencies is just one of the many options. You still have the central bank currency on top of it, you have the stable coins on top of it. But really, I would like you to maybe kind of crystal gaze a little bit around what possible use cases apart from currencies can the blockchain offer? And why is it therefore exciting to invest in it and work on it?
Well, I think that's a good point you made, because many a times when you hear this word blockchain, you naturally tend to think about cryptocurrencies. So it's important for all of us to understand there's a new form of money which is required to transact on a distributed ledger. We are kind of avoid saying blockchain nowadays. We say distributed ledger because that kind of confuses people with cryptocurrencies. And to operate in this distributed ledger, you need what we call as a bearer instrument. So it's token. So a cash is a bearer instrument. If I hold a cash, I'm the owner of that process, of that money. So you need a digital form of that. So this whole architecture, which forces you to operate in a distributed way, in an atomic settlement, and the way I argue this, that today, when I have to buy a house and pay for it, are the two different transactions. The ownership of this new property and the payment process are two different transactions. In this new world, it will be a single transaction. It's called atomic settlement. Both the asset ownership and the transfer of value happens instantly because it's part of the token construct. And that runs on this network, which is distributed. I think the only question in that network is the governance process. And I think what has happened over last few years, the so-called protocols, which was highly ineffective, has now made a change because recently Ethereum made a shift to proof of stake. So I think this shift of the protocol layer, how to validate the transaction, will be a key differentiator of this infrastructure as we move forward. I think cryptography, nobody questions.
Right. That's providing the secure layer for...
So that nobody, I think that's, and the smart contracts we do understand because you want to automate these processes, the smart contracts has to run on this network. Is really the protocol, the validation protocol has been on the center of question. I think, and if you get that right, I think this whole new design will take a clear shape. But so let me come back to the intent of your question, that we should not associate private currencies into this network. That's a form of money which is used today to transact on this network. In absence of anything, it has created a speculative behavior. But if central banks do come and banks do come strongly on this new form of money, I think that will perhaps, market forces will take it out.
I think that's a really important distinction that we are making. So there are many elements that are highly useful and very innovative. You referred to tokenization, which effectively converts every asset into a digital asset, which can then move across the system.
Including the ownership and the value.
Including the ownership and the value. So that's that whole element of tokenization that you talked about. You talked about smart contracts. You talked about a new form of money. And coming to new form of, coming to the new form of money, central banked digital currency, the CBDC. Some of the countries have already launched it. Many more have announced their intent to launch, including India and Singapore. But bringing it down to basics, both countries, India and Singapore, we've seen massive adoption of real-time digital payments. So with that already established and done, what will CBDC add further?
Sure.
And how will the life of a common person change because of CBDC?
So let me go back to the current payment system construct. Singapore and Thailand connected that domestic payment system. So Singapore has the equivalent of UPI called Pay Now. And Thailand has something called PromptPay.
Yeah.
And we attempted to connect these two networks for a cross-border transfer. Domestic market today, using Pay Now like UPI, zero cost, 3 clicks, you move money to a mobile phone number. Same happens for Thailand. We started thinking of connecting these two networks. It took us 3 years to connect because there's a policy misalignment, all this thing, but we got it there. Now we are planning to connect to India by end of this year and also in Malaysia as part of our rollout. Now, the real impact on this whole connectivity, and they'll come to the CBDC question. So before this connection with Thailand, for every $100 a migrant worker will send back home in Thailand, it will cost something between $15 to $10 of fees. After the connection, it was brought down to $3, 3%. So significant drop on the cost of transfer. The question we're asking now, why is it still $3? Can it be less than $1? A sub-dollar fees for a cross-border transfer. Perhaps the answer there is the wholesale CBDC, because CBDC, wholesale CBDC allows to make your settlement and process between two jurisdictions far more efficient. And that's where central bank can issue a wholesale CBDC, and the market can be far more efficient than what we have today, a 4-tier structure between two corresponding banks in between. So wholesale CBDC will play that role in reducing the cost of transfer. And as an outcome of that connectivity we saw in Singapore, today a Thai worker actually sends money 4 times in a month, as against earlier they used to hold enough money to send back home, so it's cost effective. So in my sense, that wholesale CBDC will solve that problem. Cross-border settlement and reconciliation challenges, both from a regulatory processes and also compliance requirement. The other argument for the retail CBDC is where I think a lot of central banks have stayed away. They're kind of not sure. Because the question we ask ourselves, and I'm sure true for India, that you have a highly efficient payment system, same as Singapore. If I'm able to move money with zero cost,
real time, with zero cost,
why do I need a retail CBDC? So that leads us to have a much deeper understanding of this whole new form of money. And there's one argument being made that instead of calling it retail CBDC, can we call it as a programmable money issued by the central bank? And that programmable money can program this particular money for a particular purpose, especially in direct benefit transfer. If you are issuing these currencies from central bank liability for an emergency or for an emergency,
or like the way the COVID grants,
support
was
and you can program the money for a particular purpose. With that money, you cannot buy alcohol or whatever you don't want them to do with that. So if there's an opportunity for the central bank in certain unique conditions to issue a programmable money, there's the argument for retail CBDC. Now, retail CBDC has also other interesting advantage. You don't need an account-based system. You don't need a UPI rail to move money. It's super efficient if it's done. In fact, the cost of that payment system on a retail CBDC will be far more efficient than what you have today in any market, because just a bearer cash sitting on your phone and transferring from phone to phone, and you don't have any systems in between. China has done it. They're still on the experimentation in terms of rollout. I think this is a space we've got to watch out for, especially for low-value transfers. This can further reduce the cost of infrastructure of moving money. So still long way to go. Central banks are going to focus on very specific use cases for retail CBDC. Within that retail CBDC, we also have a policy questions, both from an instrumentation of the money, how to design the right programmable money, both on the distribution of the money. Who will distribute? Banks should distribute. I'm sure central bank don't want to be the distribution agent for this money. How banks will distribute, what is the economic model behind it? Also from the ownership. If I'm holding the currency, am I being monitored? The whole set
anonymity is a big issue that is being debated.
Privacy, anonymity are other consideration of that whole design of the money. So Singapore has started something called Project Orchid. We are going to release a kind of a experimental platform where you can design a retail CBDC based on the policy design you want it be part of that whole new form of money design. So between instrumentation, distribution, and the
end use.
Yes, we can design a particular money. So there's a long way to go, but I think people have figured out a way to think about retail CBDC. But I also bring back to the original argument. You need a new form of money to transact in Web 3.0. And that is a bearer instrument. It's not an account-based system. So whether it's retail CBDC, whether it's a stable coin, whether it is a bank-backed digital currency, you need some form of money to deal with this new marketplace where the asset transfers are not in a traditional design.
So what I think what you're referring to is a new form of money that will lead to massive disintermediation. And for just another use case from what you just described in terms of cross-border, if you are a customer from India having a UPI app, be it Bheem, be it Google Pay, be it any of your bank apps, and if you're traveling to Singapore, Thailand, Malaysia, anywhere, you can actually continue to use your local UPI app to make payments there. That is the connectivity that you're talking about. In today's world, there are private networks that allow that cross-border transactions to happen at a significant cost. But with this central bank to central bank connectivity, you can actually do those cross-border transactions in a very seamless and a frictionless manner. And the next thing you talked about on the retail CBDC is really the concept of programmable money, where you are kind of managing the end use with specific purpose. Otherwise, there is monetary policy interventions that the central bank has to rely on through multiple stages.
Yes. Yeah, definitely. This improves the whole direct benefit transfer process to one layer or further downstream and make it more efficient. So that's will be the argument for this. But again, my big argument remains, you need a new form of money. And it has to be a legal tender. As a central bank, we do not encourage private currency. It is speculative. There's no real value to this whole form of money which is issued by private parties. So there's no argument today which holds against or holds for these currencies.
I think that point is well taken. And as we talk about the next stage, we are talking about distributed ledger. That's the concept that we are referring to. And that leads to decentralized finance. That leads to decentralized autonomous organizations that have what we call the concept of participative governance, this kind of self-governance. So in that world, as we move, what do you see and how do you see the role of financial regulators evolving?
Okay, well, that's a very, very complex problem to solve for. From my own experience in this whole space is through our project called Project Guardian, which we launched a few months back. And we are targeting capital market as the first use case for a decentralized organization. And there are 3 or 4 things we're looking at. Can we make the intermediaries less in this whole process? Can we create a far more efficient automated market pool for liquidity? Today, liquidity is a problem in this whole centralized finance construct. Can we reduce fraud and scam risk because institutions can get compromised in this whole process? So the residual question in that whole architecture, who is the regulator? Who is the governance? And there is this thought, I would say, and it's not a definitive thought here, that while the process is decentralized, the efficiency from the network can be achieved by this distributed business process. Is there an argument for a centralized governance or a super node governance within that node? Some of the node have an unique power to govern this system. And it's still evolving. There are a lot of argument against that because you don't want governance to be the back to square one on this whole process. But there are also a thinking coming around, maybe a central bank will issue a special set of code which will self-monitor these transactions. But this is still a work in progress. But till now, I don't think any central bank, through their existing experiment, have come to a place where they're comfortable with this idea of decentralized, self-governed processes. Why it has taken a lot of attention? Because today, most of the DAO are backed by privately issued currencies. So it's still speculative largely, but to have a serious discussion around that, we got to fix some foundational problem, which is get the right form of money, get the right use cases, get the right governance model to run this, even if decentralized, these processes, and also pick up the right use case. Not every use case requires you to run through a DAO architecture. So these are still work in progress. Hopefully, in a year's time, we'll have far more clear explanation on this process.
Right. Moving on, the theme of this conference is global, inclusive, and green. So let's touch upon the intersection of technology and sustainability. ESG Fintech, it's a new concept. There is a lot of conversations happening around green finance. I am aware that MAS is actually pushing this through. You have a project Greenprint. So share with us what is that about and how is that going to be impactful?
Good. I mean, as I was coming to your festival, and thanks to your diligent security guard who didn't allow me to enter to the speaker's lounge, I took an opportunity to go and look around your booths. And I was walking around this booth and made those payment company. Privately, they were not sure whether they're going to make money out of it. And I think we have now an answer to that. In my sense is, between payment fintech, wealth tech, and reg tech are going to play a key role in the whole ESG fintech going forward. Because the payment company have transaction data which we can use to monitor all the ESG KPIs we're looking for. The wealth tech has all the necessary tools to advise client on the reallocation of asset to the green finance or ESG assets. And the RegTech will have all the necessary tools to do the disclosure and the registration, all these things. So between these three subclasses of fintech, we'll finally found an opportunity to make a lot of money going forward. So the good news to all fintech, payment fintech players in this crowd, that one way to pivot and make money out of your existing infrastructure is to pivot to green ESG fintech. Now, back to Project Greenprint, because for us to manage this whole architecture going forward, we need a public good which will do three things. How do we monitor all the asset which is being deployed under the ESG framework in terms of their impact on our planet, is all the 2050 goals? How do you measure the impact? Because once somebody borrows against the ESG finance construct, you got to report this data, right? So you have to monitor and measure the impact. And the fourth pillar is the marketplace, because unlike finance till now, green finance or ESG finance has one structural challenge, because you are financing real economy, and this real economy needs to buy solutions which will allow them to become more ESG friendly or more green friendly or do the social responsibility, better governance. Now, to do that, you need a lot of tech on the real sector itself. For example, a plantation in Indonesia needs to have access to tools which will help them to reduce their carbon footprint. Now, all this requires financing. So the marketplace allows you to discover for every sector a right tech which will solve the carbon footprint issues. And then we have the finance which is backing up them. Then we'll have fintechs in between will help us to
monitor and track.
Yeah. And that's how we bring the whole ecosystem together. So just to summarize, good luck to all the fintechs who are in the space of payment. Finally, we found a way to make money.
You know, whatever gets tracked gets done, whatever is, you know, so I think that's the whole idea. And people who are sitting with lots of data can play a very important role in tracking the carbon footprint.
And every bank, every institution are going to rely on this fintech. And I've been a big advocate of payment fintechs here. And I'm telling every market I go, please work with your respective countries' payment fintechs and find a path to use them in this whole transition from a brown to a green economy.
You know, we all know that Asia is home to 60% of the world's population. According to the most recent World Bank estimates, developing Asia is going to be at the forefront of economic growth with the highest growth rate, including in India. All of these new technologies that we've just talked about and this future of financial services that we referred to, how is this actually going to help low and middle income countries in Asia to finally you know, reach their goals of financial inclusion, more importantly, financial health for all their citizens? That is, you know, is all of this path leading to that, or is it going to be still something that's going to be working for the select elite few?
Sure. Well, you know, Smita, one thing I've always expressed frustration that when fintech came in, there was a lot of optimism that they will finally solve the inclusion problem. But I think they have done definitely huge impact on the payment side, on the lending side. But you go across the market, still 50% of the population have no access to credit. All the fintechs and banks are doing are over-lending the same people who borrow. So basically, there's a further concentration risk with the same borrowers. And the spreads are quite high there. So it's really still a long way to go. During the COVID, you look at all the ASEAN market, central banks have issued close to 20+ digital bank licenses. And one of the reasons behind this is that there is still a frustration that this issue has not been solved for. And at least the central banks are trying to see whether they can create a new licensing framework where you can have far more comprehensive banking services rather than this madness in dumping payment and lending to this emerging market, especially the low-income segment. What I mean here is that can this digital bank offer a truly a comprehensive full set of banking services, from saving, micro savings to payment services to micro wealth, micro pension, micro insurance. Easier said than done, because for insurance you need an underwriter who can price it effectively. You need, for capital market micro wealth, you need a capital market fintech which can fractionalize bonds, equities, so that it is a small ticket size for distribution. So my sense is that this digital bank which has been issued licenses last 2 years will finally able to come to the market with a far more comprehensive product set which will truly address this low income segment. So that's on the distribution side. On the policy side, we still are struggling on the credit policies decisioning. Today, we are still on this old-fashioned ability to pay credit mechanism. But you know that today when somebody issues credit, there are two things you check: intent to pay, ability to pay. Most of us know that ultimately banks and fintech do lend based on ability to pay. And we also know during default, it is the intent to pay.
That is the biggest reason for the default.
Right? So you have two conflicting constructs which is running till now. Now, how do you solve for this gap? I think the way to do it is to start thinking about how to digitize the intent to pay. And this is very interesting, a Web 3.0 construct plays. And I've been championing for last few months that can we tokenize social credentials of people, especially low-income segment, to demonstrate a better intent to pay metrics. You don't need a centralized bureau for that. If I'm talking to you and you are a person of interest for my business, I would like to tokenize our interaction. And I can use that token to go to a bank and at least demonstrate that I have a right intent to pay. So having those new change in the infrastructure, especially on the credit side, developing a more expansive alternate intent to pay infrastructure, plus the digital bank offering a wider range of product instead of this madness of only lending and payment, should truly address the real concern of the low-income segment of Asian population.
I think this is really fascinating. It's kind of opening up a whole range of possibilities of bringing down the cost as well as addressing some of the information asymmetries that exist today, which result in lack of credit and lack of financial services
And this
access.
also opens up a huge opportunity for B2B fintechs, especially people who are underwriting this insurance, people who are providing fractionalized wealth product. So this also opens up opportunity, commercial opportunity for fintechs in the B2B space, because you need that back-end services to allow this distribution to be more efficient and more low cost at the front end.
You know, a couple of days ago, you announced a partnership between Singapore and India on financial innovation. So what is your message to the fintech founders and innovators here in India, and what can Singapore offer them?
Well, that is, I think, the first time regulators have issued sandbox in every market. And it was very difficult to have a cross-border single sandbox. This is the first time globally two jurisdictions have come together to allow participants to have a single sandbox which is applied to two markets. So there are three-tier structure which we agreed with IFCA, the gift city regulator, where in tier 1, both the jurisdiction can refer respective market to be part of the sandbox. On the tier 2 structure, a single applicant have access to both market for sandbox experiment. On the tier 3 structure, you can actually bring a third regulator to the process. You have 3 or 4 markets simultaneously experimenting a single product. I think this was a structural gap in the whole sandbox framework. Hopefully we'll solve this through this agreement between India and Singapore. An opportunity for all the founders here. If you want to operate in 2 markets, you want to have access to 2 markets through this infrastructure or framework, most welcome. I'm hoping in next 3 to 4 months at the Singapore FinTech Festival, we'll announce one candidate who will going to operate the sandbox in both markets. So that will help us to think how we can take it forward.
On that note, maybe, do we have time for just 1 or 2 questions? Okay, maybe just a couple of questions if anyone has. Yes, please. Can we get the mic?
Maybe we can get a question right now.
You can just, you know.
We will repeat it for you.
Hi, I'm coming from True Balance, which is also a lending platform actually. and we are based out of Gurgaon, actually. So we have been lending for the people who have got the retailers, especially with non-CIBIL users, actually, not only for the CIBIL users who have got bureau check and everything. My question to you is, like, we have been using SMS reading and sandbox and other multiple things to resource what kind of a payment he's been doing and what is the credentials for every month he's been doing across. But if you look at the other set of users who are recently coming for the digital lending, which is completed their education, why can't we use their education documents to give more lending so that they can succeed in the more careers, actually? Yes. And this is because none of the other companies are using, other than the bank, like the education loan, people are ready to give the loan. But to sustain, to do a business, education documents are not being used. So if you can tell us, it would be really helpful.
I think very good point. In fact, the one we're experimenting in Ghana, that if I have, the way we should be able to do it without a national infrastructure, that if I have studied in Singapore University, I can bilaterally get a verifiable credential from the university to my wallet as a token. And that token, I can work with the bank to demonstrate my intent to pay and hence access to credit. Absolutely. Not only education, workshops, conference like this, everything can be tokenized so that it enhances our own ability to demonstrate that we have real intent to pay things in this credit market. Absolutely. And we don't need a national infrastructure to tokenize an educational certificate. Bilaterally, technology is available today. In fact, that's what we're experimenting in Ghana. There's a Temasek-backed company called Affinity, which allows you to bilaterally tokenize credentials and can be anything.
Yes.
Just one last question, please.
Yes. Thank you very much, sir, for your wonderful presentation. My name is Yana Wu, and I'm a Singaporean investor, headquartered in Singapore, investing in India. Wealth tech platform called BooSmart. So you just mentioned about micro wealth, and congratulations, by the way, for this partnership between Singapore and India. I think this is wonderful timing. So talking about micro wealth, the mission for BooSmart is help micro wealth go beyond boundary. So for growing middle class in India, they not only can invest in NSE, BSE, India, but they can also maybe invest in SGX, yes, in IDX, in Indonesia, in Philippines stock exchange. So how do you see this cross-boundary investment opportunity, and how the regulator will respond to that for this more like cooperation between the boundary? So
two things.
Thank you.
Tomorrow the IFSCA chairman, Mr. Ingeti, will be here to speak. Do ask this question that you want to be a part of the sandbox. Do ask the question on the stage so that he says yes to you.
Can I ask?
Yeah. Yes. Yes.
I think we're running behind time.
So quickly answering your question, yes, we can apply your case to Gift City or to MAS. We are happy to look at the application to see whether that can be done out of the Gift City infrastructure.
Thank you so much, Swapnendu. It has been a real pleasure to have you here and to kind of demystify a lot of the jargon and also open up the whole world of possibilities that are out there. So while we've come a long way as far as technology evolution is concerned, I think the future is going to be even brighter than what we've seen happen so far.
Thank you. Thanks for having me.
Thank you.
Thank you very much. And I'd like to request both Smita and Swapnendu, I'm going to request you to come together for a quick photograph.
Okay,
sure.
And yes, ladies and gentlemen, can we have a huge round of applause one more time to also thank Swapnendu Mohanty for joining us here. Thank you so much for sharing your thoughts. Thank you once again. With that, ladies and gentlemen, we're about to deep dive into our next session, and we're focusing on the roadmap to $10 trillion economy in the next decade, leveraging talent, innovation, and collaboration. Now, first up, we have with us the one who's in fact spearheading this session is someone who actually stands for all these three, which is leveraging talent, innovation, and collaboration. We have with us none other than Kunal Shah, the CEO of Cred, who's joining us to spearhead this session for all of us. So, ladies and gentlemen, can you please put your hands together to welcome none other than Kunal Shah, the CEO of Cred. Well, I must admit, his tweets are nothing short of a masterclass, by the way. Thank you so much. And also, we will be having the dynamic presence, albeit virtually, but the dynamic presence of Sri Rajiv Chandrasekhar, Minister of State for Electronics and Information Technology, Skill Development and Entrepreneurship, Government of India. I'm going to request all the ones who are also seated right across the hall, right across the hall who are standing, I'm going to request you very quickly take your seats. We're about to get this fireside chat started. Over to you, Kunal.
Thank you so much for having me. It's good to see the scale of fintech ecosystem becoming as big as this and super exciting. I have with me Rajiv. Rajiv, welcome to GFF. I know you are running tight on time, so I'm going to make it sort of like a rapid fire for you and keep it interesting. I'm going to start with a sort of an unusual question. You have been a tech founder and you ended up being in government. How did that happen? What's the North Star that you're chasing and what's keeping you going?
So thank you, Kunal, for having me on this chat. Thank you all for inviting me here. And I intended to be there in person today. I can assure you that that was a plan till late last evening. And then as things often happen in Delhi, things change. And so regrettably, I couldn't be there in person. But let me first of all wish the GFF my best wishes, and I hope that it will turn out to be the premier conference on fintech and fintech innovations for the world and for the innovators all around the world. So good luck on that. My best wishes on that. Kunal, look, I think the way you framed that question makes it sound like this was a binary that just happened, that one day I was an entrepreneur and the next day I found myself in government. It didn't really work that way. I walked away from telecom and my telecom entrepreneurship in 2005 and chose a life of public service in 2006, which is when I entered parliament for the first time. I will accept that and I will acknowledge that I did not expect that I would have a long term in politics. I thought it is something that I would check out and see and explore. But it turns out that I spent 16 years, I've spent 16 years in politics. And it is only now, very recently in 2021, that I have an opportunity to serve as a minister. Till then I was serving as a member of parliament. The North Star, the reason, the motivation for entering public life, I've been asked this question many times, Kunal. Inherently, I am a Fauji's son, and inherently, service is deep in my DNA, if you want to call it that. And I'm also a person who's made these pivots in life. I started my career as a programmer, then a chip architect, pivoted to being a cellular entrepreneur when I had no clue what entrepreneurship was. And then somebody told me you will never be a good, entrepreneurs can never make good politicians. And I took that as a challenge and joined politics. So I think if there was a North Star and if there was a deep meaning to why I chose public life after several years of being an entrepreneur and a technologist, it was because I saw that as a frontier that where I think people of our background and our people of our exposure need to be more visible in and participate in. And I took it as a challenge at that time, and I've enjoyed every minute of it. It's come with its ups and downs, but it's been a net positive ride.
That's great, Rajiv. Thank you so much for that. I'm going to switch gears and ask you the question about the $10 trillion target that we have. How do you see fintech playing a role? And I'm going to put you on spot and ask you, can you tell us what are the top 5 unicorn ideas that you can tell the team over here, all the audience, there are a bunch of young founders who should take some inspiration from some of the ideas that you may have and build some great companies from that?
So firstly, Kunal, let me just say this, that I have made it clearly a rule for myself not to try and predict things about technology, especially not in front of an audience of smart youngsters like that we have here today. I always tell people in government and people in public life who go on about this concept of needing to mentor young Indians, I say very, very candidly, and it's something that I believe in, that for us, there is a lot to learn from the young Indian. And actually the process is a very reverse process from the traditional, slightly patronizing approach towards mentoring that anybody above 40 sort of allots himself or gives himself that role. So I won't make any guesses in specific, Kunal, but I will tell you this, and I have the ability or at least the confidence to tell you this because I am a ringside view to where our country is going. I am a participant in the way our Prime Minister and our government is building and expanding opportunities for this generation of young Indians. And I think one or two things we can say with certainty, that digital is going to be a significant part of our growth story of India. And when the Prime Minister called it India's decade on August 15, 2021, and repeated it recently, I think there's a lot of substance to that claim or that ambition or that promise. So I think in terms of technology being the driver, being the growth driver for India's economy, in terms of creating opportunities, in terms of creating leadership capabilities for us as a nation, technology is going to be very, very clear and center as a space to be in. The second point I would say here is that apart from the consumer tech trends that we have seen, the future in the next few years is going to be more of that artificial intelligence and this much more vibrant data economy and opportunities around that, and a whole new basket of opportunities which I will loosely refer to it as deep tech. Whether it's semiconductor innovation and design, it's electronic systems design, whether it's computing, edge computing systems. So there are automotive, mobility, devices, products, platforms, solutions. I keep saying this mantra that India so far, for decades we were an ITES company that described our digital economy. We have in the last few years moved from that to being significant innovators in the D2C and the consumer tech space. In the coming years, with both those continuing to grow, we will also be expanding our basket of innovations and successes and unicorns and stars and platforms and companies around deep tech and the data economy, and in particular the AI and the ecosystem around that.
Great. Rajiv, as a policymaker, I think the biggest challenge I think you probably have is how do you keep innovation going? How do you have and India is the biggest prize for a lot of global tech companies to come and win as well. And there is a local startup ecosystem and there is this capitalized startup ecosystem. As a policymaker, how do you strike the balance? What's your vision? How do you think about this? Because you want to create local innovation. You want to make sure that the market is allowing a lot of global innovation to come in. How do you think about this?
No, look, I don't have any lack of clarity on this. I think the Prime Minister and the government and we all have absolutely crystal clear view on how we want this to evolve. The opportunities we see, many opportunities that are going to be that are based on our domestic capabilities and capacities that will be limited to Indian innovation and Indian innovators. For example, we are going to today we are in the midst of creating one of the largest data sets program, anonymized, non-personal data that will be available on platforms for the entire AI ecosystem. And we will clearly only allow access to that data set, that data set to Indian startups and Indian companies. So we are very clear. There are parts of our policy making, parts of our schemes that are going to be tailored for Indian innovators and Indian startups and Indian companies. And many parts of those are going to be open up to companies that want to come in from the outside and create opportunities in India. Having said these two things, one of the other areas that we are giving a lot of thrust to is to create joint IPs and joint ownership in India between, let us say, a foreign company and an Indian startup. That is again a model that we are putting a lot of thrust in, especially in deep tech areas. And to round off the response, one significant signature theme that the Prime Minister has insisted on is a collaborative model. So we, in almost everything that the government is doing today, will create space for startups to be involved, the Indian academic institutions to be involved. If there is a foreign big multinational major that wants to be involved in the scheme, we will create space for them, as well as local Indian large tech companies. So this is the model. It is not going to be exclusionary in any way to anybody, excepting in certain segments, like I told you about the AI segment and the whole deep tech segment. We will create space for Indian innovators. And by the way, it will not just be policy. The government will also provide capital and other types of support, including market access and preferential access to government contracts, to allow these startups to not just financially bootstrap, but also bootstrap their businesses and grow.
Great. Ajit, thank you so much for that. 5G is here. What do you see? Like, when do you think 30 to 40% of citizens of India are likely to get on 5G and start getting benefits of that? What do you foresee?
Look, I think that question is best posed to the Reliances and the Airtels and the Vodafones and the BSNLs of the world. I see no disincentive in the way the government has rolled this out, the policy out, for anybody to go slow. Because the opportunity for the 5G, or the 5G opportunity, is a real opportunity. There are considerable advantages for first movers in this, especially because 5G represents, while it's the 5th generation of wireless for consumers, it is the first generation of machine-to-machine and sensor type of networks that will evolve around the internet. So there is a considerable built-in incentive for those who have got the 5G spectrum and are licensed ISPs or TSPs, as the case may be, to roll these networks out fast. There is a whole downstream of innovation around 5G, Kunal, that we can't even begin to imagine today. It is going to deeply and in a, tectonically, at the risk of sounding rhetorical or being, effusive, that this is going to be a defining moment in the evolution of the internet in India. And I think the first mover ISPs will have a significant advantage if they build out rapidly. So I think there's a built-in incentive for Jio and Airtel and Vodafone Idea to compete and get there first and offer these services. And so I don't think the government needs to do anything more excepting keep these telecom operators honest and focused and continuing to do their job.
Makes sense. UPI has been a huge success, and I believe that there are more stacks, including account aggregator and any other things that are coming. They're going to create a huge wave. One of the key questions, which was kind of discussed and debated a lot in the conference, is about, let's say, the MDR of UPI. I don't know what is the government's view on this. If you would love to kind of give your perspective, that would be helpful.
No, I don't necessarily want to get into the detail, Kunal, because it is really an issue that the Ministry of Finance and the Government of India have to take a view on. And we, as METI, as Digital India, as sort of stakeholders in the whole fintech ecosystem, we have certain expectations in terms of how this sector will grow, how this ecosystem will grow. Obviously, we are focused on innovation and we want innovation, but we want this to be looking, smelling, talking, feeling less and less like a sandbox and more like a dynamic, aggressively growing, easily accessible fintech ecosystem. that has interoperability, it has orderly growth, it has choice. All of these areas built into the fintech ecosystem. As much as you have innovation and as much as you have, the next great idea. So there are many other outcomes that we are focused on. Whether the MDR should exist the way it is, should we look at it? One of the things that we are doing now, Kunal, just for the interest of your audience and all those who are watching, is that most policy decisions that we will take will be as a consequence of consultation. So on the MDR, I know there are multiple views on this, and if we choose to move in a different direction, a new direction, it will be after considerable consultation and with a lot of stakeholder input. So I can assure you that that's the way we will go, and any changes, any sort of alterations in the trajectory of the growth of the ecosystem will be only after consultation and will not be disruptive or not be unexpected or abrupt.
Thank you so much for that. Very, very helpful. You mentioned METI briefly. Curious to know what are the big goals you have with METI, and what can we have like 1,000 plus companies over here who are listening to you. What would you ask them to do to accelerate your roadmap, your goals for METI? Would love to kind of get a perspective.
Yeah, no, thank you for asking that question, Kunal. And I think that is, I think, part of the reason I wanted to engage with you and with everybody in the audience, is that I think, and I'm not overstating this or exaggerating this, I think we are, as a nation, as a digital economy, just at the tip of a very, very large iceberg. Where we are today is an inflection point, and the opportunities today to grow, innovate, excel, and create enterprises, platforms, devices, products, solutions are huge. I mean, 5 years ago, when you looked at the internet and technology, you saw a little bit of it, and our audience, our entrepreneurs did a great job of rapidly capturing those opportunities and creating so many success stories. The coming years, we'll see, like I said, deep tech, AI. There are so many tremendously exciting opportunities today. Kunal, if you asked me today, I would have never believed that as somebody who built many, many wireless networks in this country, that we would be at a stage where our standards were being accepted by 3GPP. Yep. Our RANs and radio virtualization solutions are incorporated into industry-grade ruggedized networks on 5G. So that is the momentum, that is the velocity with which we are moving. And whenever I go meet youngsters and young entrepreneurs and wannabe entrepreneurs and people who are already entrepreneurs, I'm saying this message, look at what this government is creating, from space to semiconductors, from electronics to autonomous systems and autonomous vehicles, from AI to the other end of machine language, machine learning, all of that, machine learning. So I think there is a tendency to believe that consumer tech is everything, and I'm not knocking consumer tech, but I would like more and more of our young entrepreneurs to get into these areas that are emerging. There is a significant advantage that you are at the same starting point as an entrepreneur in the US or in UK or in Japan, and there is therefore a tremendously different type of momentum and dynamic in terms of getting into this. And these are all opportunities that are being built out there. The government is playing role of enabler. For example, in the semiconductor space, Kunal, we expect the government has given, the Prime Minister has given us over $200 million of capital that we can invest as government in design startups. So if today a young VLSI engineer working in one of the majors has a great idea for the next generation of GPU or an AI compute product or a device and wants to set up a team, the government is willing to invest up to 100 crores in each one of these startups. This has never happened before. And so therefore, what I'm saying is there are policies, there are opportunities, and there is government capital and an enabling environment where collaborative models of creating intellectual property, products, devices, solutions, and platforms is also something that we fully support. This is the time to get into these new areas, and I would be happy to engage with anybody who's wanting to walk down this road into these new areas. And of course, since you've given me the opportunity to pitch this, I would request each of you to explore these opportunities beyond consumer tech and into the whole data economy piece and the emerging tech piece as well.
Thank you, Rajiv. A question is, as tech becomes more prevalent and let's say the main pillar to get to the $10 trillion economy, what's going to happen is there's going to be a lot of change in industry in terms of how the employment is going to be reshaped, and people have to kind of go in through a process of reskilling. I would love to know what's the government's vision and your view on how should one think about this and start preparing for this, because as tech kind of accelerates its presence in many, many industries, we're going to see a lot of shifts.
No, absolutely. I think one of the biggest challenges today that India faces is not lack of opportunity. And I was in a investor summit yesterday where they talked about skill shortages. I corrected him. I said, it is not a skill shortage, it is an excess demand. We are a growth digital economy, and the growth digital economy always has a trailing edge issue of demand. And what we are seeing today, and we are seeing this whether it's in traditional IT, ITES, or we are in the other emerging new tech areas, deep tech areas, we are seeing that the technology workforce has to, in many cases, pivot, reskill, upskill, and also grow in terms of the overall size of the workforce. Our skilling ecosystem today in India has understood the challenge. The government of India has really created a collaborative model where higher education institutions, the IITs, the NITs, and the other universities, working with the ministry, working with the skilling ecosystem, are all now today focused on delivering skills, making it accessible for those who are already in the industry to reskill and upskill, for those who are graduating from college and wanting to get skilled. We are now encouraging dual degrees, we are encouraging degree with certification. We are now shortly going to launch a digital university which will allow a student who's in college doing a particular program, let us say VLSI engineering, he can do a dual degree through the digital university that can be, let us say, in something else that he is interested in. So we are now, this is a very serious goal for us, and our ambitions are not just about providing the workforce and about talent for our own startups and our own IT and technology ecosystem, but we think there is a bigger opportunity of talent from India being available to all of the innovation hubs around the world, because that is the current dynamics, because people are all short of talent. Everybody has an ambition to grow their local digital economies, and I think frankly an Indian engineer it should be in the ecosystem, whether it is in Japan or it is in Korea or it is in Iceland or UK or anywhere in the world, including the Silicon Valley and or the Middle East.
No, this is good. Raju, I'm assuming that you have maybe a few more minutes. I'm going to quickly maybe ask the audience to get a couple of questions in, maybe one over here and one over there, please. I'm going to quickly plug in one question before the mic gets to them. One view on fintech industry and financial inclusion and credit to a large sector. Right now, the amount of people who get some version of formal credit is very small. What's your vision around that?
No, look, Kunal, there's a long version, a long answer to this and a short answer, and since we're constrained for time, I'll give you the short answer.
Sure.
I think the fintech industry in India needs to be very proud of itself, because of the real transformational impact it's had on the age-old narrative of India of being a dysfunctional democracy. For years and decades, the story about India was there's lots of smart people, a lot of great people. We are a large market, large country. However, governments can never deliver. And that, that famous myth or the famous quote from Rajiv Gandhi, who was the Prime Minister in '85, who said, for every 100 rupees that left Delhi, only 10 to 15 rupees reaches the Indian citizen. So that was the go-to narrative about India for the most part of my young life, and I would suspect for most of your audience, their parents' lives, and that was the definition of India. This technology and that is truly the vision of our Prime Minister, that bringing in technology into governance, demolishing that narrative about India. And today I go all the time to have these schemes launched, and I have had the good fortune of sitting in a room with 1,200 farmers in Rajamundry and seeing or hearing all 1,200 phones go beep, 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 beep as the subsidy hit their accounts. And that is the journey that we have traveled, that is the distance we have covered through the power of Fintech and the power of UPI, the power of Beam, and all the other apps that are built around it. So I think there is something tremendously powerful about the way Fintech has been born in India, was born and conceived in India, which is that it was designed to serve the fundamental purpose of transforming an Indian far away from the center of government and transform his or her life. And I think given that that is how it was born, I think there is tremendous opportunity on what we are doing and what you are doing and hundreds of entrepreneurs are doing to address this issue of taking digital opportunities to the furthest Indian, bringing more and more financial inclusion, and by the way, again turning another age-old narrative on its head through formalizing workforce by increasing tax GDP ratios, by increasing GST collections and revenues for the government. Because the other narrative that the country suffered for decades was that we would never amount to much in terms of growth because the government never had revenues, because there was low tax compliance and almost certainly indirect tax evasion. And we are today seeing on the back of fintech innovation, an unprecedented health in terms of government revenues. Never before in the history of India have we heard of tax revenues exceeding targets by 25%. That has never happened in the history of 75 years of India. So to answer your question, sorry I took a long-winded way because this is something I feel passionately about. I think the fact that fintech really solved a real problem, an age-old problem for India, means that it has tremendous power to not just continue to do good for millions and millions of Indians all around the country.
Thank you so much for that. We'll take that question over there.
Hey, my name is Karan Agarwal. I'm the VP of Product at GoSa. It's a Bitcoin rewards application. My question comes with the backdrop of crypto businesses and protocols in India growing substantially in the recent past. This has been in spite of some bank reluctance or uncertainty in this space. The question is, how is the government looking to enable innovation when it comes to open blockchain networks, transparent blockchain networks, crypto, and the VDAs, because they come together. So how can this be, and are there some places that we can interact with the government for removing some of these uncertainties and moving faster?
Yeah, so look, in terms of interacting and consulting, you can reach out to my office anytime, and we will be more than happy to have groups of you engage with us, educate us learn from you, you learn from us. That is something that we do often, and if there is some forum that you want to use to engage with us, we are happy to do so. On the issue of the broader issue of Web3, I have said this publicly, and it's an absolute goal of the Honorable Prime Minister that we want to lead the charge into the future of the internet. We want to be out there on the round table when we talk about standards. We want to talk about the future and shape the future in a leadership role rather than just be a consumer of the internet that we have been for Web 1 and Web 2. So having said that, I know there is this dark cloud or whatever characterization you want to use around crypto. And that has less to do with technology and innovation and more to do with macroeconomy and the RBI, the central bank's views on the impact, good and bad, of allowing crypto into our overall macroeconomic framework. I would recommend, and I've said this publicly post-budget, this budget and the previous one, there are some issues relating to FEMA and using of gatewaying to crypto, dollar crypto, using FEMA, LRS. Those are all things that are the law today, and therefore there is no way that anybody should violate that. But to your more fundamental question about is there a role for crypto, what will be the nature and the shape and form of that, I think we should just be patient for a little bit longer. The RBI and the Ministry of Finance are really leading this conversation. We as the Technology Ministry have very clearly articulated that we believe in Web3, we believe in basically championing innovation around the Web3, including but not limited to crypto. But consumer access to crypto, the regulations around, macroeconomic regulations around crypto, those are issues that are beyond my pay scale, frankly, and I have a very disciplined and rigorous approach towards pay scales and not jumping above my pay scale. So we should just, my own view on this is, we will allow the Ministry of Finance and the RBI to navigate what is obviously a difficult sets of pros and cons before they finally come up with a framework that will define the rules of the crypto world.
Rajiv, I know I have taken more than your time. Do you have a time for one more question, or we should call it a wrap?
Yeah, we'll do one. We'll do one.
One question over there, please.
Hello, sir. This is Ekta from Z Business. हम बात कर रहे हैं टेक्नोलॉजी की, इनोवेशन की. यहाँ पर डेटा बहुत इम्पॉर्टेंट चीज़ है हर एक स्टार्टअप के लिए, बिजनेस के लिए, लेकिन उसका बहुत मिसयूज़ भी हो रहा है आजकल, जिस वजह से आम कंज्यूमर को बहुत सफ़र करना पड़ रहा है. सो व्हेन कैन वी एक्सपेक्ट द आईटी रूल्स और द डेटा प्रिवेसी लॉज, और किस तरह के वो रूल्स या लॉज होंगे?
नहीं, एकता जी, इसमें ऐसा है, आप जो कह रहे हैं एकदम सही बात है कि डेटा हमारे लिए, हमारे इनोवेटर्स के लिए इम्पोर्टेंट भी है, लेकिन डेटा के यूज़ के लिए थोड़ा डूज एंड डोंट्स का भी प्रिस्क्राइब करना ज़रूरी है, ताकि कंज्यूमर्स के जो राइट्स हैं उनको भी प्रोटेक्ट किया जाए. हमने पुराने पर्सनल डेटा प्रोटेक्शन बिल को विड्रॉ इसीलिए किया था क्योंकि वो बहुत ही ज़्यादा कॉम्प्लेक्स बन गया था, और प्रधानमंत्री जी का एक व्यू है कि हमें कंज्यूमर राइट्स भी प्रोटेक्ट करने हैं और स्टार्टअप्स और इनोवेटर्स को भी मुश्किल नहीं देना है. तो आप जल्द से जल्द आप देखेंगे कि हम एक डिजिटल पर्सनल डेटा प्रोटेक्शन बिल लेकर आएंगे. उसका कंसल्टेशन होगा, पब्लिक कंसल्टेशन होगा, स्टार्टअप्स के साथ होगा, कंज्यूमर्स के साथ भी होगा, सिटीजन्स के साथ भी होगा, और हम एक कंटेम्प्रेरी मॉडर्न ग्लोबल स्टैंडर्ड लॉ लेकर आएंगे. और उसी के साथ हम एक ओवरऑल फ्रेमवर्क को मॉडर्नाइज करने के लिए हम एक डिजिटल इंडिया एक्ट भी लेकर आएंगे, क्योंकि हमारा जो आईटी एक्ट है आज के दिन वो 22 साल पुराना एक्ट है, और ना तो वो स्टार्टअप इनोवेशन इकोसिस्टम के लिए ऑप्टिमली डिजाइंड है, ना कि कंज्यूमर राइट्स को प्रोटेक्ट करने के लिए. तो आप जैसे वो हिंदी में कहते हैं, आगे आगे होता है क्या, आप देखते रहिए. स्टे ट्यून्ड.
Rajiv, thank you so much for being there. Would have loved to see you in person, but hopefully soon. On behalf of GFF, thank you very much for this, for your openness and transparent views, and hope to see you soon. Thank you so much.
Thank you. Thank you, Kunal. Thank you very much.
Thank you very much, Kunal. And We'd also like to thank Sri Rajiv Chandrasekhar for sharing those transformational and, as Kunal had mentioned, those transparent views. That being said, well, I'm sure there are a lot of conversations you'd like to take forward, but I'm going to request everyone to please be seated, as we also have a very special address coming in from Mr. Nikhil Sawhney, Division President, South Asia and Country Corporate Office, India, MasterCard. So I'm going to request everyone to please be seated so that we can get the next session started as well. As we all know, we're going back to back with the conversations, so I'm going to request all of you to very quickly take your seats. I can see that movement happen here and there, but in order to respect the time, I'm going to request you all, please take your seats, and then I could invite our next speaker on the stage. I believe since morning we've been witnessing some really open conversations and some very transformational insights from all of our speakers so far. And I hope all of you are having some wonderful takeaways. But that being said, we have some more interesting sessions lined up, a lot to gather over here at the GFF 2022. So let's keep that knowledge sharing continuing for the rest of the sessions. And that can only happen if everyone can take your seats. All the ones who are also standing next to the exit doors of the hall, I'd like to request you to please very quickly take your seats. Well, I do realize it's that time of the afternoon where our thoughts are on food, but let's continue getting the food for thought as well from our next set of speakers. And for those who've been enjoying the session so far, those who've been learning a lot from these sessions as well, keep those tweets coming using hashtag GFF. All right, so with that, I'd like to now invite on stage none other than Mr. Nikhil Sawhney, Division President, South Asia and Country Corporate Office, India, MasterCard, on creating an inclusive financial world that is global, growth-oriented and secure. So first up, all the ones who are seated here, can we have a huge round of applause? Thank you so much for that energy, and let's gather some more insights from none other than Mr. Nikhil Sawhney.
Thank you. It's on, okay. Thanks so much for all of you who decided to stay back. It's great to, kind of be here. And of course, talk about a topic which is, I guess, very, very close to the way we work in this entire setup today, which is about inclusion. It's about an inclusive growth, which is about how exactly can we take India to the next level. And I think there was a fantastic session with the Honorable Minister just now, which has given some sort of a cue to us on what exactly is it that we need to do. So maybe getting a little bit back to basics, first and foremost, the Honorable Prime Minister yesterday in his opening remark talked about Amrit Kal, which is the next 25 years, which there is an expectation that there will be a complete transformation in the way India behaves. And just seeing a few cues from the newspapers that at least I pick up today. So very, very interestingly, the International Finance Corporation Managing Director, Global Managing Director was quoted in the papers today saying that they want to increase their lending to India, and they want to double their lending to India from about a $1 billion level to about $3 billion, or rather it's a 1.3 to a 3 billion over the next couple of years, which effectively tells you that if the largest institution that does private sector lending from a World Bank standpoint is that interested in India, something must be right. Of course, the fact that we are now the fifth largest economy, or rather fifth largest economy in the world, is also something to be very proud of. So from a digital payments perspective, obviously MasterCard Payment Index indicates that in the last 1 year, 90% consumers have done one digital transaction. Digital is on the move. Of course, numbers from a UPI perspective in India are staggering. And I think something that has truly been created in India is something that all of us have to be proud of. But I think the fact of the matter is that through regular communication, and I think there is a trust factor that we need to still develop in the ecosystem. So I think what UPI has done over the past many years, as I said, it's great, but the fact of the matter is it's about building more trust into the ecosystem. And the trust, if you look at okay, I would not showing two circles on the logo of the company that I represent, but this is what the whole world used to know as trust in India, which was the SBI logo. I'm just trying to make it very simply. And building that trust from a State Bank of India perspective took years. Today, our ecosystems are growing so fast, and that trust is something that all of us together with initiatives the government is taking, such as Digital India, Genesis, Digital India Bhashini, will be initiatives which take us to the next level. Of course, we have run, so we are basically moving from maybe digital inclusion, I would possibly say from digital inclusion to inclusive growth, or possibly in some pockets it's moving towards digital well-being. And a classic example of digital well-being for India at large is that India ran the largest COVID vaccination program in the world, which was completely digital. I know of people who visited us from the US, where it was a completely paper system in terms of recording the vaccination. So I think India is moving very strongly towards digital well-being, but what are the next major steps that India needs to take to really ensure this inclusive growth as well as financial well-being or digital well-being? I think the steps are two. I was just now with the RBI Innovation Hub CEO, Mr. Rajesh Bansal. There is some, for those who are not aware, there is a digitization of the entire Kisan credit card, which has happened in partnership that they've done with 2 banks, which allows a loan to be disbursed to a farmer in 5 minutes. That's the sort of work that is happening, and that is the innovation that all of us have to look at, creating such competitive business models which are actually commercially viable, and that is something that RBIH has shown can be done. So I said, in terms of inclusive growth, the 2 sectors which possibly drive the economy and are bigger than anything else are the MSME and the agri sectors. The agri sector, there is a fair amount of work, but going back to MSMEs, the biggest problem to solve for the MSMEs, whilst there's been work on the digitization side which has got them onto platforms, the biggest issue with the MSMEs is it's a fairly well-researched topic, a $400 billion gap. These numbers might be a little, $400 billion credit gap. These numbers might be a little dated because the pace with which Indian MSMEs are growing, this number might have become 450 billion for all that you may know. We address 25% of this gap. We have studies from MasterCard's Economics Institute which prove that a 25% addressal of this credit gap can add about 1.9 to 2.6% of growth in nominal terms to the GDP. So just trying to give a sense of what is the scale that one can achieve and how does this happen? Of course, there are initiatives that the government is taking through OCAN, the account aggregator model. But the fact of the matter is this has to be predicated through supply chain led credit models, which is where we pick up corporate anchors who would want their entire supply chain to be funded. There are corporate anchors in this country who spend zillions on keeping their entire supply chain happy. But the fact of the matter is that there is obviously propensity to be able to invest, to be able to get these MSMEs the kind of credit that they need and not having to depend on NBFCs which charge them crazy sorts of interest rates when it comes to MSME. So I think supply chain led financing is the answer, but there is a whole lot of work that will need to happen from all of us combined together. Now, for example, the open network for digital commerce that is coming up, and the Honorable Prime Minister earlier last week announced, or rather earlier this week announced the National Logistics Policy, which again will give an impetus to fintechs to see how these supply chains, what problems in these supply chains could be solved through the interventions that are coming from a policy standpoint. So I think that's like one of the most critical parameters for us to be looking at. Some of these policies, they'll come in, there are opportunities. For example, ONDC will democratize retail commerce completely. Retail e-commerce will be completely democratized. The concept of scale or access to scale will possibly not be a thing of the past. It will never, so you will get a level playing field, and of course then you get access to transactional data. And there was a report that Niti Aayog did on connected commerce where they called out that AI, ML, as well as basic transactional data can be utilized for adding value to the credit on the MSME side. So I think credit to MSMEs is possibly the first aspect, as I mentioned. But as I said, fintechs will need to create solutions which are commercially viable. So Travis Kalanick, if I remember, when the Honorable Prime Minister had introduced the Startup Mission in January of 2016, Travis was speaking at that forum and he had said, they try and solve a problem which is as complicated. So the more complicated a problem you solve, the more commercially viable it will be. So potentially we'll have to look at these aspects of the entire ecosystem, which make sense for everyone to, therefore invest and contribute. I think the other aspect with the proliferation of digital growth that has happened in India, and not just in India, it's happened across the globe. I think one of the other things is, as I mentioned, that as an ecosystem, we need to do a whole lot to build trust in the ecosystem. And when I say building trust in the ecosystem, it is about a very, very significant risk which is looming in our, as far as all of us are concerned, which is the cyber risk. So I'll maybe take an example. When we look at cyber risk, we possibly only think from a consumer's perspective. The Honorable Minister was also alluding to, a lot of stuff that is happening on the consumer side, but maybe on the enterprise and MSME side, there is much more that fintechs need to do. I'll give you an example. May 6, 2021, there is this company called Colonial Pipeline, which was hacked, which is actually the company that imparts, fuel from the western side of the US to New York. And there was a shortage of fuel supply in New York for about 5-6 days. And the government had to pay hackers 75 bitcoins or about $4.5 million to get the hack out. Fundamentally, what I'm essentially trying to say is that today, this risk is not only pertaining to organizations that are only in the digital space. Everyone is in the digital space. So if you're a manufacturing organization that is in the digital space, you are going to be a part of this entire cyber risk piece. So the Colonial Pipeline is only an example. There are many others in India. In fact, there is a cyber attack that happens across the world every 11 seconds. So that's the sort of proliferation of cyber risk that has come into India. The government is doing its bit in terms of creating a national cybersecurity strategy, which is going to be launched. It's going to be a 5-year plan. It's in the making for some time. It will be announced. India is also creating a, I think, malware repository where there is more work that is happening on the cyber side. But I think as an ecosystem, we need to realize the importance of cyber risk. And cyber risk, as I said, is about enterprise. So which is where from a policy standpoint also, we have to push the entire ecosystem to invest in cyber risk or invest in products and services that prevent cyber attacks. I think that is something from a policy standpoint that needs to now happen, because that is when people will start to understand. So it's like, if you are an enterprise which is in a regular business and you get hacked, that cyber risk is actually a problem onto your bottom line, because it will disrupt your business model in as significant a manner that you can think of. So to that extent, cyber to me is possibly one of the biggest, and the regulator's intervention on the cyber side, if you look at it from a consumer perspective, has been fantastic on the tokenization drive that many of us, put together in this room are trying to put together and take forward. So, which is where, I think the entire piece on maybe MSMEs at one side and cyber risk on the other side are initiatives that fintechs could possibly look at, given the fact that these are very, very solid areas where, you'll get to your unicorn status also in course of time. When I used to be a kid, I used to think it was only a mythical character, but that's how dramatically times have changed. So you want to only talk about such stuff. But the fact of the matter is that if there is a specific problem that you can solve on these two sides, and MSME too, if it's a $450 billion gap, and if we can somehow solve for it, so from a digitization perspective, we've got MSMEs into the net. So I think in summary, what I'd say is that if India has to truly move to an inclusive setup which truly is financially included, digitally included, I think the next wave from our side has to come on the MSME credit side, on the agri side, and of course on the cyber risk side. I think that is what will take us into the next 25 years as a country which will possibly be noted and noticed across for having done initiatives like UPI, for example, and many others like ONDC. I hope ONDC is actually a first. When you discuss initiatives such as ONDC with people across the globe, they actually believe that there is nothing of this sort that has ever happened. So democratizing this has been a fantastic, I think, initiative. And we look forward to seeing how we can, make a deeper impact on all of this. Thank you so much for your time and all the best. Cheers.
Thank you very much, Mr. Sani. Thank you indeed for those wonderful insights and also some interesting examples. We managed to gather a lot from your presentation, so we'd like to thank you again for joining us. And with that, ladies and gentlemen, we're also going to get up for another interesting fireside chat on cross-border payments. Now that session will take place in another couple of minutes, so we're going to request everyone to please be seated before we invite our next set of speakers on the stage. So we're going to request everyone to please be seated. We'll get the session started in the next couple of minutes. Thank you. All right, ladies and gentlemen, we're about to get started with our next trialogue, if I may put it that way. So I'm going to request everyone to please be seated so that we can indulge in another very, very pertinent conversation around changing cross-border payments and how digital transformation is actually doing that, creating a revolution in the making. So we're looking forward to this really important conversation in the form of a trialogue taking place right here on this stage. I'm going to request everyone to please very quickly take your seats. Thank you very much. And with that, as we're about to begin the conversation, as I had informed earlier, it's going to be a trialogue. And spearheading this trialogue, we have with us Paroma Chatterjee, the CEO, Revolut India. And let me please invite Paroma on the dais. And joining her, may I also please invite Shri Amitabh Khandelwal, General Manager, Reserve Bank of India, to please come on the stage. And may I further invite Rishi Chhabra, Managing Director and Country Head, Fiserv India. Can we have a huge round of applause, ladies and gentlemen? Let's bring that energy back in the air and let's gather those insights from all of our speakers here. A very interesting trialogue spearheaded by Paroma Chatterjee. So Paroma, I'm going to hand it over to you then.
Thank you. Is the hall filled up or are we expecting more people? No worries, we can get started, shall we?
Yes, please.
So I think those of you who've been in the hall for the previous session, you had an exhilarating session from Nikhil Sahni, the country head of MasterCard, on financially inclusive world. And we're going to take on from there. When you talk about financial inclusion, true financial inclusion is actually borderless financial inclusion. It includes people who are outside the borders of our own country as well. And that's the theme of our session, which we will be discussing for the next 20, 25 minutes. A revolution in the making, how digital transformation is changing cross-border payments. Talking about revolution, I'm Paroma Chatterjee. I'm the CEO for Revolut in India. And we're building a seamless digital and borderless banking and payments platform, which has been successful in 39 countries globally, and now we're bringing it into India. With me, I have Shri Amitabh Khandelwal, who actually needs no introduction to a lot of people here. He is the General Manager for the Department of Payment and Settlement Systems, DPSS, that a lot of us keep engaging with at the RBI. And prior to that, he has been with the government of Chhattisgarh in institutional finance. So his 2+ decades in regulatory and policy making is highly enriching. And over to you, sir, if you want to add anything by way of introduction from your 2 decades in this space.
Thank you, Paroma, and warm good afternoon to all. It's not that warm though. Okay. So just, she has already summed up, and I think when you are working in with a regulator, that itself becomes the introduction. So I am, personally, there is nothing more to add. Only thing is that I have been in this payment and settlement systems department for last 6 years. This is 6th year. So have been interacting with many of you, and right now we are working on cross-border thing, so this seems to be very relevant to me. Thank you.
Thank you, sir. As the Honorable Governor of the RBI in his address yesterday, Mr. Shaktikanta Das said, the regulator says some things and leaves a lot of things unsaid for us to hear. So we look forward to both the said and unsaid things from you, especially when it comes to cross-border payments in this session. And on my right is Rishi Chhabra. He is the MD and country head of Fiserv. He brings with him rich experience in the payments and financial services space globally in the US and in other countries. And with that, Rishi, over to you to add a bit by way of introducing yourself as well.
Thank you, Paroma. Appreciate the warm welcome. Great to be here. We are sorry, guys. We are between some of you and lunch, so apologies for that. But it's great to be here. Fiserv, as some of you may know, we operate in 100+ countries, right? And cross-border payments is very near and dear to our heart. We try and solve this problem in many, many countries. And Paroma, it'll be interesting as we speak, right? The problem is common. It's not limited to India. It is very, very common globally, right? And Latin America, Europe, APAC, we can keep speaking about it, but it's a very challenging problem that we have globally today. It's a great topic that we're going to spend some time on it. So again, thank you for having me here.
Great to have you, Rishi. So as we begin, I want to just set the context with the current landscape of cross-border remittances in India. How many of you know how much outward remittances we do? Last year, we did $19.6 billion worth of outward remittances from India. And do you know how much we do as inward remittances? $83 billion. So the 83 plus 19, close to 20, $103 billion worth of remittances outwards and inwards put together makes India one of the largest global markets for remittances. Not just that, since 2016, for the last 7 years or so, this market has been growing at a rate of 8% CAGR, year on year. And if you look at specifically just the last year, there has been a surge, particularly in outward remittances, which has grown by 61% in the last 1 year itself. That's the amount of volume of remittances that happens across the border, with a lot of Indian diaspora living abroad, sending money home, as well as a lot of Indian students going for education abroad, going for health, medical reasons abroad, and a lot of money flowing across the borders both ways and growing rapidly. In that context, the four main problems, as we have seen, are: one, the problem of cost. To be able to seamlessly transfer money in and out of borders at the least cost possible. The second is security, to ensure the transactions are secure as they cross the border. The third is time, the sheer time that it takes to send money and for the recipient to receive it, especially in time-sensitive situations. And fourth is transparency, for somebody to actually keep track of their money as it is crossing the borders. Now, with those problem statements, and here I would invite Shri Amitabh to share his thoughts on how are you as a regulator looking at these problems that the Indian consumers and the diaspora face, and what are your thoughts on the kind of solutions that you can think of which would enable solving these problems and making both inward and outward remittances more seamless?
I think you have summed up all those four issues which are associated with cross-border transaction. And cost as such is very important for us. As Paroma was telling that the volume of remittances that we do, inward and outward. And as per a 2021 report of World Bank, now it's $89 billion is what the inward remittance was there for India. So just think of a scenario where you are spending, say, 10% of that as cost. So almost 9-10 billion is what the Indians sitting outside, they spent on sending money to India. And if we can halve it, we will save 5 billion. And that is huge. So definitely there is a case for looking at this aspect, not only from the charges perspective, but also, as yesterday also there was the one point which was coming up from the talks of all the speakers is that we are the world leader as far as the payment system is concerned. So we consider payment system to be a public good infrastructure, and that should not be limited only to India. Having done all these things, good work domestically, it's time to take it globally. Not only for our own people, but also for other people. So what we are doing as of now is that we have many countries which are having fast payment system in place. We have UPI, everyone knows that. So we are working on interlinking those fast payment systems so that the other issues that Paroma was telling that are also taken care of instantly. So she was talking of transparency, like where my fund is. So that question will be there only for 2 minutes. In 2 minutes, the sender will know that fund has reached. So that will take care of many aspects, many of the risks which are there, say the forex risk or the settlement risk and all those things. So we are working on instant payment, and that is the way to go today. With Singapore, we have already announced, it's publicly announced that we will be interlinking it, and very soon we will see the first transaction also there. We are in talks with other jurisdiction also, and hopefully by next year we will have many more such arrangement wherein the Indians can send and receive money over the fast payment systems.
Well put, sir. You spoke about how we're enabling a lot on the inward rails, and even cross-border UPI was launched yesterday, as a matter of fact. And you spoke about reducing the costs, where the 10%, if it comes down to 5%, obviously it's $5 billion saved for the Indian consumers. Coming to outward remittances, sir, do you actually think that the digital companies, by bringing in a transformative way of sending abroad, can solve both of these problems of cost by offloading the entire infrastructure of physical branches, paperwork, etc., and digitizing that to eliminate the costs in the first place, to make it sustainable for both the consumers and the processors? Any thoughts on that outward topic?
Yeah, definitely for consumers, as I told, that it will be beneficial because this will bring the charges down, and also the transaction will be instant. And it can be done as seamlessly as a domestic transaction. It will be like you open any UPI app and just make a transaction as we do as of now for domestic purpose. Obviously, it will take care of that. But your other issue is mainly, if I get, you were telling that the regulator says something, and without saying also they convey something. That is what I think you are conveying. Without saying in a straight thing, she wanted to know that what about the processors, how their paperwork and their regulatory requirements can be met. So definitely we are looking after that also. And the technology, as you are telling, technology is something that can take care of this also. And till maybe 1 or 2 years back, no one has thought that there can be instant fast payment based system with all the KYC check, all the screenings, all AML checks being done on the go. We are working on that system. Right now, when we are working with Singapore, we don't have fully convertible currency, so there are restrictions. We are taking care of all those requirements, whether it's screening, whether it's the limits, and this will make the life of even the processors also very easy, the banks, the other participants, the other stakeholders. So we are working on that.
Thank you, sir. So would it be fair to collectively say that it's our ambition that the way we seamlessly send money to another person in India instantaneously, we would hopefully soon be able to enable sending money to anybody abroad with the same degree of seamless ease and experience? But on that, it's not that simple. If you think about it, it's also subject to technological readiness at different points, right? The country of destination, the origin country, and all the jurisdictions that the money flows through in the process. On this, from your experience, Rishi, in various countries, how would you think it's best to collaborate and leverage the infrastructure that is available in various countries to offer customers what comes across as a unified, seamless experience as money changes borders and changes hands from its origin country to its destination country?
Yeah, great question, Paroma. And Charles Darwin once said that the strongest wouldn't survive, the intelligent wouldn't survive, but the one who's most flexible to change is going to survive. And I think what we're seeing is stuff is changing on a regular basis, right? Nothing is permanent. The consumer needs have changed dramatically. Go back 10 years in time, right? Consumer was happy sending money from a bank account to a bank account, waiting for 4 days for the money to move, not okay, didn't know how much they're going to pay for it, what dollar rate or what euro rate the conversion would happen, right? Today, the consumer expects transparency at every step in the process, right? They want choices. Just in Asia Pacific, right? We have over 100 digital wallets that are enabled today from a payments perspective, right? If I'm a consumer in country X and I use one wallet, and I'm a consumer in country Y and I use another wallet, my expectation is my wallet should work for that transfer, right? So it's the problem statement is much bigger. I think our consumer needs have changed dramatically. I think ultimately to what all of you all said before, right? Technology is the key enabler. Countries, folks, systems, processes who can integrate the technology in the best possible way will be the winners, who understand the regulations in different countries, understand the compliance norms in different countries, the KYC norms, the AML norms, and so on and so forth. The good thing is in today's world, with real-time APIs, microservices, there are a lot of the information you can do in real time, which enables a lot of this. Historically, you couldn't do that, right? Historically, as I said, you were subjected to a transfer. I lived in the US for 20 plus years. If I had to transfer money 10 years ago, it would take me 4 days to transfer money. And that was the reality, and there were no options. Then you have other companies who came up with money options to move money. But even within those companies, they started with one currency or two currencies or three currencies or four, right? The key is to solve a lot of these corridors, not one corridor, right? And every corridor obviously has its own challenges. It's not easy at all. But I think all the innovation we have seen within India, outside of India, I think the problem is very well recognized. And everybody is focusing on this as a next big bet, that they have to go solve this problem, right? Just the way three of us is having this conversation, I'm guaranteeing you multiple such conversations are happening in the globe at the same time, right? I know companies I've worked with who are just solving the US to Latin America challenge. Imagine Latin America has multitude of currencies, not easy, very big corridors, US to Mexico, US to Brazil, right? Trying to solve those corridors itself was a big, big challenge, right? So I think technology, advancement, adoption, infrastructure, being very assertive and understanding of the regulations in the original country, the destination country, and then obviously using the latest technologies is the key to move forward.
Very well put, and thanks for that perspective from different countries, Rishi. Yeah, you're right. Because of the kind of challenges that we've faced, even someone like me, like who's got cousins abroad, I would still think of doing a cross-border remittance only when it comes to a significant, life-changing, high-value transaction, like sending my kid to study in a college abroad, or if my parents, God forbid, had to be operated in a country abroad. But I don't think about just sending my nephew 10 pounds as a birthday gift, because it's not as seamless. So it hasn't got into your regular day-to-day life yet. But with India and the globe becoming a common place and India getting globalized, I think we need to evolve in that direction. And as you rightly put, Rishi, the countries that have the most flexible partnership between industry and regulators to make it happen will see the most seamless transition digitally. Absolutely. But there's another interesting angle to this which you touched upon, Rishi, which is the compliance aspect. It's not just technology. There is another complexity, which is each country has its own AML KYC norms. It has its own data privacy rules. It has its own data localization norms. Any thoughts from you, sir, on how regulators and cross-border regulators can maybe partner to create a seamless way of creating common AML, KYC, or compliance rules, or localization guidelines, or privacy rules, so that these don't have to be customized country by country, but a more seamless way of managing the regulations?
Yeah, I do understand that these are pain points whenever we talk of cross-border remittances. But from a practical perspective, I don't see that there can be a common ground where we can say that, okay, these standards will be applicable across the globe. I don't think that will be any time possible. We do interact with other central banks through CPMI or BIS and all those. We participate in the committees. And this is the common issue which comes up. But let me tell you that when it comes to sovereignty, all those things takes the back burner. Just take the example of what has happened in Russia with SWIFT. So that is where you have to live with the reality. You cannot simply, it can be a wish, but practically it is not possible to do away with that. And that is where we think that the UPI and Pay Now linkages that we are working with Singapore, that will be an excellent example, because as I was telling that both the countries are not having fully convertible currency. We, on our part, there are so many checks required. For Singapore, it's okay, it's easy. But still we are working on it and finding a way that how we can ease these transactions as also comply with the requirement. So this is where the technology will play a very important role. That will be totally API-driven systems that we are working on. And believe me, it will take care of the compliance requirements also.
Okay, understood. So in your view, uniformity of regulations or norms is still a little distant, but we can look to those of our friends, your award-winning RegTech companies like Hyperverge, Bureau, who won the awards yesterday, to look to you to create more seamless APIs and technology to be able to integrate the differences in the nuanced KYC, AML compliance norms across countries to make it easy for processors and consumers to avail of that. On that note, Rishi, any specific best-in-class examples that you may have from your experience that you could share with us and the larger audience here of where the industry, processors, regulator, and tech providers have come together to create what you would have seen as potentially the best cross-border customer experience?
Yeah, I think Europe tried to do this about 8-10 years ago, right? They created the single euro payments area where they wanted obviously banks, the financial institutions, the banks, the fintechs, all to work together to help seamlessly move money within the euro borders, right? It kind of worked because the currency they were solving for was one currency, right? So even though it was across countries, it kind of did the job, but it was in the back of one currency being the underlying factor, right? Again, in today's world, that problem is much bigger and deeper with the multi-currency world that we live in, right? The good thing is that our logistical and technological challenges have been solved in today's era, right? Shipping goods globally is no longer a problem, right? Somebody wanting something sitting in the US from India, not a problem anymore, right? So logistics has been solved, technology has come to the party. The challenges, and I think what Sir said, right? How do you get some of the regulations across different countries to be similar? How do you get some of these norms to be similar? And multi-currency is always a much, much bigger challenge to solve than just single currency like euro. Again, all due respect to what was done there, good stuff done there, but I think the problem statement was much smaller at the time, what they solved for. I think if you think of Asia Pacific, even forget the US for a second, or you forget Europe for a second, if we just want to make sure we can solve this problem statement in Asia Pacific, we have to figure out the multi-currency transparency at the point of purchase, at the point of sale, to be extremely clear, extremely secure, extremely vigilant, and fast, as you said, right? And I think there are a lot of companies and fintechs like yours and others who are trying to work in this space, right? Who want to solve the problem because it's really a problem they want to solve. So I feel Asia Pacific is best suited to solve the problem because the customer experiences and demands are changing. Problem is well recognized, potential is well seen, and now I think all the sharp minds in this room beyond are working to solve that problem. It will take time. It'll be country by country, corridor by corridor, but I think the problem will get solved in years to come.
Great, thanks. Yeah, and we at Revolut have been doing this across Europe and have contributed to make cross-border transfers, at least across Europe, very, very seamless, and that is what has enabled us to get such a huge market share in that country as well. And now we are here to try and solve this area in India as well. But while you touched upon the fact about a common currency obviously being an enabler, the other thing that I wanted to ask you, sir, is how important or the role of a digital identity to enable this entire ecosystem. What would be your thoughts on that?
If we are talking of international cross-border transaction, I don't think that digital identity plays that important role. Domestically, yeah, having a digital identity has helped us to leapfrog our payment systems, how we transfer funds from one account to other account. But you see, when we are talking about cross-border transaction, we simply require an identifier, nothing more than that. It can be anything. Like if we talk again, I'm referring to UPI Pay Now project, then UPI VPA will be the identifier which the remitter from there will enter. Underlying how it is linked to the bank account, that is a totally different thing, and that resides domestically. Nothing to do with the cross-border transactions. The digital ID comes into effect only when, suppose we want to use Aadhaar as the identity for sending money from outside, or we want to use any such similar type of identity on the other side for that purpose. But ultimately, it can be anything. We do transfer cross-border transactions happens through bank account number and IFSC code also. So I don't see that it is so critical as far as cross-border transactions is concerned. Having rails and having an identifier is sufficient.
Okay,
Sorry, Paroma, just add one thing to that, right? If you don't mind, which is, unfortunately, still the highest decline rates that we see of fraud rates are still in cross-border, right? There's a lot of mistrust in the system. Genuinely, whether it's in the banking side, acquiring side, there's just a lot of mistrust on that leg of the transaction, right? I think some of the challenges are like some other countries may not use a second factor authentication. OTP may not be something prevalent in some other country, right? Then how do you tap into address verification systems? How do you tap into geolocation systems in real time, right? That the person who's making the purchase, this is the address, it matches what address I have on the credit card statement on file, right? How are you making the checks in real time? So you kind of get away from a second factor authentication like OTP, but then you go using other methods, right? Because unfortunately, there's a bias that if it's an international transaction, fraud is very high, right? So systems are such tweaked that always the intent may not be that, but always the underlying result of that is that there's more fraud or there's more decline rates that typically happen in international transactions.
Got you. And with that, we're getting a beep saying time is up. I hope you all had something to take away from this little bit of engagement that we had. Do we have time to take any questions? Okay, I think, yeah, but I think we will be available outside for anybody who has any questions or anything to discuss with us. Feel free to connect and reach out. Thank you so much for all your attention and for being a very patient and understanding audience. Thank you.
Thank you, Paroma. Thank you, sir.
Thank you very much, and thank you very much, Paroma, for beautifully moderating this particular trialogue. I'm going to request everyone to come together for a group photograph. And I know we managed to gather a lot of thoughts from this particular session. There would have been a lot of questions from our members of the audience. Unfortunately, as we have to jump to our next session, which is why I'm going to urge our members of the audience to please connect with our speakers for any further queries. Thank you once again. Thank you very much, Paroma. Thank you, sir. All right, so what we're going to do is take just a minute to set the stage, because now we are trying to focus on another very, very pertinent topic, something that we have all been witnessing over the last just few years. I do realize that we do see that when we talk about the new age startup founders across fintech, they're the ones who have been spearheading a lot of financial inclusion along with a lot of financial conversations. And these new age companies will be joining us right now as we focus on something that they've been part of and creating for us, which is the Naye Bharat Ka Fintech. It's time to bring them on board as we set the stage for a very, very interesting discussion lined up your way. So I hope all of you are seated so that we can grab some interesting thoughts coming in from these young guns as well, if I may put it that way. So yes, as we're talking about the Naye Bharat Ka Fintech, the kind of revolution that we've seen across the last few years, let's try to gather about all the change that's been happening. In fact, our previous speaker, Mr. Rishi Chabra, also mentioned and quoted Charles Darwin in terms of it's the flexibility to change that allows us to survive and thrive. And this flexibility to change has also ensured that we come up with new ideas. It's given birth to new ideas as well. So that being said, let's quickly get the panel discussion started. And to spearhead the discussion, we have with us none other than Mr. Dilip Asbe, Managing Director and Chief Executive Officer, National Payments Corporation of India. And joining him on the stage, let me please invite our set of panelists as well. We have with us Amrish Rao, CEO, Pine Labs, Rajan Bajaj, founder and CEO, Slice, Sambhav Jain, founder, FamPay, and Harsh Jain, co-founder and COO, Grow. Can we also grow into a little round of applause? Come on, let's talk about the new age entrepreneurs here representing Naye Bharat Ka Fintech. That's some energy that we're definitely looking forward to. I'd like to hand over the proceedings to Mr. Asbe. Dilip, over to you then.
Yeah, this works?
Absolutely, sir.
So hi guys. Post-lunch sessions are always difficult, but I hope you all are awake. We'll start. So I think we have these great founders. Most of them are unicorns, or some are getting to unicorn, right? So, and variety of age groups, right? Sambhav, you start with you're 25.
39.
39.
29.
29. And let's decide our age.
Same.
Similar.
Yeah.
Similar.
Both of you are teenagers.
Trying to be. So, you know what, let's start our panel, and starting with you, Amrish, and maybe all of you can chip in. What makes you believe, or what makes you bet on India? And at the same time, what makes you nervous?
Yeah. So Dilip, as you know, we've been at this whole fintech wheel for so many years. And for the first time, we have a situation where the Prime Minister of India is ready to be the brand ambassador for fintech and for payments. I think that has not happened anywhere in the world, where you don't have a movie star promoting an industry. You have literally the Prime Minister promoting the industry. So I think government support right now is very good. So that's point number one. I think point number two is we are in a very unique market where infrastructure is being developed by government-like bodies. So I'm not saying by the government or RBI or NPCI, which are three different kinds of entities. I'm saying government-like bodies. Anywhere else in the world, if you're a fintech, you actually have to go and build pipes into banks, into merchants, into the entire ecosystem, and then build applications over and above that. Here, for example, if you're a fintech entrepreneur, you have UPI readily available. So you don't have to go and build the pipe or repeat the pipe. The same hopefully will happen with ONDC. It's happening in health and health-related activities. I think that's a very interesting model of public-private partnership. We've heard of public-private partnership when it comes to roads. But today I'm saying in fintech, it's the best example of public-private partnership, and it's doing extremely well. So that's all
the plus.
Yeah, which
that's
is
a
all
plus.
the plus. Just one other plus is, as entrepreneurs, you want to create something of high impact. You want to see the infrastructure of the company growing, country growing. You want to bring investments into the country. We think we are playing a small role, and that keeps us motivated every day. So that's the positives. The negatives, and I've said this many times, that if the government does not know your industry, you should feel bad. But if the government knows your industry, you should be downright scared. And I think what is now a scenario is, I think we are in a time where the government is taking a lot of interest into the fintech space. Sometimes it can be good, but sometimes it can also be a little bit difficult. And I think we will go through some of those difficult years for the next 2-3 years' time as course correction happens.
Correct. Okay.
Last point. Per capita income. I don't think so the per capita income is growing at the rate that we founders would like to see. We have very small role to play in that. But I wish the per capita income continues to rise a little bit faster than where it is.
Agree. Rajan?
Dilip, the phone that we are using in our pocket or the internet that became super low cost in India, or we are able to order food very quickly now to our homes when we want. These are products being built in India in the last 5 years, 10 years, and they are accessible to us suddenly. And the force behind this is the entrepreneurs and the teams working to make that happen. So what I'm really excited about is the large number of people who are working on startups, who are entrepreneurs, who are working in their teams, and the large number of people who want to work in startups and who want to start their companies. I really believe in the entrepreneurs of this country, and I'm very excited about where the country is going because of that, because we are second to none in the number of people who are working on these products.
Yeah.
I'm not nervous about anything at all. I feel that we all are super lucky to be living in this time.
Absolutely.
This age, at what we are doing. Only thing, if I have to add, if something we can improve upon, is collaborative working. Like if a Pine Labs does something, or a Grow builds a great feature, or FAMPE does that, I really feel proud that, okay, this experience has been built in the country. Now, maybe we can also build that by getting inspired from them, or many customers will come in and use those features, and they will eventually use our products also.
Agree.
I think that can be a bit more.
I think NPCI also can play a role in the collaboration.
NPCI is the mother of everything that we could have expected.
No, I didn't tell him to say that. No? So, Sambhav, from your side, what do you think? Plus, what makes you nervous?
Everything that Amrish and Rajan have said, but in addition to that, what makes me bet on India is, of course, we are a growing economy, and all the progress and growth we have seen in the last few years has been incredible. Especially the opportunities and how the ecosystem has grown to support young entrepreneurs like us. Like we just started when we had just graduated, and we were trying to build a fintech, which is, of course, building a very serious business. And the ecosystem was very supportive, whether we approached the banks, or I remember it was just, I was just 2 months out of college, and me and Kush approached you, and you spared 1 hour just to spend time on understanding what we were building. So the kind of ecosystem that we have created is what really makes me bet on India. If I have to talk about what I'm nervous about for India's future, like there's actually nothing, because we are the ones who are building it.
Okay. Harsh?
So let me give a little, maybe more consumer perspectives. What I think, why I would bet on India is like, today if you see there are like 300 million middle class people right now, and the pace at which they're growing, there'll be probably, next 5 to 10 years, 500, 600 million. And if you look at traditionally, we've been very, very good. Like for ages, we have done just one part of the financial ecosystem, saving. So inherently, we are good savers, right? We've been saving. Indians are known for that. And now what the last 5 years we are seeing, 5, 7 years, is the trend of investing, whether it's a card or UPI, you've seen like 200, 300 million people, or it's investing, or it's borrowing. So many more things now started happening, but still the penetration is very low. So I would bet on India, everything. I came from US, and now I'm in India, and I would really love to build more and more products. But I think that's one thing which will keep on going for another 20, 30 years, where we'll continue to see the level of growth which is not seen in any country, because there's just a lot of people who have a lot more things to explore and engage with.
What makes you nervous?
Nervous, I think, on the contrary, in the last 10, 12 years, we have seen only the rosy picture. Nobody has seen the real, downside, whether it's about the market or is there any fraud or anything, that can go a massive scale. If you look at like 50, 60 years, and if you look at maybe 100, 200 years of history of the, say, developed economies like United States and all, there are a lot of cycles, and every cycle puts you back or slows you down for 5, 10 years. Fortunately, we haven't seen, and the optimism is that we will not see, because of so many factors and being at the right time with the right product. But that's something that can happen anytime. We will never.
Understood. Thanks, Harsh. So Amrish, while this now global slowdown is hitting us, recessions are hitting us. I don't know what the Fed is going to again hike. So how do you see India? You are at the touch points of the large organized retail, even unorganized retail now, we see Pine Labs there. So you know exactly what's happening now. So how do you see the trend now? Festive season is starting.
So Dilip, one of the things is that we walk the street a lot. So we actually go into the small streets of the country, understand what is happening. Two very interesting trends. One, the shopkeeper that we used to go and meet up, that shopkeeper actually retired, and now his son or daughter has taken over the shop. Now that person is telling us, I don't want to leave this shop in the way my father gave it to me. I want to change it before I give it to my next generation. So there is the new age entrepreneur who wants to bring digitization into the store. And that entrepreneur realizes that if they don't bring digitization, Amazon is going to eat them away, or their customers will go to large format store. So digitization is a very big story for that merchant today. So that is one thing which is happening, which is clear. The second thing which is very interesting is the Indian consumer is also ready to make small ticket purchases thanks to UPI using digital means. I'll give you one example. We have a fund, and through our fund we've invested into this one tiny company. And what that company does is this lady gives out classes every day at 4 o'clock in the evening, and she charges 11 rupees for those classes. Just some years back, that business model wouldn't have even existed.
Yeah.
Now what they do is they say, come on UPI, pay us 11 rupees, you have instant access to those classes.
And now we have Lite also to pay.
Sorry?
We have UPI Lite.
Exactly, right? So what we are getting to see is new business models are being created, and consumer awareness is at a completely another level. So this wave that we are getting to see is a wave which is going to last for a long period of time.
Great, great. Rajan, yesterday also Honorable Governor spoke about that, the digital lending guidelines have been issued. Now, how do you see yourself in this whole lending journey? We have been taught, people who are coming from the banks, financial services, that whatever has not been approved by or written by the regulator is not approved, right? So how the fintech like yours or the ecosystem is going to deal with those gray areas, or how do you see the ecosystem adapting back to the digital lending guidelines? Or you have more expectations out of that?
The way to deal with anything that you're not aware about is always communication. So RBI has come up with the digital lending guidelines after 2.5 years of work on this. And it's a 10-page report. It's just a 10-page report. So if you read that report, it makes the principles super clear.
Super clear.
And they try to not leave any room for black or gray. But if you still have any questions on the principle, as a regulated entity, you can always reach out to RBI and ask those questions. As an unregulated entity, you can now reach out to the fintech department, which has recently been made, or RBI Edge, and you can ask the questions and resolve any gray areas for yourself.
So they are very approachable now, and this is what I think last 10 years almost, regulators have been super approachable. That's what industry really appreciates. Sambhav, when you look at, you're servicing the millennials. Now, how are they different from the others?
So just a small correction there. We are serving the Gen Zs and not millennials. And so
we are still millennials, so we have still not followed up next year.
After a few years, you lose the difference.
Yeah. Yes.
So how millennials are defined are anyone who's born in the period of 1995 to 2013, they're Gen Zs.
So what do they do differently?
Actually, they do, like, everything that they do is very different.
Very different.
Because they haven't seen a world without internet, right? So they wouldn't be able to relate to things like there were landline phones, or there were times where you had to spend 1 paisa per message, or there was, the telecom was so different. They've been using WhatsApp since they're born. They've been seeing products like Netflix, YouTube, right? So the kind of expectations they have from the products is also very different. I'll share a small story. So one of our team member has a 3-year-old kid, and they were flying off to somewhere. So the 3-year-old kid in the flight just took out the magazine, and the kid opened the magazine, and the kid was trying to pinch the image to zoom it in, right? So because they have been seeing these products, so the kind of expectations are very different. And if you see, Gen Zs, the majority of the Gen Zs today are below 18. And the question we need to ask is when we are talking about financial inclusion, 40%, close to 40% of India's population today is below 18, right? So it's more than 450 million minors in India, and every year millions of kids will get their first smartphone. Are we doing enough? Like we are focusing on, of course, people are doing their part on financial inclusion for rural audience, for women audience, for SMEs. And we are trying to do our part on making financial inclusion possible for the minors who don't get access to digital payments. Like kids are still dependent on asking their parents' card. They don't have access to UPI because majority of them don't have bank accounts. So they can't link their UPI to their phone. So they borrow their parents' phone to do a transaction. They borrow cash. They run for OTPs to their parent if they're using their parents' card. If you look at kids, like kids are actually CTOs of the households, right? Even my father today calls me up to book a train ticket or a flight ticket. So even in these households, like the parents are intimidated by technology for that sense. They ask their kids to order something on Flipkart, to order food, to order grocery. So that's how we are focusing on this TG, which no one else is focusing on.
Yeah, very similar, Amrish, right? Familiar and
yeah.
So Harsh, now when you look at the you look at the investments as your primary focus, how do you see the growth coming up? Now we see more people are applying to IPOs, more investments into the primary and secondary market both. How do you see the tier 1, tier 2 and above is looking at this whole investments into mutual funds, stock market? How is the story panning out? Gold?
So, pre-pandemic, right? So we had almost 2 crore people investing in mutual funds, and today there are 3.5 million. So there's been a growth of say 20-25%. If you look at stocks, there were 1 crore, now there are 4 crore. Right? Within the 3 years, it's a 300% increase of the number of people who are actively transacting in any of the capital market products. So overall, the way things are happening is a lot more awareness, lot more need, lot more hunger for people to participate and for people to actually put some of part of the savings in one of these investment products. And that trend is largely driven from the tier 2, tier 3 cities. You know, traditionally, again, if you look back, these products were all available out there, but there was no access to it, whether it's from the content side or it's about the payment side. It's from the activation, verification side. So all these Aadhaar, UPI, and these products have kind of made it so simple for and even Jio, YouTube, you know, all these things have played significant roles. And we would have, in a small way.
You know, we keep thanking Mukesh Bhai for Jio, you know, including
absolutely.
This, including this.
No, actually, so literally now there is no difference whether you are, I mean, their tier 2, tier 3 concept is gone. Now, it doesn't matter where you're sitting in BKC here, you know, tier 1 locality.
But you see a lot of you know, access transactions from the Bharat?
Absolutely, absolutely. Actually, see, the way to look at it is, so for example, I'll give you some data points. So we are probably doing 30-40% of the market in terms of these both mutual funds and stocks, and our around 75% is coming from beyond metro, beyond tier 1. So tier 2, tier 3 and beyond cities is almost 70%. And that's happening because it is no difference between them and here. And the interesting part is, like, if you pick a small village, right, there will be probably 20,000 people, but out of them 1,000 are the ones who are as, like, you know, financially, or, you know, they have money, they have the same needs, same aspirations as a metro. There probably there'll be more. But if you pick such 1 lakh villages, you are already talking about 10 crore people, right? So there's a significant number of people sitting out there who wanted to be connected, and now they are connected, and the penetration will keep on going because it's a word of mouth, you know, because people invest when they look at people around, and then they learn from them, they find the venues, and then they keep on doing. Small part, of course, the ticket size is very different from, you know, a person who's been doing it for 10 years versus somebody who just got into it for last 1 year. But there's a significant penetration that's happening. And
fantastic. So I think we should open up for the audience question. But let me ask one quick question to all 4 of you. Different question. So Harsh, what do you think if you have resources to invest on mutual fund investments versus the the secondary market or primary market investment securities, what do you think you will bet on? What do you think will grow faster?
No, so there's a very different.
Yeah, one answer.
I mean, for me personally, mutual funds.
Mutual funds.
Yeah, yeah.
Okay. So Sambhav, when you look at millennials and you spoke about payments, would you do lending? Yes or no?
Once a kid, of course, grows above 18, we would not want the user to stop using the
So
platform.
you'll do lending.
So not immediately 18, but in the future,
Do the
we would definitely.
Okay, Rajan, UPI or cards?
I'm all for it. Please have
No,
it delivered.
UPI or cards. If you have to bet money on one side.
Yeah, UPI and RuPay cards.
UPI and RuPay cards. Thank you. So, and Amrish, I think Swapnindu, we just met Swapnindu outside. So GFF or SFF?
Arey, GFF. Obviously GFF. And
Yes.
I'll give a longer answer on that one, right? I think, see, GFF is still the emerging product. Indian fintech is still emerging. Honestly, this group which all of you guys have managed to pull together, this is the community which will make fintech big in India and take it global. We are just starting. We have so much work to do right now that this almost will become the first stage from where this entire community can grow. So GFF for sure.
Thank you. And yesterday I was talking to Naveen and Gaurav.
Swapnindu hai nahi na?
The Swapnindu guy is gone. I've ensured that. So yesterday I was talking to Naveen and Gaurav, and they both said that GFF has all buyers. In SFF and Money 2020, they're all sellers. That's a great. Okay, let's go to the audience questions. If somebody can help on mics. Yes. Please introduce yourself and. Oh, okay, he's taking up. Sorry for that.
Hi, my name is Subhranshu. My question is for Mr. Dilip sir.
For them.
Okay, no, it's for you basically.
No, I'm the moderator.
I understand, but I have a question for you basically.
Okay.
That we all know that UPI has been a game changer. It has played an essential role in penetrating digital payments in India. But there are certain areas where I, as a user, is not allowed to use UPI. Like, for example, I'm an investor in virtual digital assets. But none of the players right now in India allow UPI payments. So what's your take on it?
I think as a country we are looking at a clear regulation and guidelines, and once it is there, it will be available back. Okay?
So you mean currently NPCI is not against?
No. See, I'm saying that we are waiting for the regulation and the law, right? Once it's clear, we'll allow. Yeah.
Thank you.
Yes, please.
Hello, Anthony here, this side, Dilip. Okay, here.
Yes, yes, Anthony.
Hi, from DBS.
Yes.
Question to the panel member. Someone spoke about Gen Z, right? The generation what we are talking about. That generation doesn't want to commit on anything. Let it be home, buying a home or getting married itself. Okay, if that being the reason, how confident you are in betting on those people by lending or whatever the solutions would be? How confident you are?
Very good question. Very good question. We are not from that generation. We are not. Rajan and Sambhav, can you try to deal with this?
See, the legal age for lending is 18. So Gen Z are not 18, right?
Gen Z, some part of Gen Zs are 18 and above.
Getting married also, 18.
Yeah. So by the time they become 18, because of the trials and tribulations they go through in life, they would have learned to do commitment.
Yeah, but Rajan, I think the question Anthony is asking is the younger generation is not going to commit to it. So how risky the lending over the period you see for them?
No, on a serious note, Dilip, finally why customers are paying in lending is because of their ability and their intention. So in case it's unsecured lending, people know, especially youngsters more than anything, that there's a credit bureau score that they have and they don't want to mess around with it. And the education on the credit bureau score today for a 19-year-old or for a 23-year-old is much more than what it was 10 years back. And if they are doing a secured borrowing, then they know that their home is on the line or the car is on the line. And then also there's an intention to repay. So as long as the lender, as long as as the lender is able to identify the ability of the customer properly and intentions through the data that they assess on the customer, people will pay. In fact, they will pay much better this generation than the previous generation because of better awareness.
Yeah.
I think
and I think, Amrish, we spoke about this, right? The reputation risk. What is the value or price of that reputation risk? I think younger generation understands this. That's my assessment as well.
See, younger generation understands it clearly. The other piece, I think, Dilip, what is important to figure out is that over a period of time, the line between living on subscription and living on credit will start to blur.
Yeah.
What I mean by that is, today, if Netflix was to come and tell you saying, I'm giving you 5 lakh rupees Netflix capabilities for the next 10 years, and then instead of that, they're breaking it up into subscription, are they charging an interest amount because they are breaking it over monthly basis?
Yeah.
We don't know. I think that is what is going to happen more and more. So this new generation wants to live life on subscription. They don't want to own hard assets. And then what will happen is interest component and lending will get so merged along with it that lines will just start to blur.
Perfect. Great question, Anthony, by the way. One last?
I would just like to
Yes,
add,
please.
So my name is Sumit Swaroop. I work for Center for Digital Future. We do research on policy and regulation. So my question is to Rajan. Niti Aayog had recently come out with this paper where they were advocating licenses for digital banks at 20 crores. So if you were to go down that path and get a license, how difficult or easy would it be? Have you thought about that? What would your process be to get a license and do that?
So he's asking you whether you're going to leave now and go to RBI to apply for that license.
So look, today the way to become a bank in India is either through becoming an NBFC first, waiting for 5 years and then becoming a small finance bank, or then waiting, if you're a small finance bank already, then you wait for 5 years and then apply for a universal bank, and based on multiple criteria in both the cases, you may or may not be eligible to run that. It's one of the most difficult licenses to get in India. And there's a reason for that, because customers' money is being used for other purposes, like lending, which puts it at risk. And we've seen in some cases that has not gone well in the country. So till the time the regulation changes on that, there's no question of applying for a different kind of licenses. Today, India has just these 2 types of banking licenses or a payments bank license, but there you can't use the deposits. And you have to play with the rules that the country has. Right? You can't ask a team of footballers from Europe to come and play, and these are professional footballers, to come and play cricket in India, because the rules are very different and they'll fumble at that. India has these set of rules. That's the way to get a bank in India. Unless those rules change, there's no point in having this discussion. And I think RBI has made the stance very clear, at least for now, on the digital banking license recently.
Okay. So now let's, I am going to come back. Amrish, now let's move to the next part. When you look, and you are like a veteran in acquiring, yesterday Parag was here, and Parag is like the last word now on credit cards. You are the last word on acquiring. What is the next stage of acquiring? In China, we see those LCDs with a very fancy QR codes. When do you think that we will move back to a little bit fun on acquiring? While Paytm did the soundbox, which is very interesting, but why are we not seeing that much of a variations back on the acquiring side? What do you think is the next?
So I think, Dilip, there are 2 or 3 things which I feel will become more exciting, right? One, just as a statistic, what I can tell you is the number of devices at the checkout location for merchants in the last 3 years have gone up 60%. And that is because what is happening is at the checkout, in the store, the merchant might have a Zomato ordering environment out there, or might be watching an Hotstar related service out there. There is payments transaction happening, invoicing, everything is going to happen. So I think one big trend which we are getting to see is commerce plus entertainment plus payment in a small merchant location is all coming together. Like, real conversation was, we are actually launching a slightly bigger device.
Okay.
And one of the things that we got to hear from the merchant community is, Hotstar app chahiye uske upar. So this is a payment device, but they want Hotstar on that payment device. And we are saying, okay, we've got to figure that out because a small merchant is wanting that. So that's one thing which we are seeing, that these three things coming together.
So the bigger device is same Android story?
Same Android with all the same security elements in it. But people want to do more and not just have a device only for payments.
Okay.
So that's one trend that we are getting to see. I think, Dilip, the second thing the first thing what you talked about in terms of Soundbox, according to me, Soundbox is an interim journey. One of the reasons why we've not gone to Soundbox is when stickers came in, Pine Labs never went into it because I felt there was no moat associated to the sticker business. किसी और ने आके sticker लगा दिया, UPI handle connect कर दिया, bank account, you're finished in that. Soundbox, what you're saying is, I get to hear saying 200 रुपए का transaction हो गया.
Auntie says आपका 200 रुपया आ गया.
But now what the merchant will ask is, I also want a visual confirmation. And then you're sitting saying, but the POS does give you visual confirmation. POS does give you a sound.
No, but why can't we make that, you know, the LED, LCD screens, uska border is red. You scan and pay, it becomes green. Something like that. Very simple.
And if you actually walk in that hall just now, there are devices which are doing all these things also.
Okay.
So what I'm saying is the final device will look very similar to the whole Android device, even with the QR there. So that's one. And I actually, again, think that's not the last stage. You and I, we discussed this a lot. But for example, if you looked at what's happened in China is, as merchants have continued to grow, the transaction has completely reversed, where you have consumer displaying the QR and merchant then pulling money from their UPI wallet. I do think over the next 5 to 7 years, that will come to India also. So I think we're in the middle part of
But the China happened because of the regulation. The reverse flow happened above certain value.
And merchants will also, see what is merchant? Merchant is demanding a sound and a visual confirmation because he wants to run his business better. Now what he's saying is, let me pull the money which I really need to pull. And that's what has happened in China. So I think over the next 5, 7 years, the transactions will get flipped. And you know, again, this is maybe all beautiful thinking because we love what we do. We keep innovating.
You love your investors also.
Huh?
Investors and evaluations also.
That's a byproduct. Never focus on that. Narayan Murthy told us that one.
Okay. So Rajan, I read in the newspaper that you are applying for TPAP, wanting to become a TPAP in UPI. So how do you see this data storing planning out? Everybody says that we are data rich now, and now we need to become a credit rich. How do you see that the journey to credit rich is aided by data rich?
What has worked for Slice is not that we have been able to give credit to a lot of customers. What has really worked for us is that we have been able to create an experience for them that they love to use us for payments. And because of that, they come to us for credit as well. Let me give you an analogy with offline and online. In offline world, where you don't have some of the data, the real thing is location. If your location is prominent, if the real estate is good, people want to go to you. In the digital world, in the online world, the location part of offline is replaced by friction. So if your product has friction, people don't want anything to do with you. If your product doesn't have friction, they want to do all the great things that you can imagine. They want to tell about you to their friends. They want to come to you without getting any referral money. And that is not changing in the digital world. In fact, it's becoming more and more.
Okay.
So as long as you can create a digital experience which is removing friction for the customers, and the customers especially that we serve, like a 27-year-old average customer, you have a lot of opportunity to provide credit to them because, first of all, you're reducing the customer acquisition cost, you're making it a store that they really want to visit, and everything good happens after that. But if you're not able to do that, then everything will fade away for you because the cost will be very high and it's not very easy to do digital things because the competition is too much. So you have to really crack the friction bit to crack digital and data and everything.
Fantastic. So Sambhav, we spoke about risk last 2 days. I'm just saying risk, compliance, fintechs. are able to catch up on that journey, right? In terms of, having the functions. So what is FamPay doing to ensure that Governor said yesterday you have to be on the right side of the regulation.
Right.
So how are you dealing with from FamPay?
So Dilip, there are a few things to risk that comes into picture. First is, of course, how operationally you're compliant and what are the things you're doing on that side. And second is also on how you're leveraging technology to reduce risks on the product as much as possible. So I remember like 2 years ago, before launching the product completely, we were just testing it out. We hadn't started with the go-to-market. We just made the app live on the Play Store. And in 2-3 days, we just started seeing a spike on the platform. Suddenly, like it had been a couple of hours and we were seeing, okay, now 200 users have registered, 300, 400. And every hour, the number was growing crazily by 70, 80%. And for the first few hours, we were happy. Okay, we haven't even marketed. We just made the app live on the Play Store, and now we are getting all of this traction. So this needs to have great pull. After 4-5 hours, we got a hunch that, no, there's something wrong that's happening. And we had no clue. So we identified that there was some offer being ran by Amazon, and it was only applicable for first prepaid cards, first-time cards. So a lot of people figured out a way to, okay, there's this new app where you can get a prepaid card. And there were these communities.
That was coming to.
And that was coming. So we were not losing money, but.
This is like first credit card, the bank starts credit card, the first 6 months.
So,
rush.
So game were just, like people were just gamifying, they just find loopholes on just getting the best cashback, etc.
So how do you deal with it? How do you
So that was the first time we realized, even before launching the product, that was a good thing that we hadn't launched. We were like on a 48-hour, it was like an online war where we were making changes to the product. Okay, now you cannot get on the app before, like we integrated like device mapping to your SIM card. We had, you cannot make more than 3 logins in a minute, or those kind of checks.
You're trying to solve by tech.
Yes, so we have a lot of things inbuilt on the app where we have device checks, we have UPI per transaction limit, per day limit, like we're putting, we inform parents on where the kid is spending, how much they're spending, right? So there are a lot of things we do by tech that today, like the risk that we get on the platform or the frauds that we get on the platform is super low. And we also have a risk team in place where any suspicious transaction gets flagged, and that team is actively working on resolving it at the quickest.
Understood. Very good. Harsh, now when you look at, we all believe that the UPI enablement in the primary market really helped in terms of getting the customers applying from the app. And you think the similar architecture on the UPI in the secondary market used, do you think it's a value add, or you think it's not required?
So even today on the secondary market, like on our product, 91% of the transactions are going through UPI.
Okay.
The money that is coming in for the
yeah, but I meant
the
block architecture.
Yeah, so I'm coming to that. So I'm saying, so UPI is already solved and already playing a significant part to it. Now the part that it's, I mean, I am referring to what you're asking, and I think there's a debate also going on. There's a lot of discussions around whether in the secondary market also is the hold structure that used to be asked by, and now with the IPO, now the similar thing has to happen. I think the intent is not really to simplify it for the user. The intent is more to de-risk it from certain potential bad players in the industry who can operate because they get to touch the money. I think the intent is not really about the growth or scale or about the experience. It's seen in a different way, and I think it will solve that problem probably. From execution growth, I think users are very happy already. They're using UPI. They're blessed that the transactions are going in instant. Money is right there. They can do whatever they want to do with it. So,
okay.
Yeah.
Excellent. Excellent. So we have just 1 minute left. We'll just take that one last question. Yeah.
Yeah. Hi, good afternoon, everyone. So I've got a typical question.
Yourself?
Yeah, myself, Dharmang Shah from SBI Mutual Fund.
SBI.
So I have a typical question for Harsh. Maybe, later on anyone from the panel can respond. So today, a lot of things are happening, right? We've got 45 plus asset management companies. We've got 15 odd insurance companies. Everything is happening on a manufacturing side or the front end of the side. But if you'll see the back end of it, so we have only 2 RNTs in terms of mutual fund. And plus you will see now the whole regulation of dematerialization of all life insurance policies.
What's the question?
So the idea is, are any one of you thinking of a tech-enabled RNT or a solution which can seamlessly integrate all the financial products in one loop?
So he's suggesting a business case to become an aggregator.
Yeah.
You are up for it?
So no, we've been working with a lot of companies and actually working on the same solution. I think a digital RTA or an aggregated RTA. In fact, regulators are also come up with API-based services from this RTA so that somebody can build a aggregated experience. And between the regulators also, I think there are a lot of discussions happening on, right from account aggregator to different infrastructure, even CKYC. All these infrastructures are in a way that is centralizing and removing the barrier the most backend infrastructure might have on the customer experience. So yes, there is a lot of development. Yeah.
Guys, I think we are time up. One last thing. When is the IPO date?
Soon.
Soon?
4 years.
4 years. Okay. Better.
We are too far in our journey.
Too far.
Yeah.
So you'll keep on playing on the private markets and.
Yeah, for the foreseeable future. Yes.
Harsh?
Haven't thought. We are profitable. So we don't need. Yeah.
So thank you guys. I think it has been sorry, you want to say?
Dilip, on behalf of all of us who are in the fintech space, I want to thank you for being so accessible. Thank you for what you have built. Nalin, Praveena, you have built a fantastic fintech in India. Really appreciate all that you do.
Thank you so much. Thank you. Thank you.
Thanks.
I'm going to request you all to come together.
Yeah.
One of the most engaging sessions. Ladies and gentlemen, can we have a huge round of applause one more time?
No, it's okay. Achha, I think the light.
And we also enjoyed some of the questions that came from the audience as well. And I'm sure this is one panel where a lot of you would have some more queries and questions to take it forward with our speakers. So I'm going to urge you all to please connect with our speakers offline.
Thank you. Thank you. Thank you so much.
And thank you very much for joining us today. Thank you once again. All right, on that note, ladies and gentlemen, let's also stay tuned for our next session. This is around the Indian digital payment industry targeting $10 trillion opportunity. So that's going to be the theme and focus for our next session. I must admit that we managed to gather some relevant insights as to how a Gen Z would look at financial conversations, or for that matter, millennial. And I'm sure that all of us also realized that at one point when we would step out for dinners, we would probably talk about movies and celebrities, but now the conversations are more about, hey, did you pick that IPO? Did you invest in that IPO? Or did you pick that next stock? What are you doing about investments? It's interesting to see how conversations have shifted. So that being said, we'll also shift towards our next session. We'll set the stage, and in the next couple of minutes, we'll get it started. Also, we'd like to bring to your attention, ladies and gentlemen, that this evening we'll also be having a very, very important conversation that'll feature Mr. Devendra Fadnavis ji along with Kunal Shah. So that'll take place exactly at 6:30 p.m. I'm sure it must have not been present in your respective agendas, which is why I want to sort of share that with all of you. 6:30 p.m. sharp is when we will have Mr. Fadnavis, and we'll again have Kunal Shah. We'll have again another very important discussion coming your way. So do ensure you're all here at 6:30 p.m. as well. I'd like to inform everyone that the next session is about to begin in just a couple of minutes. So if I could request everyone that's standing next to the exit door, if you could please take your seats. Our next set of speakers are about to join us in the next couple of minutes, and we'll get the next session started.
4, 3, 2, 1.
All right, ladies and gentlemen, our next session is about to get started. Another interesting fireside chat in store for all of you. Well, just a couple of sessions ago, we were focusing on the roadmap to the $10 trillion economy in the next decade. And now we're actually focusing on the Indian digital payment industry that's targeting this big opportunity. So we're going to have both of our speakers joining in. So I'm going to once again request everyone to please take your seats so that we can get this fireside chat started. And with that, it's also time to welcome on stage two of our prolific speakers here, leaders themselves, who will be discussing on this big $10 trillion opportunity that we've been talking about. And let's focus on that through this very interesting fireside chat coming your way. We have with us Mr. Sandeep Ghosh, Group Country Manager, India and South Asia, Visa. And we have with us Shri Vivek Deep, Executive Director, Department of Payment and Settlement Systems, Reserve Bank of India. Ladies and gentlemen, if it's the big $10 trillion opportunity, can we have a big round of applause? It's time to gather all the insights in store through this fireside chat. Over to you, sir.
Good afternoon, ladies and gentlemen. It gives me great pleasure on behalf of the organizers of the Global Fintech Festival to welcome Shri Vivek Deep, who's joined me on the stage here with me today. Shri Vivek Deep is the Executive Director of the Reserve Bank of India, looking after the Department of Payment and Settlement Systems, DPSS, and the Department of Information and Technology. These departments manage and operate critical payment and settlement systems and allied applications. He is also the co-chair of the Financial Stability Board's new cross-border payments target data group. He's also the chairman of the Indian Financial Technology and Allied Services, a director on the board of Reserve Bank Information Technology Limited, REBIT. He's also a member of the Governing Council of the Institute for Development and Research in Banking and Technology and a member of the SARC Payments Council. Shri Vivek Deep has rich experience in areas dealing with payment and settlement systems, human resource management and development, banking regulations, financial inclusion development, amongst others. He's also had the experience of working on a deputation with the Reserve Bank of Australia. Shri Vivek Deep holds a bachelor's degree in economics honors and a postgraduate diploma in financial management. Welcome to the GFF, sir, and thank you for sparing your valuable time for this discussion on the evolution of India's digital payments landscape. So the way we're going to run the next half an hour, I'd like to pose a few opening questions to Shri Vivek Deep, and then obviously throw the floor open for audience questions. We would like to take the benefit of his wisdom for the broader audience as well. So to begin with, sir, the digital payments industry in India has crossed the US $3 trillion mark in FY21. It would be great for the audience to hear your perspectives on what are the enabling factors that has really played a role in such a rapid adoption of digital payments in India, from the India stack, the regulatory framework, and a host of other factors have come into play. So it'd be great to start with hearing your thoughts on the above.
Thank you, Sandeep. Very happy to be here. And yes, we can probably start from how we have reached where we have reached today. Part of it is or in fact, most of it is already very well known, but considering the fact that, this is an industry where there are a lot of very young stakeholders also, probably the past is not so vivid in their minds. So I just wanted to take some time and take them back a little bit into the history of how the payment system evolved. I will not dwell too much into that, but in comparison to banking, the history of payment system is not all that old. We have been mostly using cash in some form or the other. Coins have been the earliest form of cash
and bullion before that. And subsequently, these hundis and all evolved. So, if you see the first clearing house, the way payment system can probably be, trace its start from clearing house kind of a setup. So that came up in India first time in Calcutta, now Kolkata, in 1938. So not very old, but yes, 1938 it was. And since then things have developed, and in the last 5-7 years they have developed with a pace that has surprised everyone. So I'll just try and briefly trace what exactly, who constitutes the payment system. We all know there are banks which are at the heart of the payment system, and there are other participants, payment system operators. There are, clearing houses. There are central counterparties like CCIL. There is NPCI. All of them, whenever you make a payment or settle a payment transaction, there is an ecosystem where the funds flow takes place, and it gets settled. Ultimately, everything settles in the books of the bank. But the centerpiece of this entire ecosystem is the Reserve Bank of India, the central bank of the country, not known to most participants or individuals certainly who are part of this chain. The final settlement takes place or can be said to take place only when the books are settled in the Reserve Bank of India. Before that, your money, of course, if as a person A to person B you are transferring money, that goes. You are satisfied that your money has gone from here to there. But the transaction is not complete till that finality happens in the account of the Reserve Bank of India. Of course, either through the account of the bank or other participants of the RTGS system and things like that. So the central bank is the centerpiece of the entire payment system architecture. And apart from being the centerpiece, we have also been trying to nurture and foster the payment system. We have taken, earlier when the check was the most predominant instrument. So you would be knowing that first we introduced what is called the micro checks. Then came the truncation business. In fact, 2008 was the truncation introduction, and 2010 we introduced standards for truncation so that physical checks do not have to move. And sometimes again we had introduced the ECS credit and ECS debit to take care of single debit and multiple credits, and to multiple debits and multiple single credit to multiple credits, things like that. So we were gradually focusing on technology. We were trying to bring down the hassles of physical payment instruments to the extent possible. But mostly our focus was in facilitating and in nurturing and promoting the institutions. So we ended up promoting, not promoting, but helping in promoting institutes like IDRBT, CCIL, which acts as a central counterparty, IFTAS, which is not very well known, but which runs the Infinet and other vital payment infrastructure on behalf of Reserve Bank of India, and of course NPCI, which you all are very well aware of, is playing a signal role in the payment system in today's times. But in 2004-05, very, very significant things happened. we started the NEFT and the RTGS. And with that, and in 2007, the Payment and Settlement System Act was promulgated. So not only we became the owner and operator of the payment, the backbone of the payment system of the country in terms of NEFT and RTGS, but because of this implementation of this act, PSS Act, we also went into the area of regulation. So till such, as I said before that, our main thrust was in terms of introducing technology solutions and nurturing institutions, but this regulation aspect came into focus from that time onwards, and it bears repetition, even though many of you know that many of the technological advances which happened in the payment system area, including Infinet, the backbone on which the payment system runs, the SFMS, that is the messaging format on which the secured messages internally go, the IFSC code which was used for identification of the branch when you are transferring the money, things like that. They are all because of Reserve Bank of India playing a role. I mean, do we have time or?
We do, sir. No problem. Yeah.
So I can go on and on. So we have to stop at some place. And later, when NPCI came in its own, then it also started developing new products. UPI, everybody knows, of course, but then Aadhaar-enabled payment systems, other things, FASTag, the Bharat Bill payment system, a number of other products that they also came into the market, and they all started gaining traction in their own respective fields. At the same time, the external environment, as I said, in the last few years, maybe 5-7 years, the external environment has also changed dramatically. And it's a cliched probably example, but it bears repetition that the penetration of internet and the oft repeated jam trinity, this has fundamentally changed the landscape in which we operate, and the success of the retail payment system certainly is in a large measure because of these external developments. So just the other day, Finance Minister was talking, and she mentioned that there are 132 crore Aadhaar numbers that have been issued. Every household has a bank account because of Jandan and initiatives like that, and we know that around 78 crore or so mobile users are there in this country. So all this taken together has combined with the initiatives that I talked about by the central bank, which in the field of payment system. So these have combined together to cause this explosion in the ecosystem, the fintechs, the banks, the other PSOs innovating and coming up with innovative products, and the public at large adopting those products and adopting digital solutions in a very, very large manner. And I must also mention that we often hear this particular phrase, Aapda mein avsar. So this COVID, I mean, literally provided that Aapda mein avsar. it's no longer a cliche. Actually, it was an apda of really large proportions, and the digital payments industry actually grabbed the opportunity and has increased by leaps and bounds during this period. So I guess there are a few. If just one more minute, if you allow, that some of the things, other things that keeping the cost of NEFT and RTGS low, in fact, making it free subsequently. That has probably also helped in adoption of digital payments in the country, and modulating and keeping the various charges, including the MDR and other rates that are involved for the different players in the system. And also we will talk probably at some other time about that in detail, but the focus on customer that Reserve Bank has been driving. So probably customer service and grievance redressal, that I'm sure has also assured the people at large that they can adopt the digital solutions in a large way. So that's what I would like to.
No, that's a fascinating thing, sir. And a lot of us ascribe it to India stack, specific products like UPI, but the institutional framework, regulatory framework, technology innovation that you described, which has happened over a period of time, the focus on economics and charges on customers. So there's a whole host of factors that has driven this. And that was really interesting, sir. Now, there's been a recent report by one of the consulting firms and leading big tech companies that says that 3 trillion mark breached in 2021. This is likely to treble to about 10 trillion by 2026. Now, as you look forward into the future, Vivek Deepji, what are the things from a regulator's perspective, from a policy framework standpoint, or other themes that play in your mind which will sustain this kind of growth momentum?
3 trillion to
10 trillion.
10 trillion.
Now, those are numbers in one report, but okay. Certainly if this fantastic rate of growth has
in how many years?
They said by 2026.
2026. In a way, it may look ambitious. Looked at from another side, may not look very ambitious at all. Again, I am reminded of the Honorable Finance Minister talking yesterday and mentioning something like UPI itself, reaching 1 billion transactions every day is what.
That's the mission.
Yeah,
that's the ambition.
That is what she was talking about. So if that happens, your target
will be exceeded.
Absolutely, it will be exceeded. And I also happen to have a look at the report that you are talking about. So if my understanding is correct, it only takes into account the retail transaction. So it excludes the large business B2B, G2B, G2G transaction, those kind of things. But even today, even in 2022, if you include all those which are legitimately part of digital transactions, we have already crossed US dollar 22 trillion is what I am told.
Right.
So, lo and behold, your 10 trillion is already achieved in that sense. But coming back to the point that you are making, a large part of the enabling work has already been done, some of which I just mentioned, and many of which I'm sure the audience is aware of. But that doesn't mean that you know we are content sitting on our laurels and doing nothing. We have certain other things in store which we have planned. One of the most important things would be the external environment. Again, you can never downplay the importance of external environment. Right now, things for India don't look bad at all. The first quarter growth numbers are extremely good, 13.2% or so. The projection for the rest of the year is around 7%, more than that probably. So, so in terms of growth, if we are able to sustain a high growth momentum, this target should not be a problem at all. The headwinds, temporarily at least, are certainly in terms of the inflation, because this is not only something which India is grappling with, the entire world is grappling with, and we have to see how it plays out over the medium term. But as you all know, Reserve Bank is trying to its level best to handle that situation domestically. The short point is that with price stability and a sustained high growth, the target is very much achievable. From Reserve Bank side, there are, and of course, in collaboration with some of the institutions which are there in the market, we have tried, or we have thought of a few measures where we will try to enhance or build on what we have already achieved. One measure that we have thought of is geotagging of the payment infrastructure. So with the geotagging, we hope to understand what is the geographical location of the extant infrastructure that we have, and that will give us an idea as to what is the kind of concentration, which are the areas which are lagging in that kind of infrastructure, where we can then concentrate in terms of building more infrastructure. And as a complement to this geotagging initiative is the PIDF fund that we have. That fund is for subsidizing some of the infrastructure, POS and QR code. And we will want to concentrate in those areas where the infrastructure is lacking. So these two are likely to go hand in hand in order to enhance the payments, digital payments acceptance infrastructure. Yesterday, Governor launched some of the products, including UPI 123 Pay. That we believe has the potential to bring into the fold of UPI those people who do not have a smartphone. There is a large number of people in the country who still use a feature phone. If they can also be benefited by the facility that UPI provides, I mean that the digital transaction number are likely to increase manifold. Coupled with that, NPCI has also launched something called UPI Lite, which can facilitate transaction when there is no connectivity.
Correct. Offline.
So offline, yeah. So in those scenarios also, small ticket transactions can work. Governor has already touched upon what are we doing in terms of innovation hub, what we are trying to achieve. So now some new innovation the regulatory sandbox is there. So in multiple ways, we are trying to see that new ideas, new products come up, which can give a fillip to adoption of digital technology, digital transaction. These are, the measures. Apart from that, he also launched a product where we are linking the UPI and the credit card. We have started with with RuPay card, but if you see the vision document of our department, the idea is to generally link credit card with UPI, and that we believe has the potential to be a game changer in this field, and enhance the benefit of both the credit as well as benefit of UPI to a large number of population, which probably is not using it as of now. So apart from these things, I don't want to get into the small details of what our payment vision document 25 has outlined. But those of you who are interested can, it's a public document available on our website. It specifically gives you the targets, what we are trying to achieve in different areas in terms of card payments, in terms of card acceptance infrastructure, in terms of UPI transaction, in various other segments. Each segment of payment payment transactions, what we are trying to achieve in terms of numbers or percentages, it gives you the targets that we will be, over the next 2.5 years, we will be trying to achieve. I'm not saying that everything that is possible is part of that vision document, or everything that is possible we will be able to do. But this, as I mentioned in the beginning, in response to your first question, Reserve Bank is an essential part, but only a part of this overall payment ecosystem. There are, you are an essential part. There are others who are part. So everybody has got to contribute to achieve an ambitious target like that. And external environment I already mentioned. Reserve Bank's effort I already mentioned. And the industry, the banks, the payment system operators, the fintechs, all have to come on board and play their part. One thing I think my colleagues from Reserve Bank, from other departments will throw some more light on that. But I'll just mention here that CBDC, when it comes, that also has a potential to take the digital transaction much further than what it is right now. One last thing I will mention is the potential where we can grow. Potential is still huge. Something we were talking about the other day was about the transit payment. That is one of the huge contributor to the digital payments in the advanced economies. There we are, we are far behind, I must accept. But we have to engage with a number of stakeholders, and we have to build a lot of infrastructure before we can see significant traction in that particular field. But that is an area where there is a lot of untapped potential, and we need to progress in that area for us to go further in.
That's a great roadmap, sir. And you called it out. There are pockets like transit which have a lot of dependencies, but talking about payment infrastructure, talking about a whole host of things that you listed out, fantastic. Now, it's quite clear, sir, that the India has made phenomenal progress in terms of adoption of real-time payments. We are also witnessing one of the fastest moves towards online and e-commerce payments anywhere in the world. In fact, India and Brazil probably are the two markets we see within our world of Visa and cards as being where post-pandemic, large part of the transactions have moved to online versus face-to-face. And not that only in online, but generally speaking, as we look at this fantastic growth trajectory, how are you and the team at RBI thinking about issues around privacy, security, consumer protection, whilst also keeping simplicity and convenience in mind? It's a delicate sort of balancing act out there. But just your headline thoughts on some of these themes.
Well, let me begin by saying that this is probably a controversial topic, but it should not be a controversial topic. Because, again, I'll refer to what Governor said yesterday. These have to go hand in hand. And I can understand that, in an ecosystem like this, different players have different sort of incentives. You will focus on probably some sort of a top line, that how much I am able to grow. Somebody will focus in how much is my revenue. Somebody else will focus in, what is the innovation that is coming in. But for the overall sector to grow, the customer confidence, the customer's faith into the system is equally important. And somebody has got to think about that, because customer as a collective is not very well organized at this point in time. And therefore, the regulator has to assume that responsibility and come up with frameworks, regulations to deal with that aspect, which often get neglected, at least in the initial phase of growth and euphoria, where other things are going very, very fast, and this probably tends to lag a little behind. Also, you see, every day you see in terms of physical security, there is a trade-off between your experience, ease, and the security that you can have. You go to the airport, for example. Ideally, I don't know how many of you remember the check-in process of the 70s and the 80s. There were hardly any security. You just walked through, everybody. I mean, even those people, one person was traveling, and there were 10 people coming to see off that person, and everybody will enter the airport and almost go to the runway to say Tata bye-bye. From those days to today, you see the kind of security that even the genuine traveler has to go through, the kind of strict security, what to talk of, those who are wanting to see off and all, the less said about them, the better it is. But you see where the civil aviation was then and where civil aviation is now. There is no comparison in terms of the facilities available to the customer today in comparison to what was there in 70s and 80s and 90s. So the short point I'm trying to make is that there is some price, some degree of compromise to be made in terms of security at times. It may take away a little bit from the convenience, but it is necessary in the interest of the ultimate consumer. And since the consumer is confident that, okay, I don't mind this little bit of security, but I am confident that nothing untoward will happen to me and I can travel with confidence. So therefore, you see, just the other day, Mumbai airport had handled the largest number of passengers post-COVID is
1,30,000.
Yeah, 1 lakh. So that confidence is important because that will drive your drive the growth in your business. Otherwise, if you don't have that, give that confidence, every little instance of fraud, every little instance of a customer getting cheated, it gets a disproportionate traction in today's time. A lot of I will not say it gets blown out of proportion. That is not the word I want to use, not the phrase I want to use. But it gets a large amount of coverage, and it reaches because there is the people have access to all kinds of news, media, everything available to them. Everybody comes to know that there is a chink in the armor, there is a flaw in the system, and then people hesitate before using that kind of those services. So, from that point of view, it is extremely important to ensure that customer confidence is maintained and the highest standards that we can think of, we can achieve is enforced. And with that in mind, we have been rolling out our policies. As far as we are concerned, data protection, customer privacy are of paramount importance. Of course, the primary aim is that there should be a legislative framework for that, but pending that, whatever is possible through regulation, we are trying to build that. And all this measures in terms of tokenization, in terms of e-mandate, in terms of data localization that you see. I very well understand there are pain points for the industry, but please try and see it from the other side also, that what is the intent behind that. Ultimately, when we achieve and reach that point, everyone will be better off. This data localization, I know the kind of investment some of the companies have made in complying with this regulatory instruction. It is huge, and I'm really, we do appreciate from Reserve Bank of India, the effort that the industry has made in complying with these instructions. But ultimately, what is driving us is the interest of the customer, because nobody today can claim that you are immune to, from any kind of data breach or any kind of, data compromise. So while we try and put in place the most robust measures against hacking of data, against compromise of data, at the same time, we try and ring fence our systems in a manner that that will ensure that the instances of this kind are minimized from the regulatory point of view also. As far as we are concerned, our stated objective is that we understand that today data is equivalent to money. There are many business models are made around that, but whenever data is to be monetized, it has to be with explicit consent of the consumer, and it has to be within the framework provided by the legislation and by regulation. So if you stick to that, there should not be an issue at all. And some of the measures that we have taken, I need not repeat, but we have, in order to increase customer confidence, long back, some 4-5 years back, we came out with limited liability circular for the customer, and we have come up with additional factor of authentication in card not present transaction. It is something unique in the Western world, in the developed world also. Even now, they don't have this, and I feel far more confident using my card in Indian jurisdiction than I feel, while traveling abroad. Introduction of EMV chip-enabled cards. Yeah. The option of switching on and off transaction rights. We are out of time, is it?
Almost. Sir.
Okay. So I'll stop here. I mean, I need not repeat what we have already done, but this is briefly, how philosophically we look at the issues that you just flagged.
No, excellent, sir. And we could go on for a very long time. I did want to talk to you also about cross-border payments, but do we have time for one audience question? So we can take one question. Okay, so one audience question, it better be good. Anyone in the audience who has a question, if we don't see a hand go up, I'll have to do the needful. Okay, we don't seem to have an audience question, sir, but I know this is something we have spoken about. The success we have had in streamlining domestic digital payments, there is still a fair bit of friction when it comes to cross-border payments. Any quick comment, observation on how you're looking to help increase the convenience, transparency, etc., when it comes to cross-border payments?
I'll be very brief. I'm sorry that we have exceeded our time, but on cross-border, I can only say that the payment system benefit we have seen in the domestic sphere. The same benefit is still to be seen in the cross-border payments, but that does not mean that we are not alive to the issue there. I can share with the audience that at the behest of G20, G20 had asked the FSB, the Financial Stability Board, to look specifically into this issue, and Financial Stability Board in turn has constituted a committee on cross-border payment coordination called CPC, which is going into on many of these aspects. There are a number of things that they are doing. In the interest of time, I will not go into that. Just mention that there are 4 specific areas in which we are trying to measure the efficiency of cross-border payments. They pertain to cost, speed, access, and transparency. So cost, everyone understands, there should be minimal cost, and what should be the criteria in terms of cost can be, because they are varied across jurisdiction. The speed, I mean, it takes days, even in today's times sometimes, whereas in the matter of seconds in domestic transaction you are able to transfer. So how that can be reduced? Access means that anybody who is interested in transferring, there should be a product,
solution
available to the person. And transparency means whatever information you want in terms of cost, speed, what are the terms of service, everything should be available to the person trying to make that transaction. So these are the 4 parameters on which specific targets will be fixed. The problem is why the progress is slow is because there are different jurisdictions.
Correct.
And it's a collaborative effort. It's not like this one country and you do something and everybody has to accept. There it's a consensus building process, and therefore it takes time. But the work is on. And
sorry. So you hit all the right notes there. Absolutely.
So that is the final, I think, bell for us
Absolutely.
to stop. So I'll stop here. Thank you so much.
Once again, on behalf of the audience and the organizers, thank you very much, Vivek Dibji. Thank you very much for your time. Thanks a lot. Thank you.
Thank you. Thank you very much, Sandeep, and thank you very much, Sri Vivek. I'd like to request you to please come together for a quick photograph as well. And after that interesting conversation, we'll also march ahead with our next trialogue. So I'm going to request everyone to please be seated. Thank you very much. And I must particularly thank Sri Vivek also for beautifully explaining and sort of spending time on all those answers that he was sharing with all of us. So on that note, we're about to get started with our next trialogue, another very, very interesting topic coming your way. We do see that a lot of consumer behaviors have changed over the years. And this, of course, has been driving the digital payments evolution. So we're going to have a trialogue, and we're going to get that started in just a minute. While we do so, once again, I'm going to request everyone to please be seated. And at the same time, we'd like to also bring to your attention that at 6:30 p.m. today, we'll have a session featuring Shri Devendra Fadnavis and Mr. Kunal Shah. That'll take place right here inside this hall at 6:30 p.m. So we're going to request for everyone's presence around 6:30 p.m. as well. I know we've all come together as a community over here, but at the end of the day, we are also consumers in some way or the other. And we've also seen that shift in the way we have been transacting, or for that matter, we've been purchasing, or we've been even driving conversations within ourselves or within our friends' community, or for that matter, families. And the fact that with India going digital, we've also seen how these conversations have changed across cities, or for that matter, tier 1, tier 2, or tier 3 cities. I've seen that happen even, in fact, in my hometown in Kakinada, how my viewers back there, how they've sort of started changing the way they converse and the way they do their business. A lot of things have happened over the years, and it's time to also see how this consumer behavior is actually changing the digital payments evolution. So let's gather more insights on this by inviting our speakers on the stage. First up, to spearhead this discussion, we have with us none other than Ram Rakapan, Senior Director and Head of Government Engagement, India and South Asia, Visa. And joining him, may I please invite Shri Anuj Ranjan, General Manager, Fintech Department, Reserve Bank of India, and Mr. Rajesh Chopra, Senior Vice President, MasterCard. Well, we've got all our three speakers here. Ladies and gentlemen, if you're all also absolutely inquisitive about this changing consumer behavior, can we have a round of applause to welcome all of our speakers here? Time to gather some more insights. A very, very riveting topic coming your way. With that, I'd like to hand it over to Ram. Over to you then.
Hello. Am I audible? Good afternoon, everyone. A warm welcome to you all to this panel. My name is Ram Rakapan, and I'm Head of Government Engagement for Visa for India and South Asia. I'll be moderating this panel today. The topic we are going to discuss today is the changing consumer behavior driving the digital payment evolution. In fact, this is a topic everyone is interested, be it the payment companies, technology companies, regulators, and even the government. Indians are adopting digital payments at a scorching pace. We have risen to the top of the chart in terms of the number of transactions. But do we really understand the changing consumer preferences for how they shop, how they pay, bank, or otherwise engage brands? What does this mean for the merchants, banks, and other payment businesses that serve them? What it means for the regulator? You may probably be aware that the additional factor of authentication through a PIN or a OTP is the chief reason boosting customer confidence, leading to more rapid digital adoption. However, do we know that the fraud in digital payment is on the rise? Do regulators and businesses are protecting consumers from falling victim? Finally, we see a rapid emergence of over half a dozen unicorns in the Indian fintech sector, offering services ranging from payments to cards and multiple payment options. However, do we know what are some of the ways that payment technology and innovation are helping support a more frictionless consumer experience? So these are some of the topics that I'll be discussing with the esteemed panelists today. Let me quickly introduce our panelists. Mr. Anuj Ranjan, who is currently General Manager at the newly created FinTech department at RBI. He is presently overseeing some of the exciting work at RBI related to FinTech, central bank digital currency, regulatory sandbox, and the innovation hub. A fact that probably not many are aware is that winning gold has been his forte. He has been a gold medalist throughout his academics and even won the Best Employee of the Year award in RBI. Interestingly, he is also a leadership coach. So, sir, thank you so much for accepting and joining us in this discussion today.
My pleasure.
I'm pleased to introduce and welcome Mr. Rajesh Chopra from MasterCard. Rajesh heads the data and services at MasterCard Advisor. He's also a senior vice president. He has a wealth of knowledge and distilled experience from hundreds of real-world engagements from banks by helping them with data insights and analytics. Thank you, Rajesh, for joining us today. In the course of next 40 minutes or so we have together, I hope we can amplify some of the questions that I had highlighted earlier. So without further ado, let me first turn to Mr. Anuj for the question. Sir, a recent survey on the topic revealed that consumers keep security at the top of their mind when decide what payment methods to use. I know you are a regulator, but as an individual, do you have any preference? What are the parameters under which you would select a particular digital payment method, or do you use digital payments at all?
Yeah. Thanks, Mr. Ram. Let us look at evolution, and we always kind of try to understand that whether the customer is driving, the behavior of the customer is driving the evolution in payment system, or the payment system is kind of onboarding customers in large number, and therefore, so it's like a chicken and egg story. Which comes first is still a thing which we can ponder over. But I feel there are certain aspects of digital payments where customers gave an indication, and as a regulator, we try to get on board some of the developments and evolution in the payment system. Sometimes, as a regulator, we felt that these are the need of the hour, and therefore, and when you touched upon the security aspect, let me tell you, as a regulator, for Reserve Bank, customer centricity is of paramount importance. So any initiative, any innovation which is happening, customer is at the center, and how to ensure that the trust, how to ensure that the security which a consumer is looking for in a digital payment is taken care of to the extent possible. There is no foolproof mechanism that everything which comes will be 100% foolproof, but before we kind of get into it goes into the system, it is kind of ensured that yes, security, customer protection, all they are taken care of. So the sum and substance is customer at the center, protection of customer is very important. And if customer feels that as a regulator, the ecosystem, payment ecosystem is safe, secure, the onboarding increases by leaps and bounds, and maybe COVID has exacerbated, and maybe I was reading somewhere, it has led to, it has leapfrogged for another 3 to 4 years, which we would have achieved in next 3-4 years. COVID, the pandemic has onboarded more customers into this. So again, the comfort, you took example of 2FA, second factor authentication, additional factor authentication. I think as the ecosystem got enlarged, more and more people started joining, the number of frauds also increased. So as a regulator, we found that yes, apart from password, is there a need to have another authentication method and the second factor. Now if you have seen the payment vision, even whether for international transactions, whether we can have second factor authentication, additional factor authentication. So again, if the trust is not there in the ecosystem, I think onboarding will be affected, and therefore we always look at creating trust, keeping customer a very important aspect, and we move forward.
I also asked a question about your individual preference. Some people say, for example, look to in digital payments for convenience, some for rewards, discounts, some for millennials, for example, they look for rewards and stuff. So as an individual preference, and not just as a regulator, what would be on top of your mind? The reason why I'm asking is, we wanted to do a survey with the participants today, just to get their customer preference, but we couldn't run that. But just wanted to get, at least from the panelists, what would be your preference and why?
I think convenience, speed, reduction in cost, I think these are the things which will attract more. The incidental, the cashbacks and the other things may attract, but I think the base, the foundation will be on how convenient it is, how easy it is to use, how it reduces the cost, and I think these will drive, and every individual feels that if the transactions is safe and secure, I think most of the people will go for it rather than look for a small cashback or some benefits here and there.
Okay. Rajesh, what's your views here? I understand MasterCard has commissioned a study or survey on consumer preferences recently. So is there anything that you would like to share, the results of the report, as well as your personal preference? Yeah.
Sure, thanks. Thanks, Ram, and thanks, Anuj sir, to start the discussion. So you're right. I think from a MasterCard survey standpoint or whatever index we came, I think 3 key elements came as an outcome. I think one was digital, payments are definitely on the rise, right? Customers are really embracing digital payments. Obviously, consumers are also going for convenience, as Anuj also said that convenience is a paramount. But then there is also a component of biometrics, right? Not everyone wants to remember passwords, right? Absolutely, 1-step, 2-step authentication process is there. But are there ways where I don't need to remember password, and this is where biometrics can help, right? You would be amazed to know that 93% of the individuals actually had at least one digital transaction. Now, if we go 3 years back, probably that was not the case. So, to Anuj's point, yes, pandemic has ensured that some of the things have really happened and driven because of the need. But then it's not a short-term phase that we had. It's not that when pandemic is now, on the verge, people will go back to their original choices. Some of those behaviors have really gone for long. So that's what I would say is a summary of some of the, instances we have seen. Convenience, as far as security is there, is a key trend that we see. The number of e-commerce transactions are much larger. Even when people are spending at, POS, at the shop, they are adopting more contactless ways, right? It might have started from not touching, because of the pandemic, but then that has really ensured that at a particular threshold level, those contactless payments are really on the rise. That's much convenient also. So all these, in a nutshell, are really bringing a lot of evolution to our digital payments landscape. So if you talk about my personal preferences, I would say, yes, convenience is important. One of the key things, especially for small ticket, payments. But when it comes to event-based purchases, or let's say comparatively significant size tickets, rewards, loyalty points, cashbacks, and even some of the other things also excite me. So it's a combination. Some of the, like I said, everyday needs, small needs, convenience is paramount. But for big thing, we will, I'm sure many people in the audience will also like to compare a lot of things before they buy something, aspirational. And that's what I'll also prefer.
So the report that I was highlighting, was that a global report, or does it throw any light on India? The survey results, does it match with what Indian users are thinking, or is it the same? Is it security the top parameter?
Yeah,
anything?
Absolutely. So again, it's a global report, but pretty much I would say India and China are driving a lot of that, I would say data for that report. So absolutely in line with that, and security is, the top need. So you're absolutely right. I think Indian consumers are pretty much having a similar trend. It's a comparatively younger population, millennial population. So adaptation to some of these digital tools is much higher in India. So, even if we did, global index, it was very much relatable to Indian consumers, and a large component of that were people from here.
Thanks. Sir, there is a proverb that goes like this, that trust arrives at the back of a tortoise and leaves on the back of a galloping horse. Now, as a regulator, how is RBI trying to build customer trust and awareness when it comes to digital payments?
A lot of steps. In fact, it is very difficult to cover everything here. But if you look at the recent steps, as I told you about the second factor authentication, we conducted a hackathon where the theme, one of the problem statement was that, is there an alternative, as Mr. Rajesh referred to, biometrics? Is there an alternative to OTP so that the life becomes easy and people don't have to remember? And because a lot of frauds were happening, even people were getting the OTP hacked. So that is one approach where we allowed innovators to come and try, and then maybe wherever regulatory framework is required, definitely we with open mind will try to implement that. Setting up a Reserve Bank Innovation Hub, not only for the products which are regulated by Reserve Bank or under the regulatory perimeter of Reserve Bank, it is for the entire financial sector. So somebody who is looking at insurance sector innovation or capital market innovation can also come and try there. Online dispute resolution that for digital payments we have introduced. So the idea is that customer, if there are gaps, there are frauds happening, we should provide a platform, method, means, so that they come to know, or at least their grievances are addressed and redressed. I can talk about switch on, switch off, which has been provided on the card transactions. It gives you a lot of comfort that when you are traveling, whether in India or abroad, you know that no transaction can happen if I have switched off my online transaction or ATM withdrawals, etc. So these are all trust building measures, which ultimately what we are seeing is that onboarding is increasing. And as Mr. Rajesh referred to, the challenge is how to make this irreversible. The growth has to only go up, only north. So that we have to ensure that if people are getting onboarded, if the trust in the system is there, definitely the graph will always go north. So the process has to be made irreversible. So once a person gets onboarded, and the vision for 2025, it talks about 4 E's and 5 I's. 4 E's is e-payments by everyone, everywhere, and every time. And then the 5 I's are inclusion, integrity, innovation, institutionalization, and internationalization. So we are kind of, all these pieces if we put together and we ensure that innovation with responsibility, responsible innovation as we always use loosely, if those are taken care of, I think we as a system, it's not about regulator, it has to be a coordinated effort with the fintechs, with the banks, regulated entities, as well as the regulator, to ensure that the trust which is already there, and it's quite high, it is only kind of we scale up, and therefore the evolution is scaled up further. So that is how we are.
I agree with you, because I think one of the recent initiatives of RBI is this 24/7 helpline, right? DigiSati, which as an industry, everyone came together, although it's on the first phase right now. Second is all this Amitabh Bachchan advertisements on TV,
yeah, exactly.
right? What can you?
Yeah, RBI kehta hai, if you go to the RBI website, you'll find all the details. Then we have got Mr. Amitabh Bachchan as the brand ambassador for this awareness on digital, all kinds of transactions and frauds. We have certain international players in cricket, badminton, they're all now pro bono, means being an employee. We are trying to reach to the last corner and tell that yes, be aware. These are SMSing, phishing, all kinds of things are happening. But if you are aware, things are taken care of. Still, people fall into the trap. Maybe more awareness. Electronic, print media, we are all kind of trying to engage. But then, as all of us sitting here, it is each one of us responsibility that we make people sitting on my right and left, center, everywhere aware that these are the risks, these are things which are happening. Let us be aware. Otherwise, digital payments, digital transactions are as safe as anywhere in the world. In fact, we are the leaders, and when we go for international meetings, they are all overawed by the kind of payment system and the evolution which is and the development which is happening in this sector, because they know if India can do it, which is a diverse population with a vast geography, anybody can do it, but still they are not able to do it. So we must educate and make people aware and see that the trust in the ecosystem is not restored, it is further enhanced.
So Rajesh, so changing the track a bit. So as a technology company, do you think technology is shaping the consumer behavior, or is it vice versa? For example, the consumer behaviors, helps in the evolution of payment ecosystem that we understand. What are the kind of offerings that is coming up? Is it primarily due to the consumers' need, behavior, so?
Sure. No, absolutely. Again, I think there's no yes or no answer for this. It's a both ways thing. But I think to build some perspective, right? Since we do a lot of data analytics and insight, when we started, we used to do a lot of, let's say, descriptive analytics, right? What it means is you'll analyze historical trends, you'll see how people are behaving, and based on that, you create solutions, right? Then eventually we move to, something called predictive analytics, right? We start predicting based on what the historical trends were, and then create solutions before the consumers actually need, right? And then there is something which nowadays is more called as prescriptive, that it is not only just good enough to predict, but we also need to, build awareness around what they should do, right? Which is what prescriptive is all about. Now, to answer the question from a technology standpoint, absolutely, based on what consumers need, there are technology and solutions that we have built over the years. But now the power of computing, as we say, artificial intelligence, is such that the time which it used to compute and used to take a very long time is now reduced. And hence, at a real-time basis, we can really ensure that those behaviors are not only, let's say, evaluated, but also be predictive for future with all the supervised and unsupervised models that we have in artificial intelligence. And then we could create solutions much earlier than when their need arise. And that's what all, I would say, technology companies, many of the fintechs are in, thinking a lot ahead in terms of what future needs will arise based on what we have seen and the pace at which changes are happening. And you would have heard that it's a cliche statement, it's much higher than what it used to be. So we are creating those solutions. Now, again, to your point on are we over predicting, are we under predicting? There's a well-known statement which we say we sometimes overdo for things that will happen 1 year from now, but we definitely underdo for things that will happen 5 years from now. So as in whether it's our organization or how the world is moving, we need to go both ways. While we need to continuously create products and solutions on what consumer behaviors are, but then predict what will happen in future and how can we are available there real time, right, to bridge those gaps.
Okay, let me put the question in a different way. Now we see the products like BNPL,
yeah,
right? So was this a product offering which was sort of a bait to the consumer, or do you think there is a need because you have EMIs and other ways, right? So what are these products, the offerings? So and the other day we were talking about SNPL. So why don't you talk about that?
Absolutely. So again, everyone knows that BNPL. Initially it used to be okay. I will go to a showroom, buy a refrigerator, probably pay 5%, 10% of the down payment, and rest of the things will get deducted, right? I think BNPL, the way it is integrated to our daily purchases now, right, with all the e-commerce giants, it's a much more integrated version, much more convenient version, and hence we see, especially for young and millennial population, you know, I think they will probably not aspire for too long to get things. I think when we were growing up, even you know, bicycle used to be our birthday gift, right? And we used to wait for a year that I need to work harder to get a bicycle on my birthday. I think today's population is more around, yes, I will have the capability to pay, but meanwhile, with all guardrails in place, I would like to buy this because that's an impulse buy, and I really want to have iPhone 14 with me before it gets launched in India. I think that's how the behaviors are. Now to talk about the other interesting thing which you spoke about, save now, pay later. Again, I'm sure there are a lot of fintechs now also in the market where that's also serving a particular segment, right? If I go back to again those indexes thing which we spoke about, now in last 2.5, 3 years, what we have also seen is globally and not only in India, the savings have increased manifold, right? People were not able to spend a lot on travel as well as on discretionary spend. Hence, a lot of savings have developed. So there is a population who would, like to get benefits from their saving. It's not like a fixed deposit, but in the way where some of their savings can actually be leveraged and give them advantage to buy something aspirational in mid-term and not in immediate term. And there are companies which are really thriving on leveraging that aspect of consumers and offering them solutions by working a real good model with the different providers in the industry. So again, a lot coming ahead. I'm sure many companies are working to ensure that in an end-to-end payment flow, where are they relevant and how do we plug those gaps? So many of those solutions, I would say, really exciting to see how next 6 months and 12 months are going to play in that area.
Sir, yesterday the governor did talk about the central bank digital currency. He mentioned that RBI is working on it and they will probably start with the wholesale launch followed by retail. Now, what problem is a central bank's digital currency in India trying to address? What will the design look like? And what safeguards do you think we have in place to ensure that the security of the currency and citizens' privacy, and more importantly, I don't think this is a consumer's preference to, that led to a development of CBDC. It's a technology development. So what's your view on some of these questions?
So you will be disappointed that some of the questions I may not be able to respond because it's in works and we all understand. But on the motive and motivations and technology, I'll definitely try to cover. To start with, I must say this is the consumer behavior which is kind of leading to this, not only in India, across the globe. How it is? We all know the private cryptocurrencies. For the next generation, it looks like cryptocurrency is a revolution, and some of the other sides use that the technology is something which is going to bring this, and everybody started talking about it. So CBDC is nothing but a physical currency converted into a digital currency. Physical cash which we have is digital. Now, if that is backed by a sovereign or by the central bank, and the underlying technology could be new age technology or could be any technology, but as long as it is backed by sovereign, backed by the central bank, I think the trust, which presently is not there when we talk about private currencies. In fact, I always say private currency or privately issued currency is an oxymoron, because a currency cannot be privately issued, and if it is privately issued, it cannot be a currency. So therefore, what we wanted to do is that those next gen people who want to get into this, why not get on with CBDC and enjoy the technology, new technology which is going to support it. Now, the other motivations are the financial inclusion part. Despite a lot of efforts, lot of awareness program, we still find deep interiors where there is no internet, no connectivity, no electricity. There are use cases in CBDC where you get offline facility. So maybe now that a person will know that it is a risk-free or it is a central bank issued currency, as we all know, it is the liability of the central bank. So directly central bank money, if I'm holding, the trust in that currency will be much more than what we have in the present electronic money. So with offline functionality, with trust, maybe the idea is that we will be able to reach the interiors of the country and people will be started using it. Other motivations are, again, the huge country, the expenditure on currency management, which is physical currency, right from the printing to the time it reaches the bank's currency chest, the transportation, the storage. All that will be history the day. We are not envisaging that it will happen in next 5 years or next 2 years, next 7 years. It's all because we are taking a lead in this. These are all we expect will happen, and ultimately the gains will be that the sovereign, the country will gain. And as he referred to governor's statement, yes, we are working very actively on this, various kind of technology, the security, you mentioned about security, that is again utmost importance because again consumers who would use CBDC, we need to be very sure that the trust in CBDC is there when we go for a formal launch whenever in the distant future. But we are working on that, various kinds of use cases we are trying, the technology we are testing, we are also looking at the architecture, the design. I will not be able to answer to your specific question, which design. But then we are looking at a wholesale segment. Wholesale means it will be between financial institutions only, and the retail, which will be like people like us can use. Both we are working, maybe wholesale will come out first, try to see where the issues are, and if no issues are there, then definitely we move to the next stage. Then we'll try retail, we'll get feedback from the users, and accordingly, based on the feedback, if tweaks are required, if changes are required, if the technology, the platform is to be changed, the throughput is a big issue because it's a huge country, the number of transactions, the TPS we talk about. So all are on our plate and we are looking at everything. Let us hope that we get onto CBDC ecosystem again, not in a very far from now, but yes, we want to be very sure before we formally launch for a countrywide CBDC.
Just a quick rejoinder. What is it that UPI cannot do that there is a need for a CBDC? Because in other countries, where there is no real-time payments, they leapfrog to CBDC, at least at times. So India has a thriving UPI. I know offline payments is one area, but do you think cross-border is another area that, that could help in CBDC?
Yeah. Let me again clarify that UPI is part of payment system. CBDC is part of currency system. Ultimately, the currency system gets merged. One leg will be in payments because ultimately we pay through currency. So there are two different systems so far as a regulator we understand. Now, if we are already so much ahead in payment system, why do we need CBDC? The simple answer is, why not provide more options to people? And as I said, this is central bank's liability, direct claim on the central bank. The trust on CBDC is, as and when people adopt it, will be much more than what we have in electronic money. One of the important features which I would like to mention is the programmability part, which you cannot put in physical cash. Programmability, when I say, see, to the direct benefit transfer, I always refer to some scheme which government announces, Pradhan Mantri Anna Yojana. Whether the people are with that money are purchasing grocery, we do not know. We credit the amount to the beneficiary's account, but after that we don't know what the amount has been used for. But in CBDC, you can program it to ensure that the end use is what you want it to be used for. If it is for grocery, you can only use for grocery. It may be far-fetched in future. Even the loans, the MSME loans will be programmed so that that amount can only be used for MSMEs. So it kind of takes care of so many aspects apart from various other features. When you talked about cross-border, let me tell you the benefit of cross-border in CBDC will be there is no concept of time zone difference because it is instant settlement. So whatever be the time in other country, the settlement happens immediately. The efficiency is amazing because of the technology which some of the countries are trying on the pilot basis. So the benefits which comes from cross-border is also immense. That is another use case. So first we build domestic CBDC and then we can look at how to cross border and then align with other countries. For that, other countries also have to join that bandwagon and do a cross border.
Thank you. Final question to you, Rajesh. So what are the key trends and opportunities in the next decade in digital payments? I'm sorry you have probably 1.5 minutes.
Yeah, no, I understand. You were already asked based on the time. So I would say some of the trends we have already spoken in terms of different modes of payment. I think one of the thing is about leveraging blockchain, right, to an extent. And that has an application not only to the payment field, but many other fields, right? Like, Mr. Anuj is also saying on tracking whether the objective of what we really wanted was achieved eventually or not, right? In payments, and I can tell MasterCard as a company has the second highest patents in blockchain around the world. So a lot of products and solutions are built with that future in mind on how do we ensure that whatever payment methods we create, ensure that the objective of some of those payments are met, till the last point, and we are able to track the entire, I would say, workflow through how it passes by. So, one of the key trends which I will talk to, about, again, I will not be able to predict all the products and solution, but things that all the companies which are really in this space need to take care about: agility, right? How quickly we can come up with the solution. Gone are the days when we used to take months to come up with a product. I think by that time there are 5 other companies who are able to launch this very quickly. So, rather than being specific about any product or solution, I will say trends will be more around be agile, as quickly and quick on feet. Many, I would say, opportunities will be there for the companies to really thrive on, and come up with those. That's what we will see that'll occur for many more years.
Thank you. Can we allow one question or one audience question? Yeah. Is there any question that you would like to pose to the panelists? Anyone? All right. We have a question? Sorry, yeah.
Hello. Yes. Hi, sir. At the possibility of sounding a bit naive, I would like to ask this question about digital currencies. So you mentioned these are backed, CBDC specifically is backed by sovereign bonds, if I'm not wrong, or sovereign...
No. So like physical currency is backed by assets, this will also be backed by assets. Okay. Right? Sovereign, not the sovereign bonds.
Sovereign assets.
By the country.
Okay.
Yeah.
So my question mainly is that there are certain, I don't know if you call them private currencies, that are backed by things like, so for example, if you hold a specific amount of that currency, you are liable to receive a certain amount of kilowatts of power generated by solar means, right? Solar energy. So is there something like that the government could plan around CBDC, where the value of the currency is not based on, it's based on energy-based assets, sustainable energy-based assets, where something like that, is that possible?
I don't think I think he's referring to mining part of it, but which is different from...
No, not mining, sorry. So the value of certain currencies, private currencies, or certain currencies that are outside regulated digital currencies, tend to be defined by things like sustainable energy kilowatts, right? So I worked with a company in Ahmedabad who does this. They have a currency that guarantees the owner a a specific amount of kilowatts that is generated by solar power in somewhere basically, right? So what do you think about this model? Can CBDC based on these sort of assets can be based?
No, see, that is why the Reserve Bank's stance on private currency is very clear. What it is backed by, whether there is an asset, whose liability is it. Therefore, even the stable coins, if you are referring to that it is backed by something, like you are talking about energy, who is monitoring that, whether it is pegged to the right kind of assets. Yeah. So that is why the concern, and therefore the entire globe knows the Reserve Bank's stand on private currencies, right? So the present system where we issue currency, it is backed by asset. Similarly, digital currency, as I told, it is mimicking physical currency into digital form. So again, it will be backed by assets as presently we are doing it. So there won't be any difference so far as backing by assets is concerned, even if it is digital. All right?
Thanks, yeah. Thank you.
Thank you.
Before I conclude, let me say that there are always that regulators are kind of stifle innovation. So let me say that we are not, as a regulator. We only put guardrails, and so that the innovations happen around the boundary, inside the boundary, don't cross the boundary. So all the innovations, so therefore all the fintechs who are here, again a very famous saying that customer is at the center, and therefore we should not feel the consumer's behavior is kind of inhibiting things. In fact, they are the purpose. We should look at them and then innovate within the guardrails which a regulator time and again places before. So that's the message I thought I'll convey to all my friends.
You have summed it up very well. It's been a fantastic discussion. Thank you so much, Mr. Anuj and Mr. Rajesh.
Thanks,
Thank you.
Thanks, Anuj.
Thank you.
Thank you very much. And if I may please request all our speakers to come together for a group photograph. And I believe that was a wonderful point also shared by Shri Anuj Ranjan in terms of the guardrails that allow actually in terms of fueling the purpose more than anything. So that's absolutely a wonderful point there. And we've had some wonderful takeaways from this particular trialogue as well. And that being said, we'll also set the tone for the next fireside chat. So kindly be seated. We'll get it started in just a couple of minutes. Thank you very much. Thank you, sir. I'd like to inform our members of the audience that the next session will commence in the next few minutes. So that being said, all the ones who are still standing there, you can please come forward and take your seats. We'll also set the stage and get the session started in the next couple of minutes. Thank you. And with that, ladies and gentlemen, time to deep dive into our next fireside chat. While we do so, once again, I'm going to request everyone to please take your seats. And we love how the energy flows in even after the discussion, even after the panel sessions, or for that matter, the chats that happen here. We love how the set of audience also want to take the questions forward with our speakers. So on that note, let's move ahead and let's get the next session started. Well, we do realize that Aadhaar indeed has been the bedrock for all the government welfare schemes as well. This particular fireside chat is actually all about rethinking welfare distribution through Aadhaar. And joining us, first up, we have with us Rajiv Agarwal, Director and Head of Public Policy, India, Meta, who will be spearheading this fireside chat. And joining Rajiv on the stage, we have with us Dr. Saurabh Garg, Chief Executive Officer, Unique Identification Authority of India, UIDAI. So if I may please invite Mr. Rajiv Agarwal and Dr. Saurabh Garg, and can we please have a huge, huge round of applause for the transformational impact that Aadhaar has had in our lives indeed. And this time we'll focus on rethinking welfare distribution through Aadhaar. So that's the focus of our session. And I'd like to hand over the proceedings to Mr. Rajiv Agarwal. Over to you, sir.
Thank you. The world's truly a stage, and I think so India is absolutely at the center of it. And India today is at the center of the digital ecosystem globally, and I think so you have a very crucial role to play, and it's indeed a privilege for me to be here with Dr. Saurabh Garg, who is who is at the heart, at the center, and who's managing the entire Aadhaar ecosystem, which is at the very center of the Jam Trinity, and literally maybe today the lifeline of India, if I were to say so, for all of us who have been entering airports, verifying our ITRs, or as simple as going to a kiosk to obtain a SIM card. Aadhaar is something which has become almost ubiquitous in our lives today. So a privilege to have you here, sir, and to welcome you on the stage.
Thank you. A pleasure for me to be here on this forum. And I must thank the organizers of the Global Fintech Fest for inviting me. It's a pleasure to be here. And all I can say is that Aadhaar is happy to be the digital rails on which the digital economy is hopefully running well. And look forward to continuing the role of being the digital infrastructure, the digital public platform, so to say, and look forward to this journey as we move ahead.
Absolutely. Digital rails, I think that's, I'll take it off from there. So we have, and if my memory serves me correct, over 300 central schemes, 500 state schemes that are using Aadhaar for effective delivery of these services, welfare services to citizens across the length and breadth of India. Would really like to ask for your insights on how does Aadhaar really help in linking welfare distribution to the citizens and help the government in making sure that there's more effective and impactful delivery of these services to the citizens. And just as a side question, are there any other current schemes that you're looking at towards linking with Aadhaar in the near future?
Yeah. So let me just step back and say that it's been about 10 years, about a decade since Aadhaar started in 2010. And since then, we've reached a stage that we've issued about 1.34 billion, 134 Aadhaar cards. And we are at a stage where 100% of adult residents in the country have Aadhaar. So anyone above the age of 18, unless there are some isolated pockets, remote pockets, I would expect that everyone has an Aadhaar, and I'm sure, and I do hope that everyone in this room does have an Aadhaar. Otherwise, my statement would fall. So we've reached a stage where 100% of adult residents of the country have an Aadhaar. Even if we look at the 0 to 18 age group, it's between the ages of 5 or 6 to 18, also it's more than 92, 93%. And by the time they reach 18, it becomes 100%. And it's the 0 to 5 age group where every year we have about 2.5 to 3 crore births where the penetration is low, and that's an ongoing process. We work with the state governments, and by the time they reach 5 years, most of them have an Aadhaar. In fact, our objective is with the Aadhaar linkage with birth registration, that along with the birth certificates, we should be able to provide the Aadhaar number. Obviously, there would need to be a mandatory biometric update at the age of 5 and 15, so as to ensure that authentication can be done. But so given that after 10 years, we've reached this position of 100% adults having an Aadhaar, that in itself transforms the way that we can conceptualize and design programs and schemes. And I think that came to the fore when a couple of years back we launched, there was PM Kisan, there was Pehel, which enabled within a couple of months of the scheme being conceptualized that it got implemented. And that happened because of the existence of Aadhaar. As you mentioned, we have nearly 1,000 odd programs of the government, 650 of the state governments, around 300 odd of the central government, which are run on Aadhaar. And the reasons why they do, I think, are the benefits that Aadhaar offers to these schemes. And just to enumerate some of them, one is obviously deduplication, that you can't have the same person twice in that same program, so there will be no doubling of benefits given to the same person or same family. The PDS, for example, has seen significant gains in this respect. The second is removal of ghost beneficiaries. So if the person actually doesn't exist, but someone has put that person's name, that automatically gets deleted once the Aadhaar authentication is done, and there is no biometric behind it, there is no fingerprint, no iris, no face behind it, automatically it gets deleted. The third is in terms of being able to transfer funds directly into the bank account of that person, and therefore the possibilities of leakage of funds reduce. Now we have reached a situation where right from the treasury to the ultimate beneficiary, for example, in the Prime Minister's Awas Yojana, you can have the funds getting transferred directly to the bank account based on the documentation that is done. And the fourth, I would say, is in terms of how we can identify beneficiaries. The ability to be able to target, select, identify beneficiaries with Aadhaar provides a totally new method. And it's because of these benefits is why all the schemes, the 1,000 odd schemes, and the focus is to ensure that any beneficiary-oriented scheme or a scheme oriented towards a group of beneficiaries. For example, family is a unit, PDS is linked to Aadhaar, or we have self-help groups or other groups of beneficiaries. So if any benefits, subsidies, or any service needs to be transferred to them, it can very well be done using the Aadhaar platform. And the authentication that Aadhaar offers 24/7 is the power that all these schemes leverage. So you are asking me what can be some of the new programs. Any program which wants to essentially remove ghost beneficiaries, remove duplication of beneficiaries would benefit by this. And the direct benefit transfer mission, which operates under the Cabinet Secretariat, they've done an analysis of the benefits that have accrued to different programs due to the direct benefits transfers offered by Aadhaar. And just in the 4 or 5 sectors that they've done the analysis, the benefits have been over 2 lakh crores over the past 5 to 7 years. So I think that's the reason why a lot of programs run on the Aadhaar rails, as you mentioned, and would benefit from that. And we would be very happy to ensure that these benefits used by different programs and schemes.
It's actually amazing, and I'm sure, I had somewhere in my notes that the coverage is 99% of the adult population, so I actually stand corrected. And unless we are actually able to isolate maybe one table out here in the entire convention center, where 3 or 4 people could be seated without an Aadhaar in this entire setup, and that too will be, I guess, a tough one to find out here. Absolutely, but with the with the way Aadhaar has really changed the way schemes are run, the way schemes are even conceptualized. I mean, you mentioned PM Kisan or the Pehel schemes, which actually rolled out within 2 months of conceptualization, something which was unthinkable maybe a decade ago. So do you see a paradigm shift, a change coming in, say, in the next 5 years in terms of the welfare distribution, the way it is done, and especially in the linkage of Aadhaar to the way welfare schemes would be laid out?
Yeah. So I think as I mentioned, the different schemes and the focus that any beneficiary-oriented scheme. So I think now we have reached a stage where we can think of how we can move from an application-based process of selecting beneficiaries to an entitlement-based system, where keeping in view the entitlement or keeping in view the kind of beneficiaries and people who would be benefiting, we can move towards that, and that will also help in a much larger sense the inclusion of people at the vulnerable or at the bottom of the pyramid. And when Aadhaar was initially started, people spoke of the dangers of exclusion because of Aadhaar. And I would like to say that now, in fact, it's the benefit of inclusion because of Aadhaar, because automatically Aadhaar gives the platform to ensure that anyone who has an Aadhaar can get included in the program. So I think as a tool of inclusion in itself, using Aadhaar would help in that. And I think that's the vision of Digital India going forward, to look at how and which is the vision also of Aadhaar, how it can help in the ease of living of residents. And that's the vision of Digital India. And Digital India encompasses not only the government sector, but also the private sector. And all the fintechs are out here today, startups are out here today. And we look forward to partnering with the different partners, sectors, private sector players, startups in this vision of Digital India, in which Aadhaar. And in fact, I would like to ask you that, since you are a representative of a very large platform, how do you think that more private sector can help in the vision of Digital India that the government is very keen to propagate going forward?
Oh, I'd not expected a reverse, but no, but thank you for this. I truly believe that even as the government has responsibility towards, say, the welfare schemes we've been talking of, and Aadhaar is so ably, enabling the entire distribution of those welfare schemes, the corporate sector or the private sector too has a role to play, especially in terms of the vision of a digital India and a digitally enabled India. If I were to talk of Meta and the platforms that we operate under here, be it Facebook or Instagram or WhatsApp especially, and we do have a booth out here, then there's so much we can do. And I guess if we were to look at the last 2 years when the COVID pandemic hit us, the way the corporate sector also rose to the occasion to enable the delivery of services to people. So if it was tying up with MyGov on the COVID help desk and the COVID chatbot, with over 8 crore people, citizens of India, actually getting to avail authentic information on COVID through the MyGov chatbot, or almost 3.5 crore people downloading their vaccination certificates on the chatbot. And now, obviously, the latest addition is the DigiLocker services. So that's being rolled out in a phased manner. So we will see more and more of this digital enablement coming through these platforms. And obviously, it's partnering with the government. The two have to move hand in hand. be it in terms of these citizen-centric services, be it in terms of enabling small businesses to run their businesses in a manner in which the online platforms are available for them to reach out to their customers and to actually be able to, even when there are geographical or other blockers, they can actually run their businesses. I guess, and this to us has been, it's been a great humbling experience, if I may say so, when people have actually used these platforms to connect with each other, to reach out to each other for help, for oxygen, for any other help that was needed. And I think so that has been a great learning experience for us also.
So, I mean, if I can just add to this, from Aadhaar side, from the UIDI side, I would, in fact, want to mention it since a large number of people, startups from the fintech world are here, that we look forward to working closely with a lot of players in the private sector on how they can also use the benefits of Aadhaar. Obviously, the issues of privacy, of consent remain paramount, but a voluntary usage of Aadhaar, by which the benefits of the eKYC onboarding of customers for different private sector can be enabled. And we already have some offline verification mechanisms which are based purely on the voluntary usage, as I meant, of the consent of the individual. There is the QR code, there is the XML file. So we would be, on our part also, happy going forward to look forward to working with them and look at opportunities that exist. But obviously, let me again say that privacy and consent remain strong pillars on which Aadhaar is based on, and that will remain paramount as we go ahead.
No, absolutely, and privacy has to be the mainstay for everything that we do, because I mean that's something all of us as individuals, as citizens, and as responsible corporates have to make sure that that is protected at all costs. So in fact, you did mention startups, and that's something we passionately believe in. We have been at one point in time a startup ourselves, and so we are looking at bringing in startups even in the, as technology expands and we look at extended realities, we look at the metaverse. How can we bring, and India can actually be the hub of technological advances in that field. So that's something we are trying to advance. Through CBSE, we are trying to get an entirely new generation which is digitally enabled and teaching them the new technologies and exposing them to the possibilities that exist out there. So we feel that we have a role to play, and we would definitely like to walk hand in hand with the government and with obviously the UIDI going forward. But let me come back to the point that you had made of almost the entire 100% of the adult population being covered by Aadhaar. And given the fact that we are talking of financial services, we are talking of the fintech sector out here, how do you see Aadhaar being leveraged for more effective delivery of financial services? The last maybe 5 to 10 years have actually been a game changer, but how do you see this being leveraged much more? And we do hear talk of Aadhaar 2.0. So what can the fintech sector expect from the Aadhaar 2.0?
The usage of Aadhaar in the financial sector has perhaps been the most heartening. I don't know whether I mentioned this. We have around 8 crore authentications a day that happen on a daily basis. Someone somewhere is using it 8 crore times a day. And nearly 40% of these authentications or usage of Aadhaar is for the Aadhaar-enabled payment systems, by which through the micro ATMs, which are these POS machines which are there with, let's say, a Kirana shop somewhere, there are nearly 50 lakh micro ATMs across the country, around 35 lakh operating on any given day if you pick. So, I mean, that also enables, if I can say that, makes geography history, in the sense that even if you don't have a brick and mortar branch, the fact that you have a Kirana shop having this micro ATM, that villager can operate their bank accounts using them. They can deposit cash, they can withdraw cash by using Aadhaar authentication, fingerprint authentication. And the 6.5 lakh villages and 35 lakh machines opening at any time. So I think the banking sector has really leveraged the use of the Aadhaar ecosystem. Going forward, we are working with the regulators, whether it's RBI, whether it's SEBI, IRDA, PFRDA, on how regulated entities which are working under their supervision, how they can also use the power of Aadhaar with, of course, consent of the individual to get onboarded as an investor, as in the fintech sector, in the NBFC sector. And I'm happy to say that in the last few months itself, nearly 300 odd entities, NBFCs, investment advisors regulated by SEBI, and such other entities regulated by any one of the regulators have been onboarded. And we expect that the onboarding experience of getting new customer acquisition for them would become so much more seamless going forward. On our part, we are looking at ways by which we can help in the ease of living of residents, as I mentioned, and that ease of living would include the ability for them to look at investment opportunities that they have, or banking opportunities, or payment opportunities that an individual has, and how more and more such entities can leverage Aadhaar for onboarding new residents and give residents more choice going forward. The number of such applications which come through the regulators is increasing, and I'm quite hopeful that this will further increase the ways by which Aadhaar is being used by these entities. I can add one more thing, that we've built a sandbox in our tech center, so that anyone wanting to offer a new service, we can do a proof of concept, and so that they can test out some new service which has not been hitherto thought of. Obviously, we restrict ourselves to those entities which are regulated by any one of the regulators. So as long as it's a regulated entity, we would be very happy to have them look at what can be done. And in fact, immediately after this session is one such mechanism that we have developed to streamline onboarding of new customers using our M-Aadhaar app. So that would be discussed, and we would be happy to get comments of the fintechs who are here today to see how that process can get further streamlined. So we have an authentication system which obviously pings in onto our servers, and we have the verification system which is offline using the QR code, using the XML file, and now that we would be discussing, and which is in a way our first offering from the sandbox that we have internally, the use of the M-Aadhaar app, which can be done much more in a wide manner, and of course with the consent of the resident or the mobile phone owner on whose phone the mobile app rests, the M-Aadhaar app rests.
That's actually pretty interesting, and I would say music to our ears, and a lot of people out here would would really go for the sandbox. I mean, it's actually work being cut out for all of us to use the sandbox, and obviously the M-Aadhaar, which is one of the first offerings that you've mentioned out there. But let me move our focus to the to the global arena, and we have seen reports UIDAI collaborating with international agencies in the recent past, and this is basically on the Aadhaar digital ID architecture that you've been establishing. So, and this is something we have been seeing even in UPI. We have the NPCI, and the kind of templates that India is preparing and setting up which are now being followed increasingly by other countries and across the globe. We do have the G20 presidency also now coming to India later this year, and India is going to be, hosting G20 for the next 1 year. Do you see Aadhaar as being one of the mainstays of India's, so to say, India enabling the globally integrated fintech, on the fintech sector and financial technologies?
There is a lot of international interest in the Aadhaar architecture and the fact that it is a frugal architecture, it is cost effective, and it's been scaled up within a period of 10 years to a level of 130 crores or more. We get a lot of visits, delegations from different countries across the globe. We are in touch with the World Bank and other UN agencies on how the digital architecture offered by Aadhaar can be gainfully used by other countries. So going forward, we no doubt look forward to working with other countries who wish to develop their own legal identities. In fact, the United Nations Sustainable Development Goals has as target 16.9 a legal identity for all by the year 2030. So Aadhaar offers an excellent scalable model for many countries. On our part, we would be very happy to work with them. No doubt the G20 chair offers another opportunity to showcase the India stack and the work that's been done in Digital India. And I think we have a number of offerings and on our part and if I can put it on behalf of Digital India, definitely we look forward to working with other countries. And I'm sure we look forward that our ecosystem partners in India would also get the opportunity to work with partners across the world in developing the India stack and the other products of Digital India across the world.
That's really heartening. I am not sure how much time we have, but I can see the clock still gives us a few minutes more. So I'd like to open up to the audience any questions that you would like to raise from Dr. Saurabh.
There's this lady out here.
Second row. Yes, please, ma'am. Could you just identify yourself and then ask your question?
So, my name is Savita. I represent a company called Hakdarshak. We are in the business of helping the government's agenda of scheme saturation. So we work with a lot of beneficiaries, helping them to discover their schemes through our tech platform, and then also providing them the services to get access to the schemes. One of the challenges that we're constantly seeing, right? So you're right in saying the saturation of Aadhaar enrollment is 100%. The biggest challenge we see and the biggest reason for exclusions from benefit delivery is the fact that their Aadhaars are not updated. And one of the challenges from an ecosystem perspective players like us have today is that private sector is not, to quite a large extent, it's a very small set of players who are allowed to do Aadhaar updates. So is there any thought in terms of opening that up, of course with the right guardrails in place, to enable that issue to be corrected? Because we see that even though the entitlement exists, there is exclusion because the beneficiary database is not updated in Aadhaar. Thank you.
Yeah, so let me just mention that updates is the area that the focus is now, because as I mentioned, enrollment is now more or less behind us. And I can mention that last year alone, there were nearly 20 crore updates that happened across. We are expanding our infrastructure and we are onboarding all postmen who have been given tablets and they can do updates. So we'll have 1.5 lakh postmen so they can go house to house and update. A large number have already been updated and going forward all the postmen will get updated. We have around more than 50,000 centers across the country where these updates happen. A lot of the citizen service centers which exist, if they meet the benchmarks that we've set out, many of them also are on this on our update platform or our update ecosystem. Apart from that, we've also put on the online mechanism. We have an online portal where people can update their address, which is one of the most common fields for updation. So we are looking at ways to strengthen the update ecosystem. As you mentioned, we need to have the appropriate guardrails in place to prevent any kind of frauds happening. We are also now encouraging people to update their Aadhars at least once in 10 years. We've just recently brought out the notification for that. And given the fact that it's been about 10 to 12 years since we started Aadhaar, it's a time that at least once in 10 years the update happens. And possibly going forward, we'll be encouraging for biometric updates also. I'm confident with these steps, we would have an ecosystem, if not already in place, with a combination of the mobile app, the online portal, the postman, and our enrollment 50,000 odd, which will take care of this. And we are seeing increasingly the number of people using the online mechanism is so much higher. And I think that would take care of even some of the areas which may have got left out.
I think we have time for one more question.
Hi, here. एकता फ्रॉम जी बिजनेस सर, मेरा सवाल आपसे ये होगा कि कस्टमर से जुड़ी, कंज्यूमर से जुड़ी और कौन सी नई सुविधाएं आप आधार के साथ लिंक करना चाहेंगे, और स्पेशली जो बीते दिनों में हमने फिंगरप्रिंट फ्रॉड भी देखा, तो बायोमेट्रिक्स को लेकर आप क्या कहना चाहेंगे?
जैसे मैंने बोला कि हमारा विजन है ईज ऑफ लिविंग. जो भी स्कीम the benefit जो चाहती है from Aadhaar platform usage, which is deduplication, removal of duplicates and ghost beneficiaries, वो स्कीम जो भी है beneficiary oriented schemes हैं, हम उनको चाहेंगे कि वो आधार प्लेटफॉर्म यूज़ करे और इसका बेनिफिट करे. Cyber security is one area that we are constantly on top of, whether it's any attempted fraud, any report of fraud, and we continually update our security systems in terms of that. Recently, there were some attempts we heard of use of what is known as gummy fingers. So we brought in a liveliness check also in the fingerprint authentication system. So we nip, our attempt is to nip any attempts to try and overcome the systems. We have a strong cyber security team. We work with different agencies, both technical agencies, intelligence agencies, to get information on this. In fact, we've recently announced a bug bounty program also that we would like to work with ethical hackers and see what kind of vulnerabilities they can detect in our systems in a closed environment. So let me assure you that fraud prevention attempts by this is something that we are constantly abreast of, and that's highest on our priority. As I mentioned, we do about 8 crore authentications a day, and there have been attempts, but various attempts are where there is some amount of collusion or some other kind of issues. It's not something which is related to our Aadhaar ecosystem, but even then, it is something we give the highest importance to.
Yep. Thank you. I think so. That's really heartening to note. I know our time's up, so I think we'll have to move on. But thank you.
Thank you. Thank you. It's been a
pleasure being here on the stage with you.
Thank you. Thank you. Thank you.
Thank you. Thank you very much. I'm going to request you both to please come together for a quick photograph. Ladies and gentlemen, we managed to gather some very salient data points through this session, for which I'd like to thank Dr. Saurabh Garg. Thank you very much, sir, for joining in. And thank you very much, Mr. Rajiv, for beautifully spearheading this fireside chat for us. On that note, ladies and gentlemen, it's time to move forward with our next session, and we're going to quickly set the stage for the same. That being said, I'm sure you can all notice that I'm wearing my badge as well. And the reason is that I'm also going to urge all of you to ensure you all please wear your badges. This evening we have a session featuring a government official, and for security reasons, I'd like to request all of you to please ensure that you keep wearing your badges at all the times. So that's a humble request, kindly do so. And with that, we're about to also focus on the opportunities for fintech as we explore new horizons in Aadhaar usage. And that being said, we're about to get the next session started in just a minute or two. That being said, I'm going to once again request everyone to please take your seats. Thank you for your patience, ladies and gentlemen, and thank you for being seated as you get up for the next session. We're focusing on exploring new horizons in Aadhaar usage as we also explore the opportunities in fintech. And before we invite our speaker on stage, first up we have with us Colonel Nikhil Sinha, Director UIDAI, who will be setting the context for this session and also introducing our speaker for this session for all of us. So on that note, ladies and gentlemen, first up, can we have a huge round of applause and please help me welcome on stage Colonel Nikhil Sinha, Director UIDAI. A huge round of applause, please. Thank you so much.
So good evening, ladies and gentlemen. This session is all about demonstrating to you certain evolutionary ideas that are taking shape at UIDAI. Let me begin by giving you a did you know. Did you know that the first Aadhaar was issued in September 2010 in this very state of Maharashtra? So now, in about a week from now, we shall be completing 12 years of the first Aadhaar being issued and entering our 13th year. This last decade has been highly eventful for Aadhaar. Apart from successfully facing the legal challenges at the Supreme Court and incorporating the essence of the Supreme Court judgment in the Aadhaar Act, we've gone about rolling out the world's most sophisticated and the largest digital identity program. And in doing so, if I may add, allaying the fears of a lot of skeptics. As you just heard the CEO saying, we have enrolled 1.3 billion residents and authenticated them 81 billion times. Through direct benefit transfers by saving leakages, we have effected a savings of more than 2.2 lakh crores in welfare distribution. These are astounding numbers by any means, and I'm sure at the time of conception of Aadhaar, these were unimaginable. So we've gone there, done that. Having achieved all of that, what next? It's perhaps time for Aadhaar to reimagine itself, to continue to stay ahead of the times. It is time for Aadhaar to adopt new technologies, to envision and to enable new use cases. It is time for Aadhaar to perhaps play a larger role in the India story, which is just about starting. It is time for Aadhaar 2.0. Now, as part of our vision for Aadhaar 2.0, there is a renewed focus, as the CEO just mentioned, on increasing the ease of living of residents. This is being envisioned by intensifying Aadhaar usage, both in offline and online mode, both for the government as well as the non-government sectors. Now, offline verification of Aadhaar has got great potential, which is really waiting to be harnessed. It has the inherent strengths of being secure, private, and voluntary. As also, since the Aadhaar number per se doesn't get shared in offline usage of Aadhaar, there is very little requirement of infrastructure being developed. Add to that the possibilities which open up when you start using the local face match, offline face matching of Aadhaar. So the two modes of offline authentication, of offline verification, that is the secure QR code and the XML, are already part of the Aadhaar's innovative product portfolio. Perhaps what is holding back the explosion, the exponential adoption of offline usage of Aadhaar is the process friction that is there in the sharing of offline Aadhaar. And that is something which is easily addressed by technology. The ideas being presented to you today aim to address these very areas. They will get to the residents more services and benefits, and therein lies the opportunity for you, our industry partners, the Fintech. Now, Dr. Vivek Raghavan, advisor UIDAI, will be presenting these new ideas to you. These ideas are just taking shape at UIDAI. At the moment, they are ideas or proofs of concept, if you may. They would undergo the complete process of consultation with all stakeholders. That includes the public and the industries, before they are finally rolled out in the shape of applications. Today's demonstration is one such exercise in making you, the Fintech, aware of the latest developments in UIDAI and also obtaining feedback from you. So now I hand you over to Dr. Vivek Raghavan, who will move forward with the presentation and with the demonstrations.
Hello, everyone. I'm here to tell you some of the new ways in which Aadhaar can be used. And I think that's part of the entire Aadhaar 2.0 and reimagining new ways in which Aadhaar can be used. We already know, as CEO Sir said, we have 8 crore Aadhaar authentications every day. But there are still many more opportunities for usage of Aadhaar. How can we expand it to an order of magnitude greater than where it is being used today? And I think that our thought, and as CEO said, as part of Aadhaar 2.0, we are creating this sandbox of new ideas, of new ways of using this digital platform to provide different kinds of services to the citizens of the country. And I want to actually show some examples of how this can be done. And this is really, and this is really to actually rekindle the imagination of how Aadhaar can be used. And when we do this, we have to look at three things. That how can we allow residents to use their own Aadhaar to avail services? And the focus, the principles need to be simplicity. It needs to be simple, extremely easy to use. The focus needs to be privacy, right? Especially that privacy is one of the critical things. And of course, security. And we've figured out some ways in which Aadhaar can be used by a much larger set of people in the country by leveraging three technologies that Aadhaar already has. The first one is offline KYC verification. I don't know, I mean, this is something that Aadhaar had launched about 2 to 3 years ago, and it actually provides a way by which people can verify Aadhaar offline. And now it is something which is being used by some people, but I think the usage we want to simplify the usage of this. The second part is that Aadhaar has announced that we have this new kind of, this new modality of matching called local face matching, which actually happens locally on your device. And of course, we're trying to combine these two with the existing mAadhaar application to actually unlock completely new experiences through which Aadhaar can be used. And that's what I hope to show you in the next half an hour. Coming back to the core principles, right? The first core principle is simplicity. Simplicity is, of course, that we need to have a very different kind of resident user experience for the Aadhaar. That's number one. And the second thing, of course, is that I should be able to use Aadhaar offline. So I don't need to have any connectivity to UIDI or to CIDR to do that. The second part, of course, is privacy. Especially when you're using Aadhaar on a day-to-day basis, you don't really want to actually use the Aadhaar number to actually avail the service. The next point is that we'll establish, you have now the ability to establish proof of presence in Aadhaar through local face matching. And finally, this KYC itself can actually be done in a granular manner so that you can provide granular control of Aadhaar usage by the resident. So therefore, if I want to reveal only my name and photograph, then I can actually reveal only a granular portion of my KYC information. And of course, the consent is the other core part of the entire Aadhaar experience. So it provides a systematic way of locally storing user consent that people. And finally, it's very interesting that when all these pieces come together, you actually come up with something which is equivalent to a two-factor authentication. The credential itself, the offline KYC, is secure because it is digitally signed for authenticity. And also, there are mechanisms by which now this can be shared in an encrypted manner, so it can only be used by the entity who has requested it. So we'll talk about 4 different use cases that are related, that actually come out of these group of, these sets of technologies that we're talking about. So the first method is actually offline KYC through deep linking. And here, what is it that we are trying to do? It allows a resident to share their own offline KYC with any entity app on their own smartphone. And that is the core principle, that you can share your offline KYC on your own smartphone. And who can use this? This is any resident who actually has mAadhaar installed on their phone, as well as the entity application running on the same phone. So therefore, the prerequisite is, of course, that mAadhaar would have been installed and the user profile would have been created. And the user profile can not just be created for the resident themselves, but it may also be for any other family member who may use the same smartphone. So let's look a little deeper as to how this would work. The first step is the resident would initiate the collection of this offline KYC from an entity app. An entity app can be anything. It could be an e-commerce app. It could be a mobility app. It could be an event or travel booking app. And the only thing, the primary thing that the resident needs to provide is they need to provide their name, and they need to see whether this KYC requires a proof of presence or not. There are some other factors there which are all kind of, which certainly can be derived from the entity app, things like encryption and app name and transaction ID and other things. But the core thing is actually your name and your proof of presence. Now, when this happens, automatically through deep linking, what happens is that your control is transferred from the entity app to mAadhaar. And as long as the name matches the profile which is available in mAadhaar, a request for consent to share your KYC shows up. And if once you provide your consent, then what happens is if proof of presence is required, you end up doing a local face matching, which actually says that it is indeed you who is providing this consent. And if proof of presence is not required, as in many applications, you don't need to do that. And then finally, the control gets returned back to the entity app, and the offline KYC is now within the entity. So this is literally as simple as how as how simple this entire process is. So I'll go through a couple of videos which actually show how this thing works. We've actually done a POC of this, and we'll show how this thing works. Can we play the first video, please?
Sharing offline KYC with an entity through deep linking with proof of presence. The resident needs to install the mAadhaar app and the entity application on their own smartphone. Aadhaar offline KYC is initiated by the resident himself using the entity app. The resident enters his or her name and clicks on Proof of Presence. Through deep linking, the control shifts to the mAadhaar app. If the name in the offline KYC request matches an already created profile in mAadhaar, consent of the resident is requested. The consent of the resident is recorded. Since proof of presence is required, a local face match is initiated. The local face match captures the face image, performs a liveness check, and matches the captured face against offline KYC photo. Finally, digitally signed and encrypted offline KYC information is shared with the entity application. Please note that the Aadhaar number of the resident was not required anywhere in the process.
So I think this shows you how simple this could be, right? So now let's take the same thing where you don't even need proof of presence. So certainly in certain cases, KYC using proof of presence may be important. So let's play the second video. It's actually quite similar, but it's simpler.
Sharing offline KYC through deep linking with no proof of presence. The process is initiated by the resident using the entity app, which is requesting Aadhaar offline KYC. The resident enters his or her name and clicks No on proof of presence. Now control shifts to the mAadhaar app through deep linking. The consent of the resident is recorded in mAadhaar app. Then digitally signed and encrypted offline KYC information is shared with the entity application. Please note that the Aadhaar number of the resident was not required anywhere in the process.
So this shows you how simple it could be. And I think this can actually unlock so many different applications where Aadhaar can be used, and you can take the benefit of both offline KYC verification as well as the local face matching capability within Aadhaar. So let's move to a second use case. And the second use case is slightly different. In this case, the entity app is running on another device, which is controlled by an operator. And the mAadhaar app is running on your own smartphone. So of course, the same requirement that the profile needs to be created on mAadhaar. And of course, that's the requirement is there. So then in this case, what happens is the operator collects the name of the resident. Right? The difference here is the program is the process is initiated on the business device, right? Whatever that is, maybe a tablet, maybe a PC, maybe something. And then once you do that, actually the entity application generates a QR code. And this QR code is actually the offline KYC request. So it has everything that's there, which is previously generated through deep linking. In this case, what's happening is you have name and proof of presence are the two key concepts. Beyond that, there are encryption keys and app names, etc. The other thing, of course, is a callback URL as to where actually the offline KYC needs to be shared. That's the only difference in the request that is there in the previous set of cases and the ones that are here. So in this case, what happens? Once that happens, the control will shift to mAadhaar. And if the name matches, the consent will be collected. And after that, the local face match will be triggered if proof of presence is required. And of course, upon successful completion, mAadhaar will use the callback URL to upload the offline KYC. And of course, user consent is again locally shared within the mAadhaar app. And of course, the entity displays the offline KYC. Now the offline KYC has reached the operator's device. And that's the core thing. Authentication, the local face match and the KYC sharing still is happening on your own device, but it gets shared to the other device which is run by. So let's play these videos. The first video is actually with the, where you're sharing it through QR code with face match. Let's play the video, please.
Sharing offline KYC using a QR code with proof of presence. Let's see how Aadhaar offline KYC can be shared on a device controlled by an operator. The process is initiated on the entity app on the operator device where the resident name is entered and proof of presence is selected. The entity app generates and displays a QR code that contains the offline KYC request. Using resident's smartphone mAadhaar app, the resident scans the QR code, consent of the resident is recorded in mAadhaar app. Since proof of presence is required, a local face match is initiated. The local face match captures the face image, performs a liveness check and matches the captured face against offline KYC photo. Finally, digitally signed and encrypted offline KYC information is shared with the entity application through a callback URL specified in the request. Please note that the Aadhaar number of the resident was not required anywhere in the process.
So you get the drift. I mean, the idea is that this can work not only when both the apps are on the same device, it also works when they are on different devices. Let's play the same version without the proof of presence and followed by actually the KYC content history video. Let's play those two in order, please.
Sharing offline KYC using a QR code with no proof of presence. The process is initiated on the entity app on the operator device where the resident name is entered and proof of presence is set to no. The entity app generates and displays a QR code that contains the offline KYC request. Using resident's smartphone mAadhaar app, the resident scans the QR code and consent of the resident is recorded in mAadhaar app. Digitally signed and encrypted offline KYC information is shared with the entity application through a callback URL specified in the request. Please note that the Aadhaar number of the resident was not required anywhere in the process.
Offline KYC consent history. The resident has the ability to review their own offline KYC consent history stored locally on their device. Open the mAadhaar app and click on Consent KYC Share History. The face icon indicates where proof of presence was part of the offline KYC request.
So the important thing is locally the resident is able to keep their own the consent history of all the consent that they have provided. So that's one of the key things because consent being one of the core parts. So changing gears a little bit, we're going to talk about a slightly different use case and though many of the components of that use case are actually quite similar. So one of the things that Aadhaar has many AUAs today, right? And we said that there are over 8 crore authentications that happen today. But we want to actually expand the AUAs, the ability to leverage this local face authentication which Aadhaar is launching. Now, why would this be important? this is critical to expand the reach of Aadhaar authentication. So for example, why would one want to do it? Sometimes it could be an exception process when fingerprint authentication fails. It could also be a situation where lots of places you have a limited number of endpoint or fingerprint devices, and you want to actually do some local face matching even when I don't have an endpoint device. And of course, the third kind of situation could be when the network fails, because it's a purely local authentication. And what is it actually doing when you do local face match? The live image of the resident is matched with the photograph in the AUA signed document, which leverages local face matching. And anyone can actually use it. You really don't need any phone or device. The AUA, of course, needs to have a photograph of yours, which may be through a prior KYC or some other means. And what happens is, of course, there is only one device here, which is the operator's device. And the operator's device basically runs and calls the local face matching. The control is shifted to the local face matching. And based on the result of the local face matching, you can understand the proof of presence of that resident at a given place. Let's play a video. Let's play a video showing what happens here.
Local face match capability for Aadhaar AUAs. This use case is performed completely on the operator's device. The resident does not need any device for this verification. It is assumed the AUA has obtained the resident photo through eKYC in the past or some other means. The entity app has a list of residents who can be verified on this device mapped to an entity ID. The local face match captures the face image, performs a liveness check, and matches the captured face against the AUA signed photograph using UIGAI Face RD app. Resident proof of presence process is completed upon successful local face match.
So think about that. I think this is some way that we can actually significantly expand the usage of Aadhaar, even by existing AUAs in places where maybe they don't have devices, or you can use it as an inclusion thing where fingerprint authentication fails, or even scenarios where network kind of scenarios. So therefore, that's actually a whole new set of ways by which Aadhaar authentication can be expanded. And finally, we'll move to a fourth kind of use case where this same set of technologies is actually used in an access control kind of use case. And the whole point of an access kind of control use case could be secure entry to an airport, to a railway station, to a stadium, to an office, by combining basically three concepts: the offline KYC, which we've talked about before, the event details, right? I'm going to go and watch this cricket match, the event details. And of course, a local face match, which happens on an access control device. And the interesting thing is, who can use it? Any resident having an mAadhaar and a booking app for whatever service, for whatever event that they want to. So what happens here? Two things happen. Firstly, the KYC sharing happens. The KYC sharing is just like what we talked in the first use case. So it's through a deep linking, because both the booking app and the mAadhaar app are on the same device. And then, but once this KYC happens, what the entity app would do in this particular case is they will generate a QR code. And the QR code actually contains a link to the event details, as well as an encrypted version of the shared offline KYC. So that's really the combination. You're linking the event to the person, that this person is attending this event. And then when you come at the access entry point, the thing is that you read this QR code, which is the gate pass to check into this event. But as soon as you do that, you'll be triggering a local face auth. And on success of the local face auth, entry can be granted. So we'll watch this through a set of two videos. The first video is something which happens, which is the registering for the event. This happens not at the location, it happens at your home or happens at some point before the event takes place. And the second part is that what you do when you hit the access control gate and how this works, how this could work with. So can we play the video, please?
Offline KYC for event registration. A resident can use Aadhaar offline KYC to register for an event and generate a QR code based gate pass for secure entry. The resident needs to install the Aadhaar app and the event booking application on their own smartphone. Aadhaar offline KYC is initiated by the resident himself using the event booking app. The resident enters his or her name. Now, control shifts to the Aadhaar app through deep linking. The consent of the resident is recorded in Aadhaar app. Digitally signed and encrypted offline KYC information is shared with the book application. A QR code gate pass is generated by the booking application, which links the offline KYC photo with event details. Access control through local face match. A resident can get secure entry into the cricket stadium using the QR code gate pass generated at the time of event registration. The QR code gate pass on the resident's booking app is scanned and a local face match on the access control device is initiated. Local face match on an access control device is used in this process. The local face match captures the face image, performs a liveness check and matches the captured face against offline KYC photograph. Check-in and entry is allowed if the local face match is successful and event details are validated. Aadhaar-based event registration and secure check-in is achieved without sharing the Aadhaar number of the resident.
So finally, I think these are all ideas that we are working on POC. Actually, but many of these concepts, both offline KYC, Aadhaar, and face match are all things that Aadhaar has had for a while. Aadhaar is going to put out a document outlining this initiative, and there will be a request for comments, and it will be on the UID website. And to comment on this initiative, to get feedback as to what can be changed to make it more useful or any concern that may be there for this initiative, and as also to sign up, a very limited sign up for early access to these capabilities, so that to launch at the time of the launch. We have an email address, and we would request that anybody who wants to be part of these initiatives can communicate with us, both comments as well as ability to be part of this. I really think that these things can change the quantum in which people use Aadhaar in their lives, and it is done in a manner while respecting the three principles, right, of simplicity, privacy, and security. So that's all, and I'm open for some questions. Yeah, can someone help to see? I'm not able to see who has questions. Yeah. Yes.
You're telling a production date of 31st December. When is the pre-prod expected? Is it already there in pre-prod or?
So it is not already there in pre-prod, but I think that we will rapidly bring it to pre-prod, because all the individual components of these are actually kind of there, putting it together and getting out. We will announce a pre-prod date in our document. Yes.
Will this work on specific phones or be capable on all phones?
No, the intent is to make this work on all phones. Yes, but this has nothing to do with specific phones. The intent is to work on all phones. Yes. The one thing specifically, as far as which may be a little later, maybe this local face match on iOS, Android, all Android phones certainly will work, and the other part probably will work on everything. Yes.
Hello. I'm Avni Zingade, and I'm from Tata Capital. So the question is that will the local face match be extended to eKYC authentication?
No, so as face as a modality is something that that UIDAI is kind of at a pilot stage today. So whether that is a separate talk with online authentication being available as face is something which is already in progress, and it is at a pilot stage. And how that will get extended to other AUAs is something that's a process that is going on. This is a parallel track because this is not a online process, right? Because you are actually only matching the credential against the person who are standing in front of there. It is not actually matching the. It is not going back to UIDAI. So this is an offline. That's the key concept of offline being there.
Thank you.
Hi, I just wanted to know, is AU KUA license required to use the M-Aadhaar or offline-based KYC for the entities?
No, yeah. So the point is that it is not required to be an AUA or KUA license for this. Having said that, in the initial process, it will be a controlled rollout. So there will be specific people, so you'll have to sign up with us to actually do this. And after that, we'll see how that goes. But there is not a requirement of a AUA, KUA license for this offline requirements. Now, the use case 3 was specifically for AUAs, if you noted that.
So, sir, Apoor Prasad from HDFC Bank. This yes. Side. Yeah. So you mentioned that the consent will be locally recorded in the M-Aadhaar app.
Yes.
What happens if I move to a new phone, uninstall the app? Will the consent be there or it will be erased?
No, it will be. In the end, the consent is local, right? So therefore, if you're talking about your own thing, you are controlling the consent. Now, of course, because the person has done it from their M-Aadhaar and the person has done using proof of presence, if you are the entity, of course, the response that comes from there could be treated as the consent as far as you are concerned if you are a business, right? But as far as the resident is concerned, it is local. It is important that we don't want to record that, right? So that is controlled, that is owned by the owner itself. But if you have a good suggestion on that, we are willing to hear.
Hi, sir. Prabhu here. Your left side.
Yes.
Yeah. So do we have any plan on future phone users? So how they can use for offline verification?
So explicitly, this thing is not a feature phone based thing. So therefore, this particular use case is very much smartphone focused, except for use case 3, which does not require any phone at all as far as the resident is concerned. One of the things that feature phone users, if there are family members where certain people have the smartphone, other people have the feature phones, you could use it. And as you know, in M-Aadhaar, up to 5 profiles can actually be stored on those. And so this kind of thing could be used using that scheme by people who don't have a smartphone. But to use, especially the use cases 1, the first, the second, and the fourth use case, you do need a smartphone. Having said that, Aadhaar knows very well that we do want to expand and come up with use cases that can be done in feature phones. So we look forward to comments about how such a thing could be useful or how such a variation on such a thing could be made to work on a feature phone.
Sure, sir. Thank you.
Hi, sir. Sir, yeah, straight. Devesh here. So since this is authentication is happening by UIDAI, is there a possibility where the face match which is happening, the liveness thing, will be considered as a verification part and can be considered as a full KYC? Is there any talks going on with the regulator, RBI, on this? So I don't think that I can answer that question right now as far as what is happening here is just an offline KYC verification. It is certainly a proof of presence that Aadhaar is saying that this person is actually present here. Whether that's certainly part of the, that's what is happening as far as this is concerned. What other agencies are using or other things, these are discussions which need to happen. It's still an early stage. I think we want to put the concept out. We want to see whether people think that this is something useful. I mean, let me ask a question. The things that we talked about today, can I get a show of hands to see, is this something that will move Aadhaar usage forward? I mean, yeah. So I see a very large number of hands. So that's really good to hear. And so therefore, we will work with people. We will do the consultations, and we will kind of figure out how to make it work. It's a good question we raise, and we will clarify that point.
Sure. Thank you, sir.
Hello, sir.
Yes.
As mentioned that the local face match would work in. So I would know that in case the biometric fails, what would be the chances of success for local face match in such situations?
So, I mean, let me answer at the risk of boring some people. Let me answer the question a little technically. One of the interesting kind of demographics where fingerprint failures are a little bit higher are actually people who are older, right? As more senior citizens, as you move to, above, 60, 70, and things like that. It's very interesting that face authentication is a contraindicator, actually works exceptionally well in that demographic. So therefore, I think it is, in the end, we think that there is not a strong correlation between having poor fingerprints and your face dramatically changing. So therefore, we believe that this is actually going to be extremely, the chances are extremely high, but I will let the, let's see. We are rolling it out, and we'll find out what we learn.
Thank you, sir.
Yes, please.
So would want to applaud Aadhaar for the beautiful initiatives that it's taking. Two questions I have. First is, would we be able to operate in the areas where network is very weak? Because we operate in some of the very rural parts of the country. So what would be the network requirement for these features to operate?
Yeah, so in reality, because when you're talking about deep linking between two apps, now the question is, the app itself may be forcing some connectivity that I can't control. But the deep linking process itself does not require any connectivity, right? And the face auth is also completely local, so it is not something that needs anything else other than any connectivity in that sense. But having said that, most things when the connectivity is really bad, things that you think work really well, may not work. So you may have to design carefully. And we may also have certain blind spots where we thought that maybe connectivity was not needed, but it's really needed. But having said that, nothing in the principle of this requires connectivity.
Second, sir, my question was on the fourth use case that you used,
yes,
where the Aadhaar can be used as a instrument to get entry into a movie ticket or a stadium. So there, I, as an Aadhaar holder, would I be able to control the information that should be shared with that app? Because I would not be comfortable sharing my address with the Book My Shows or any other apps.
Yeah. In fact, the minimum information for most of those kinds of things, the only information that we recommend showing is actually the name and the photograph. That's all. Nothing else other than that is needed, because obviously the photograph is needed because that is what is required for the local face match. The name is the entity by which you are defining as the person who is seeking entry into the event.
So, thank you, sir.
So, for those who are staying at a rental place, Aadhaar is, to put address entries in the rental, it is a very cumbersome process because you have to visit the collector, you have to take the owner's permission, and then, there is a possibility they are taking money, and then you register it at Aadhaar. So can you simplify the process where people do not have permanent address?
So yeah, I think as part of, let me just answer it, that today's solutions are not solving that problem. But having said that, this is certainly improving. This capability is certainly part of the Aadhaar 2.0 sandbox. And hopefully in the next few months, we will be coming up with some clever ways to do this, which simplifies this and makes it much more digital.
Hello.
Yes.
Yeah, I just wanted to understand when the offline eKYC is being shared, as the gentleman already asked a question that the entire information should not be shared, where I
Yes.
may not be able to or would not like to share my date of birth or full address. But is it possible that when you send the request, that time itself, customer can decide what information I want to share as a part of this offline
Yeah.
thing? Or even the entity can say that I want this much information, and then based on that, the customer can decide whether I should give a consent, so that the control is still with the resident about what should be shared, what should not be shared, and the entity can also decide whether they really need the entire data or a part of data.
Yeah, so indeed what you're saying, it's the second method is the method that we are talking about. The entity will say that I need XYZ information. Now the consent comes to you, right? Supposing if somebody is saying for entrance to a stadium, I need your date of birth or I need your address, you may choose not to give the consent, right? And so therefore, and there will be typical reasonable consents that are there. So in the end, it is in the hand. That is why we are saying granular consent capability will be there with the resident. And that is the intent, that clearly for certain kinds of applications, you don't need to share all your KYC information, and you should share only the minimal amount required to achieve that process.
Good evening, sir. This is Karthikeyan. Is there any plan or methodology adopted by UIDAI for setting the offline KYC when there is no concern from the customers, citizens?
No, UIDAI as a fundamentally, we will not share the consent without the consent of the citizen. I think that is, I don't think we have any such plan, and so therefore that is not something that I think that we will consider.
Sir, this is for India. What are we doing for Bharat, the segment beyond self-service for which Aadhaar is made? The AEPS-enabled mass market, where the gentleman just spoke about. So how does the self-service conducive segment, and beyond that, the marginalized, subsidized segment use this?
Yeah, no. So I think that at one level you are right, but I would say that use case 3, when you look at it very specifically, it is actually the main use is to do 2 things. One is to ensure that you can do Aadhaar verification at various places where you could not do it before because the device was not there or because where the network was not there, and you do it for people for whom authentication was failing. That is also something which is there. So therefore, in the end, when we are talking about Aadhaar being used at a larger scale, it is our AUAs and it is through the various schemes that we are using Aadhaar that we will reach out to those kinds of people. But the 2 differences is that the scale, the number of people who can be reached out is increased even in that area. Having said that, if someone has really good ideas of how to expand Aadhaar usage to Bharat, right? I think this is one of the core goals why we are here in UIDAI. So we will be most welcome to hear any suggestions.
Ladies and gentlemen, in the interest of time, we'll take the last question. Yes, ma'am.
Yeah, good evening, sir. Just wanted to check if you see a use case for marrying the e-rupee initiative that has been launched with the particular use case that you just presented, in order to make sure that the benefits are getting transferred to the right people. And I feel that if we are able to solve for the feature phone journey of Aadhaar authentication, the way you have just described it, I feel it would be fairly powerful.
So thank you, ma'am, for your comments. I don't think we have thought seriously about some of these things, but we will. I think both good points that you have raised. Okay. Okay. Thank you.
Thank you very much, sir.
Sir. Excuse me?
I'm so sorry, we are completely run out of time.
One last. Sir,
okay.
I'm Major Karthik.
Okay. Yeah.
This is regarding the consent revoking. For example, akin to where we have in Android apps, we remove the permissions, even though we grant access while installing. Is there anything akin to that in offline authentication?
So the purpose of consent is for a single sharing, right?
Okay.
So once you share the data, I mean, the data has been shared, right?
Okay.
So revoking the consent, because and it is for a particular app, for a particular reason,
Yes.
you have shared it.
Yes,
So
sir.
now the data has already gone there. If I revoke the consent, I can't delete it from the place where it's gone, right? So, but let's think about it. If you have interesting ideas, I'm open to hearing all those kinds of things as well.
Thank you, sir.
Dr. Vivek, I must thank you for your patience and for answering all those questions there. And thank you indeed, dear audience members, for your valuable questions. Can we have a huge round of applause one more time? I'm sure this workshop was absolutely informative, and I think the next time we'll do the registrations, we might as well use Aadhaar to make it super seamless for all of our members of the audience. Thank you once again for joining us this evening.
So that would be great. Thank you.
Absolutely, sir. Well, on that note, it gets even more interesting. You know, we gather insights from our speakers, and then we gather even more from all our members of the audience, thanks to your questions. Well, that being said, as we call it a wrap to this set of this segment of about the sessions wherein we had our speakers, let me inform you that the next session that will take place is directly at 6:30 p.m. At 6:30 p.m., we'll be having none other than Mr. Devendra Fadnavis joining us, and we'll have a conversation steered by Mr. Kunal Shah. So that'll take place exactly at 6:30 p.m. over here. That being said, once again, I'd like to remind all our members of the audience, please do wear your badges at all the times, and this is strictly for the security purpose. And in the meantime, in case if you'd like to take a little break, I'd like to also request you to explore the expo area, take a look at the latest initiatives put up by our partner booths. But please do come back and please grab your seats at least by 6:25, because 6:30 p.m. we have another very, very important conversation coming your way. So please do take care of your belongings and please do wear your badges. See you all at 6:30 p.m. Thank you. Ladies and gentlemen, we request everyone to please take your seats. We're about to get started with our next session shortly. So we once again request each and every one of you to please take your seats, and a quick request to please wear your badges as well. Thank you. I'd like to once again welcome back all the members of the audience, all the delegates here. And I'd like to also inform you that the next session, a session that we're all eagerly looking forward to, it's about to begin in just a couple of minutes. So if I could also request all the ones who are standing inside the hall, if I could please request you to take your seats. Thank you. So yes, ladies and gentlemen, within the next couple of minutes, we'll be indulging in a very, very important discussion around leveraging technology to create impact and propel Maharashtra towards digital economy. So we'll be having the presence of the Honorable Deputy Chief Minister of Maharashtra, Shri Devendra Fadnavis, who will be joining us in the next couple of minutes to be a part of the session and to share across some very important key points and for all of us to absorb. So I'm going to once again request everyone to please very quickly be seated.
मेरे प्यारे देशवासियों, this is an event of finance and technology. The Fintech Festival is also a celebration of belief. Belief in the spirit of innovation and the power of imagination.
Fintech, UPI, यानी यूनिफाइड पेमेंट इंटरफेस, वर्ल्ड बैंक समेत सबने ये उत्तम से उत्तम प्लेटफॉर्म के रूप में उसकी सराहना की है.
Fintech industry in India is innovating to enhance access to finance and the formal credit system to every person in the country.
और मैं कहता हूं ये फिनटेक का जो प्रयास हुआ ये सही मायने में बाय द पीपल, ऑफ द पीपल, फॉर द पीपल इसका उत्तम से उत्तम समाधान.
India has proved to the world that it is second to none when it comes to adopting technology or innovating around it.
आज भारत गर्व से कह सकता है कि हिंदुस्तान दुनिया को दिशा दे रहा है.
Now it is time to convert this fintech initiative into fintech revolution. A revolution that helps to achieve financial empowerment of every single citizen of the country.
4, 3, 2, 1.
Ladies and gentlemen, please join me in welcoming Shri Devendra Fadnavis, Honorable Deputy Chief Minister of Maharashtra, to the Global Fintech Fest 2022. presence of Shri Devendra Fadnavis. Thank you very much, sir, for joining us, and may we kindly request you to please come on stage. And ladies and gentlemen, please also put your hands together to welcome Mr. Kunal Shah, founder, CRED.
It's probably the most attended session. As I can see, there are people standing over there, sir. I'll start with a question, sir. You've talked about Maharashtra as a state aiming for $1 trillion economy. What role do you see tech and fintech playing in it? And do you have a vision for a lot of young founders that they can be building for? Maybe you could give them some unicorn ideas.
I'm not Kunal to give unicorn ideas, but I think technology has to play a very major role in $1 trillion economy. Because, you see, the fate of $1 trillion economy would depend on speed of mobility and speed of data. And for speed of mobility, we are creating a grid of 5,000 kilometers of access ways. But at the same time, the speed of data will determine how we perform in our business. And basically, you see, technology has an advantage. Technology doesn't recognize a person. It treats Mr. Mukesh Ambani or Mr. Kunal or Devendra at a same footage. So with technology, you can actually achieve more efficiency, more transparency, and I think the entire future of this $1 trillion economy is dependent on technology. So we have identified certain areas where we would like to invest and attract investment, but all those areas are linked with technology. So I think technology has biggest role to play. And see, we all talk about startups, and startup is like, you know, giving simple solution to a complex problem. And that's what we want to do to achieve this $1 trillion economy. So I think technology, and especially when we are sitting in Mumbai, which is a fintech capital. I mean, people may not recognize, but this is a fintech capital, this is a startup capital. So we are in Mumbai. So I think fintech is something which will drive our economy in days to come, and it will contribute a lot in our growth. So I think technology has a huge role to play.
Thank you, sir. If I have to talk about startups, you talked about that Maharashtra has been doing really well to attract startups and growing. Would love to get your views on how do you think that is growing, your vision for it, in generally attracting talent, and also what's your vision for the state, for what kind of startup would you like to see?
No, basically, first of all, I must tell you that Maharashtra is a fintech capital. Why I want to tell you this? Because, you know, there are different brands which are recognized as startup capitals, but if you look at the absolute numbers, then if we have some 80,000 odd startups which are recognized by the government, and around 100 unicorns, then out of that 15,000 startups exist in Maharashtra, and 25 unicorns are there in Maharashtra. So we contribute the largest number into startups and unicorn. So we are the startup capital. Having said that, I think the government actually looks at startup as part of our governing business as well. So in the past, we organized a few hackathons, and actually we gave some complex problems which we face in our governance. And the young minds, the tech minds have come up with such a beautiful solutions for those problems. And I think that has made our administration a bit easy, and that has made us reach people very easily. So I think out of that experience, we are actually trying to create an ecosystem for the startups. We actually have an ecosystem, but we are trying to democratize that ecosystem so that more and more startups are there. They register themselves and they actually start doing the work.
This is perfect. Sir, I'm a Mumbaikar. I've spent 38, 39 years of my life before I moved to Bangalore. And people like us would love to come back. I'm curious to know your view on infrastructure. Not that I live in a city which the infrastructure is great, so I'm not going to take that. The question is, sir, in the 5 years from now, what can a lot of companies who are building their future setups over here can expect in infrastructure? All of us see, I don't recognize this Mumbai anymore. I see everywhere a lot of development. But sir, what do you see will happen in 5 years' time? If you can just give us a glimpse of that.
Yeah, absolutely. I mean, from the point of view of infrastructure, Mumbai is absolutely changing. While I was chief minister, actually we started investing in the infrastructure of MMR region. And in just 5 years' time, we have actually invested around 3 lakh crores into building infrastructure in Mumbai. So, as I have already said, that the speed of mobility that we are increasing, we are actually creating around 300 kilometers of metro network in Mumbai, which has already started and will start delivering from the next year. And the coastal road will change absolutely, the way traffic used to move in Mumbai. So right now from Nariman Point to Worli, from Worli to Bandra, there is also already existing way. From Bandra to Warsaw, again, a coastal road is being built. And from Warsaw to Virar, we will be building one more road. So this entire outer road will change the fate of mobility. And as I've already said, that today in our suburban railway, our carrying capacity is 9 million. And in the metro, we are creating a carrying capacity of 8 million. So we are actually doubling the carrying capacity. So the public transport in Mumbai will be, very easily accessible. And we are bringing the entire public transport on a single platform. So that's also, a chance for a startup to provide us a very good platform, very easily accessible platform, because we feel that in Mumbai, from anywhere to anywhere, one should reach within 1 hour, and everybody should get access to some kind of good public transport within 500 meters. That is the plan, and that we have already started. Secondly, Mumbai has a typical problem at that it's a landlocked city. So many times, especially people into IT, people into Fintech, they always complain that we have to pay higher rents in Mumbai, so it's not affordable. But now with the Trans-Harbour Link, it's India's biggest bridge, longest bridge ever built. It's a 22-kilometer sea bridge by which the hinterland will be connected with the main city. So just imagine that from Nariman Point to the new Mumbai, you will reach in 25 minutes or 30 minutes. So this will change the entire, entire ecosystem, because entire hinterland will be connected, and we are actually developing a new city. You can say that it's a third Mumbai. The Naina area which is near the New Mumbai airport, which we have already started work, and most probably by July 2024, this new airport will also be working. So this entire area, we are creating a absolutely new Mumbai that will provide affordable housing, they will provide affordable working place, and with this connectivity, the heart of Mumbai, whether it is Bandra, whether it is Worli, whether it is South Mumbai, that connectivity will be 30 minutes, 35 minutes. So I think that will actually open up entire new ecosystem for fintech and startups and all type of businesses.
This is amazing. As a Mumbaiker, I feel very excited about this. I think our expectations are increasing, and a lot of these developments are going to only create more and more progress. Really happy for it. Sir, there are a lot of, Maharashtra was the first state to have a formal fintech policy. And there are many programs like Mitra and others that you have launched. I would love for you to give some details about vision on fintech and also talk about any new policies that you've launched or programs that you've launched.
No, actually, you are absolutely right. In 2018, we launched our fintech policy, and we were the first state to launch our fintech policy. And it has been very successful. In that fintech policy, we started smart centers. We actually, started a fintech registry. We started industry API sandbox. So all the things which a fintech would need. We also initiated a fund of 200 crores for fintechs to access, and that has resulted into around more than 500 fintech company accessing and going through our arrangement, and there have been investment of nearly 1,000 crores and indirectly around 9,000 crores into those fintechs. So I think this fintech policy which we did, we created co-working spaces. The entire ecosystem was created so that, all the fintechs are benefited. Right now, the policy is widely accepted by the fintech industry, and I would like to have your suggestions. If you would like to suggest us, we are absolutely eager to, amend it, to change it, to make it more suitable, to attract more and more fintechs.
Oh, this is amazing. Thank you so much. Sir, I'm going to switch gears and move on to Mr. Fadnavis for a second. And it may be some unusual questions, so bear with me on that. You were the youngest corporator at the age of 22. You probably were one of the youngest chief ministers at the age 44. And you've had probably more success at a very young age, and most founders over here aspire to have very successful life. Would love to get your mantras, mental frameworks for a lot of young, ambitious people on what they can learn from Mr. Fadnavis. You may have taken a political journey, but you are no different than a founder. But I would love to get that perspective.
In fact, I would like to, know your success mantra and the success mantra of many people who are sitting here. And I really get inspired when I see such young minds doing such wonderful jobs. I mean, when we were kids, we used to, know about Tata and Birla, then it became Ambani and Adani. But today, with all these disruptions, anybody can be Tata, Birla, anybody can be, Ambani and Adani. And when I see, young people at the age of 25 doing such commendable, jobs, creating so much of wealth, so I get inspired. But if you ask me, my journey has been really very fast and comparative. I mean, if you compare it with the people, other people who are into politics, then yes, I did everything at a very young age. But I think that's because of a lot of focus, and I have a ability to fit into any role. So if I am chief minister, I am fit in that role. I will do everything to become the best chief minister. If I am leader of opposition, then it's a nightmare for a government. I absolutely ensure that I am the best leader of opposition. Now, after these two roles, I have come into a role of deputy chief minister. So whatever it takes, that I will give all my efforts, and my entire focus will be now on, giving justice to this role.
This is amazing, sir, and super inspiring. One more question. Just like everybody over here, you also have 24 hours a day, and you are switching between multiple contexts. You are once in a cabinet meeting to coming to a fintech festival to speak, to attending an urgent matter, or reviewing a budget of some big project. How do you manage time? How do you do this context switching? How do you can keep your focus alive? I'm asking these questions because this is the standard struggle of everybody. And we have maybe 1/10 or 1/100th of the scariness of decisions to make, because most of the decisions you make are irreversible in some ways and have long-term impact to some of these things. How are you staying focused? What's your method of doing that?
So actually, when you are in public life, the biggest problem is that the number of people you have to meet every day is absolutely, I mean...
How many people you meet every day?
So today there was a cabinet meeting, and after cabinet I was sitting in my office, and there were at least 200-300 people in my office, 200-300 people outside. There was not a inch of space to even stand. And then for 3 hours I was actually meeting people, and then I started the other business. So it's a routine normally. But I remember that when I became chief minister, one of the civil servants, he met me and he said, "Sir, I want to give you one suggestion." I said, "What?" He said, "See, you are a chief minister, and in our country, the time of politicians or time of chief minister is not theirs. It's of people. People steal every second from you. So in the morning, you have to decide that what is your agenda, and you have to, take out time to finish that agenda. Otherwise, your entire agenda will change, your entire focus will change, and people will go on meeting you, you will go on doing their work, but the real work for which you are holding the office, you will never be able to do." And actually that became a very magical word for me. And I started doing that. I still do that. So every day I decide what I want to do today. And come what may, I do it on that day. I meet, even if I meet 1,000 people, and if it takes me to work for 18 hours, I'm ready to do that. But I finish my agenda.
That's amazing. That's a big lesson. I'm going to copy this format for sure, because you're right. Your time just disappears, and at the end of the day, you not move much. Being in your role and in a fast-changing environment, right? Like 10, 15 years ago, internet did not exist, and fintech, UPI did not exist, and a lot of these things. What is your process to keep up with technology changes? Do you have special people who are telling you all this stuff, or you pay attention to things, you meet people? How do you do that?
It happens to everything. I mean, I have my aides who actually, keep me running with the time. So what is happening in the tech world, what is new in the tech world. And secondly, being in the government, actually we have to use the technology. We must know the new technology. And for every technology, we have to actually either create ecosystem, or we have to create some regulations. Fortunately, we create less regulations for tech world, but otherwise also we have to create some regulations. So that is also one thing. But one more thing, that I always like to, interact with young people, because while I was chief minister, I started CM fellowships. So we used to a very transparent process. Through a very transparent process, we used to actually have CM fellows. And these were very bright minds, young minds. They used to come and they used to work for 11 months with us. And it became so successful. So interacting with them, it used to give us, absolutely a different vision. Because, they were hands-on with technology and they had very fresh ideas. And I always used to say, used to tell my IS colleagues that, look, we do the same things. So we reach a stage where we feel that we know everything. But that's not the case. These young people know more than what we know. And ultimately, initially there was quite a resistance because these were the accomplished officers and they said, ye kal ka ladka mujhe kya batayega? But then they also started understanding that these people have a different vision. They know technology more than we know. And ultimately they gelled with us 5 years. So many CM fellows came and bright minds. I must salute them. Many of them were so settled. They were absolutely graduates from good business schools with earning a lot of money, and they gave up their jobs and they came and joined us. Few of the initiatives which they started, just to quote one of the initiatives about farm ponds. So they created a tool to monitor the farm ponds, and that tool got Prime Minister's Innovation Award. So I think interacting with these bright minds, that also keeps up in pace with the technology.
This is amazing. At Cred, sir, the average age now with the team is around 26. I'm skewing the average a lot for the team, but I try to keep it down. The interesting trend, sir, every house has a chief technology officer now between the age group of 10 and 18. And they basically very quickly are becoming the chief procurement officer of the household as well. So it's good that you're calling it out for many of you who are young, and when you have bosses who are above, let me tell you the type of people who use the phone with one hand. That's the type you should be telling that they should be telling you to give more decision time. But sir, on that note, I'm going to switch back to the big agenda. 10 years from now, sir, the government is working on many, many big initiatives, and there are some projects that you can talk about, not talk about, but how to see India 10 years out? I'm sure you think about this from not just a lens of Maharashtra, but the whole country is changing. And I have been in Fintech for 13, 14 years. I really wanted to spend time at all the stalls because I feel irrelevance every 3 years, sir. So how do you see 10 years from now? If you have to paint a vision for us, how to see India in 10 years?
So I would tell you two things. One is this Prime Minister's Gati Shakti scheme. It is amazing thing. That will change the way we used to deal the government business. Because, every time we used to complain, कि भाई कल रास्ता बनाया, आज MSCB वालों ने आके तोड़ दिया, कल फिर वापस हमने एस्फाल्ट किया, तो टेलीकॉम वाले आकर तोड़ कर गए. This Gati Shakti, it absolutely, creates a synergy between all the government departments, and it looks at the future. So once you create it, it's futuristic and it takes care of every department. So such synergies have never been there in our governance. Secondly, a few days back, while I was Chief Minister, I was called to Lal Bahadur Shastri Academy to give a lecture before young budding IAS officers. So I told them that your role is going to change, and that's what I feel that most of our IAS officers, they aspire to become collectors, and collectors are basically they are revenue collectors. The entire revenue system is there. Now we have already started, and probably in next 2-3 years, the entire revenue department will be a blockchain. Amazing. And once it becomes a blockchain, there is no role for a collector. There is no role for a revenue officer. Because, you know, what you really do as a collector or down the line, all the revenue officers, you look at the land records, you change the land records, you change the title, you give the title. And when there is a problem, for rest of your time, you do the hearing that Kunal's title is given to Devendra Fadnavis comes to you, then there is an appeal, then for 2 years you hear that. Nothing will happen because entirely it will be a blockchain. So I think in future, this entire role of governance is going to change. Now in Maharashtra, we have already, while I was at Davos, we we entered into a MOU with World Economic Forum. And with World Economic Forum, we started one initiative which was actually inaugurated by Honorable Prime Minister Modi ji, where we are now trying to use drones into agriculture. See, today, sustainability is the biggest problem in agriculture. But this drone technology is so amazing that from sowing to flowering to the entire harvesting, it can capture every activity with precision. And you know, it can absolutely with precision tell you if there will be any pest on your crop, and if there is a possibility of pest attack on the crop, then with precision, it can spray the pesticide. Amazing. So this will absolutely, today, for such events, every year our government is paying 2,000, 3,000 crores as a compensation to the farmers. Oh, wow. But with this technology, things will absolutely change. So we have right now tried it in 6 districts. It has been largely successful. We still have some challenges. But, these things will be totally changing. And our Prime Minister's thirst is on drones now, because that is, actually future. So even delivering medicines into remote areas, there are still areas which are cut off, which are far off. So in the COVID times, we tried and deliver the COVID vaccines through drones. So all these things are going to change, the way we look at our country. And it's not far. I mean, such things used to change in 20 years, 30 years. No, in 2 years, 3 years, 4 years. Every coming year will change the way we, as a government, we used to do business, and that will change the face of country.
Fascinating. I have a question for the audience. How many of you are in a company where it's very hard to hire good engineers for your company? Please raise your hand. Okay, good 20-30% over here. Sir, what's the plan to create high quality engineering talent for the state? It's a big problem. Most of our projects are missed at CRED because we just can't hire fast enough of high quality. And we have been told by our team members that we should open up office in Eastern Europe because we are finding cheaper talent at better technology skills, which is unusual because India is such a large country. But I would love to get your remarks on that.
I think you are absolutely right. I mean, not today, but maybe 10 years back, there was a survey done by NASSCOM, and the result was that out of 100 qualified engineers, only 25 were employable, 25% were employable. Now the things are improving, but I think there are two things. One is, for years together, there has been absolute disconnect of our industry and academia, and that is very important. So with the new education policy, I think now there will be no more a disconnect with of industry and academia, and mostly the new education policy aspires that the businesses or the industry should be the academic area. It should be the campus. And the campuses should be the industrial area, or it should conduct the business. I remember that while I was chief minister, we, for the first time, had a artificial intelligence center, Vadvani Artificial Intelligence Center, opened up in this Kalina campus of Mumbai University. And it was first collaboration at that scale between industry and academia. And it's running well. In fact, it's contributing a lot into artificial intelligence. So basically, now with this new education policy, this disconnect will go. And secondly, now we expanded our technical education a lot in last 20 years. But while expanding, we lost the quality aspect of the education. But with the national accreditation system, and with lot of effort now by the government, now that quality is coming back. Secondly, the biggest problem was that as a government, our regulations did not permit our universities or our autonomous institutions to collaborate with the foreign universities or good tech universities, good tech autonomous colleges abroad. But now it is very easy. With new education policy, there is no bar at all. So I think this will actually infuse absolute new life into the tech minds and in creating technical human resource. So hopefully, down the line, after 2 years, if we sit here, this problem will be reduced by 50%.
That's great, sir. Sir, you've been very generous with your time. I'm going to ask you one final question. You have the brightest minds of fintech in front of you. What do you have as a wish for them to do, and what can they do? We are all super proud to be in India and Indians, and very proud of all our progress, and we are only getting hungrier and more ambitious. What would you tell them, sir?
See, there can be many things, which I would like to have them do. But one thing which they can assist me and this entire country is our system of crop insurance. Right now the system is that whenever there are, torrential rains or some type of disruption, then we do the field surveys. Those field surveys are collated. Then we do the assessment. Then that assessment goes to the insurance company. Then insurance company again collates it with its data. And then the money is sent to the banks, and then banks, give the money to the farmers. So maybe we can create a tool where, using drones, this entire data could be captured, it could be processed, and through banks, this entire money can directly go into the accounts of the farmers. And I think that will, because every year, if you look at just Maharashtra, in Maharashtra, this crop insurance business is worth 5,000-6,000 crores every year, and in the entire country, it must be around 40,000-50,000 crores. So, if we can bring objectivity, if we can bring transparency, if we can bring efficiency, then lot of trauma can be brought down. So maybe the minds can work on this issue.
That's one unicorn idea for you guys. Mr. Fadnavis, thank you so much for your time. You've been very generous. As you can see, people who are waiting for your session. Really appreciate you coming over here, and hopefully this event will keep getting bigger. I have to remind you, it was earlier with your initiative, it was supposed to be called India Fintech Festival, which was evolved into this global fintech festival, and hopefully we will control fintech for the whole world, and many of our innovations will be copied by everybody here in the world. Thank you so much.
Thank you. It was a pleasure to be with you.
Thank you very much. Thank you very much, Sri Devendra Fadnavis ji, for joining us here at the Global Fintech Fest 2022. We indeed managed to gather some visionary thoughts from the man of vision himself. And we'd also like to thank Kunal Shah for spearheading this informative session for all of us. With that, ladies and gentlemen, as we call it a wrap, we'd like to also inform all of you that we're going to request all our members of the audience to kindly proceed to the pre-function area. And because this is where we will be restructuring the hall, so I'm going to request you all to please also take your belongings along with you as we call it a wrap to the first segment of the day 2 of the fest. I'm going to once again request everyone, all our members of the audience, to kindly please proceed to the pre-function area. Thank you very much for joining us also for the day 2 of the fest. But I also request you to please take your belongings along with you as we will now be restructuring the hall for our further sessions. I'd like to once again request all our members of the audience to kindly proceed to the pre-function area, and we also request you to please take your belongings along with you. Thank you so much.
डिस्कनेक्ट कर दूं क्या? अब समझ रहे हो? ये नहीं, ये कनेक्शन आता है तो ये हटा सकते हो।
All right, ladies and gentlemen, this is going to be a really quick request and a humble one. I'd like to request all of you to kindly proceed to the pre-function area. Most importantly, don't forget to take your belongings along with you. There's going to be a major makeover inside the hall, and we don't want you to miss out on your handbags or, for that matter, your brochures. So I'm going to request all of you to very quickly proceed to the pre-function area, and please do take your belongings along with you. Thank you so much.